Hello everyone, this is Ravi Taori. Guys, for CFI Audit in simple English, yes, especially for South students, we have prepared two special things for revision. Number one, we have prepared around 16 hours of 250 plus important questions. It will be in two parts. And next is we have prepared important concepts from our FADU chart book. From the whole chart book, it will be around 12 hours, one video. Links are given in the description. You can get soft copy of the 250 plus important question, 350 plus important questions. You can see our marked copies also, marked PDF for the Param question bank and other resources. Everything is given in description. Make full use of these two things. Do these two things first properly, and then you can enhance your preparation by adding more questions to it if time permits. Okay. On the last day of 250 plus important question, I was not well, but still I have managed to take the session. Cover both the things. If you cover both the things, important questions and FADU chart book revision, if you do both the things, you will be doing extremely well. Hi guys, so what's the plan? Plan is very simple. We have made two things for this attempt, May 23, and then it's useful for November 23 also, and maybe later. We are taking two types of sessions. Number one, that is 250 important questions. So 3 days we are going to have this session, 250 plus important questions. I think we'll be covering almost all of them, 250 plus questions. And then in Chennai, I'm taking 2-day FADU revision also, taking all the tricky concepts. Okay. And if everything goes well, we'll provide recording of that session as well to you. So the combination is very good. In that session, you cover all the tricky concepts. And in this session, you cover all the important questions. If you do these two things together, they are going to be very effective, useful for the exam. I think minimum 50% of the questions will be from these two. Okay. And regarding this session, stay positive, stay cool, calm. So there are two ways of looking at things. Number one, so whenever you see a particular question, correct, someone will say, okay, I know this. And someone will say, okay, great, I revised it. So there's a change in the attitude. And then next, someone will think, oh, I don't know this question, I don't know that question, I don't know how many questions I don't know. Correct? And they will get worried and tensed. On the other hand, you will get very cheerful people, happy. Okay, good. 5 marks, 5 marks, 5 marks. By the day end, I have covered 500 marks. So that attitude is required. You're supposed to stay positive, and our target will be to use each and every moment positively, to learn new things, better things, so that we perform good in the exams. It may happen that I may speak in Hindi in between. Naturally, it may happen, correct? Because I'm used to taking classes, more classes in Hindi and English mix. Okay, guys, you are going to need two things. You are going to need 250 important questions and then FADU chart book in this particular session. If anyone is not having FADU chart book, they can take it from Maninder. He will provide it to you. Okay, that's I think available 250 rupees. It's available at cost. And when it comes to important questions, we have already shared list of important questions PDF on Audit Guru Telegram channel. On Audit Guru Telegram channel, you can take it from there also. And if you are having your own material, your own question bank, it's absolutely fine. You can use that also. No issues. Okay. Let's guys. Now, how we have made this important list? Last time around 55 marks of the questions were from this particular list. How we made it? We have a database of 5,000 questions. So we simply applied pivot table and we got questions with highest number of repetitions. High number of repetitions. Then we made that list. So questions which are repeated most of the times. And then what we did, we added all the questions of study material. Then we have added all the questions which were asked in past 4 MTPs and RTPs. And then what we did, we deleted those questions which are asked in recent exams. And that's how we got this important list. In fact, right now there are 2 important lists. One is 250 plus important questions and the next is 350 plus important questions. What is the difference? 250 plus is something which we can cover in these sessions. And I think as a student, you target that first. CA is always incremental studies. First we take few things under control and then if time permits, we add few more. Okay. So start with 250 and if time permits, you can add more questions from 350 plus list. Okay, so let's see the first question, guys. Stay positive, be energetic, keep doing a lot of markings, try to extract maximum. So let me tell you about the question bank. This is a question number and this question number remains same edition to edition. It doesn't change. It is going to remain same. So that's a plus point. Even if you are having earlier edition, that is absolutely fine. Question number always remains same. And then we have CNO, Bhaskar CNO. CNO means concept number. So this particular question is for this particular concept number. That is how we associate things. That will be further useful. I will tell you how. Then we have the heading on what particular concept this question is. And then we give reference also in old course where it was asked, in new course where it was asked. Like here, it was asked in May 22 mock. That's how you read it. First letter indicates month and then year and it's MTP, RTP or exam. If you will see SM, then that is study material. Let's see, guys, and we'll be providing this particular PDF also where all the marking is done. So the first question, it's very simple. We all know that. So they have all the story. And the most important thing is in last 2 lines, what they have asked. So that's extremely important that you should target those last 2 lines a lot. So what they're asking, this is a warm-up question. But then because it is asked in May 22 mock, we should not ignore it. The question is, what do you mean by reasonable? What does reasonable assurance mean? Which standard auditing require that there should be reasonable assurance? And is it possible to give absolute assurance? Quickly, what is the answer you think you will be giving? Yes. What answer? So they are asking, what do you mean by reasonable assurance? Which standard talks about reasonable assurance? And why can't we give absolute assurances? Correct. SA 200, perfect. So it's very simple, straightforward. First, you need to give reference of SA 200, and SA 200 talks about overall objectives of audit and conducting audit as per standards on auditing. So give reference of SA 200 and then you explain what is the overall objective. What is the overall objective? Overall objective is to give opinion whether financial statements are as per applicable financial reporting framework. Financial reporting framework means basically basic principles and format which is used for preparing financial statements. And in India, when we talk about it, it is for small companies, AS plus Schedule 3. For big companies, it is Ind AS plus Schedule 3. For banks, it is AS plus RBI regulations. For insurance, it is again AS plus IRDA regulations and so on. So, overall objective, the most important objective is whether financial statements are as per applicable financial reporting framework. Then you explain, if it is a fair presentation framework, you must be aware there are 2 types of framework. We'll discuss about it as we go to SA7 and 2. Fair presentation framework and compliance framework. Okay, let me talk about it here only. Framework which says you can make changes in the framework requirements. You can make changes, or if required, you can give additional things. But understanding of the UI is the most important. He should get very good understanding. That's the most important thing. If you want to make changes, do it. Or you want to make addition, do it. But user should understand clearly what's the financial performance and what's the financial position. That framework is fair presentation framework. In India, Schedule 3 says if you want to change any heading, you can do that. It is allowed. You can modify the heading as required. All the accounting standards in India says that all the disclosures are minimum. You can put more disclosures. That means in India, the framework which we follow is fair presentation framework. But suppose there is a framework. Suppose, for example, ministry has given instruction to ISRO, Indian Space Research Organization, that you are supposed to make a single page financial statement, only income expense difference, asset liability difference. That's it, nothing else, because confidentiality is very important. No changes allowed, no addition allowed. If you want anything, we'll ask. Now that framework is compliance framework. And the most important difference is in fair presentation framework, we give two opinions, whether financial statement is as per applicable framework, whether it gives true and fair. When we talk about compliance framework, we say only one thing, whether financial statements are as per that particular compliance framework, applicable financial reporting framework. That's it. Okay. So first we will explain that. See, first is overall objective. Will explain that we have discussed whether financial statement are as per applicable framework and whether they give true and, if it's a fair presentation framework, whether it give true and fair view. Then next we will explain to achieve this objective, you go and check all the material items, are they free from material misstatement, and you perform this whole activity and give opinion with which assurance? Reasonable assurance. Reasonable assurance means high level of confidence, 80-90% level of confidence. But we cannot give absolute assurance because of inherent limitations. And now we know there are three types of inherent limitations. What are those three types of inherent limitations? Problem is with nature of financial reporting, it is full of judgments. Financial statement which we prepare is full of judgments, estimates. That's a big problem. Then next is nature of audit procedures. We are highly dependent on management. We are highly dependent on management. We don't have enough powers. We go and use sampling. We use persuasive evidence rather than conclusive evidence. And the third problem is time and cost. So you are going to explain overall objective. When you are going to explain role of reasonable assurance, we cannot go for absolute. That is because of inherent limitation. Those three things should come. So that was very simple and straightforward question. Now next is 2.010. Now this particular question, look at this. This has been asked in May 19 mock, this particular concept. Then November 20 RTP, November 21 mock, study material 21, and now November 22 mock. But the way it is asked is important. Okay, let's see what they say. So basically they are saying, first of all, there is a conceptual mistake in the question. Institute has not commented about it. You may comment about it. They say that ME Limited issued engagement letter to the joint auditors. It's not the company who issues engagement letter. It is auditor which gives engagement letter to them. Both of them sign. One copy is with the client and one copy is with the auditor. So there's a conceptual mistake. But then IC has not commented about it. Okay, let's ignore it. They say that Mr. X is not clear on some points. One of the auditors is not happy with the letter. And he is asking to change engagement letter. Okay, so the question is, it's very simple situation. They are joint auditors. They are joint auditors and a letter is given to all of them. And one of the auditors is not happy. He is talking about change. He says that this letter needs to be changed. And then they explain the engagement letter contains following details: objective and scope, responsibility of auditor, identification of FRF. What was the discrepancy in the audit engagement letter? What was the discrepancy? What was the problem? What do you think? What is the question is all about? Contents of engagement letter. Okay. Yes. Now, in previous session, a lot of students said that it is about change in engagement letter. It is not about revision of engagement letter or change in engagement letter. In fact, both of them are again different. Okay. Every year we know that every year we don't have to make engagement letter. But then if there is a big change in law, FRF or management side, auditor side, big changes are there. We make a revised engagement letter. We may make. And then once engagement letter is made, and if there is some problem, we have to change it. That's a different thing. Yes, no. There are two things. In recurring audits, we don't have to make new engagement letter. If required, we may again make a letter. That's one thing, and then there's change. Now the question is not about here. If student knows there are 5 mandatory clauses, everyone knows there are 5 mandatory clauses. Now this is important. He should understand. Okay, out of 5, 4 things are written. One thing is missing. And question is all about that. And that particular auditor who said, I want a change in the letter, he wants that the 5th point should get included. Are you getting this point? Now, this is how question was asked in November 22 mock test paper. Let's see. It's very simple, straightforward. Again, you have to give reference of essay 210. 210. Okay. Agreeing terms of engagement. And you need to explain that as per essay 210, there are 5 mandatory clauses. Now, we are going to go to chart book in between. If you come to page number 3, there's only one change you will find. Only one change you'll find in chart book with you. Chart book with you and chart book which is appearing here. These concept numbers are written there. Concept numbers are written. Okay. So don't worry about that. We'll give you a file PDF which will give you concept numbers as well if required. So if you come to page number 3 and you come to third column, you will get this important thing. It's very simple, straightforward. So as per essay 210, it is mandatory. It is mandatory that in every assignment there should be a mandatory engagement letter. It should be in written form. It should be in written form and most preferably at the start, at the commencing of the work, it should be there. Okay, it's very simple, straightforward, and there are 5 mandatory clauses. 5 mandatory clauses. Number 1, it should clearly specify objective and scope. Clearly objective. What is the ultimate objective? Like in audit, there's an ultimate objective whether financial statements are as per applicable financial reporting framework, if it's a fair presentation framework, whether it is true and fair view. Scope. What do you mean by scope? What we are going to check and how we are going to check it. It means 2 things. So scope here means, are you going to do audit of the whole group or the whole company or only head office and few branches? So in every engagement letter, clearly specify what is the objective and scope. And there are 2 points related to the management and 2 points related to the auditor. Related to the management, need to specify what is management responsibility in detail. We all know it is responsibility of management to prepare financial statement. Don't stop there. Then also establish internal control systems to make those financial statements. Don't stop there. After making it, to provide all the information. And if we ask for anything additional, to get that additional information as well and access to all the employees. Just for knowledge, no need to write it here, but then management's responsibility, and then you need to identify the financial reporting framework, because it is management's responsibility to understand and implement financial reporting framework. So also identify FRF. So here we are going to explain objective and scope. After that, responsibility of management, and then identifying what is the applicable FRF. Is it AS plus Schedule 3 or Ind AS plus Schedule 3 or your AS plus banking regulation and so on. Identify FRF. Then next 2 point is audit related, simple. Responsibility of auditor. Responsibility of auditor is to do audit as per standards on auditing. You give all these simple details. First go for risk assessment, then you perform audit procedure, get evidence, and then final reporting. Here you need to explain expected form and content of audit report. Maybe attach what will the expected form and content of audit report. What kind of report will be given? This point clear? It's very simple, straightforward. One more thing. If law or regulation specify all the details, that means law only specify this is the objective, this is responsibility of management, this is the framework they will follow, this is responsibility of auditor, and this is going to be the format of the audit report. If law only specifies everything, no one can override law. It doesn't make sense to make an engagement letter then. So SA says, if all these 5 points are given in any law, then simply make a letter. Dear client, this is the law which specifies all the 5 points. We have read it, we understand it, we accept it. You also read it, understand it, accept it, and acknowledge it to us that you are okay with this. Okay. But then the most important responsibility of preparing financial statements, just confirm it once again, whether you will be preparing financial statements or not. So, no need to make regular engagement letters. Simply one letter will go, acknowledge that letter, and it will be all fine. Now in this question, what thing is missing? They have given about objective and scope. They are talking about responsibility of auditor. They are identifying FRF. They are expected form and content of audit report. What is missing? Management responsibility. So the concept was very simple, but the way they draft question is good. You should be able to identify that out of 5, 1 point is missing. And let me tell you guys, if you see these questions once, if at least once we have seen this question, you will be very convenient when you go to exams. Because that will not be totally new question for you. You know that I know what kind of thing they have drafted. Okay guys. So you should stay positive, stay happy. Okay. 5 plus 5, 10 marks. So, and then again you need to discuss the case, and then there is a conclusion. There is a conclusion that management responsibility is not specified. Okay. Okay. Let's see. I am also, my target is to finish off 250 plus important question. That's most important thing. Quickly. Next is very simple, straightforward, asked in November 19 RTP. Precondition. When client comes to us, before I go and see what is your business, what is your reputation, everything, even before that, I am supposed to think whether you fulfill preconditions. You fulfill preconditions, basic conditions, and that's also called premises of audit. They are so important that the whole concept of audit is based on that. Okay, so let's see what are the preconditions. Come to page number 3, third column. These charts are beautifully drafted. They are not just chart book. It covers everything. Everything is there. Nothing is left out. Not a single concept. Out of 18 chapters, 13 chapters are covered, and we have covered everything there. Let's see. Now, what are preconditions of audit? Premises of audit. Number 1, dear client, I want this in writing in the form of agreement from your side. I want agreement from your side, and in that agreement, basically engagement letter, it should be clearly written that it is your responsibility to prepare financial statement. Now the important is don't stop there. You may lose marks. It is your responsibility to prepare financial statement. To fulfill this responsibility, internal control system, it is your responsibility to design and to implement. Design means to make. To design and implement internal controls to prepare financial statements. And again, don't wait there. After making it, sharing information. Once you make it, give access to all the information. Access. to all information is prepared by you. Whatever voucher you have prepared, whatever working you have prepared, we want access to that. Not only that, if we ask you to prepare something new, something extra, additional, if I ask you to prepare a graph of monthly salary, do that also. So he gives us to us in writing at the start only that I will prepare additional information, additional statement, whatever you will ask. And third, unrestricted access to employees for inquiry. After giving that, we will have access to all the relevant officers and employees. We can ask any information we want, which is important for auditor. And then finally, financial reporting framework should be acceptable. Financial reporting framework should be acceptable. So it's very simple. Suppose you are having finance business and you are using a format cost of goods sold that is not suitable. That framework is not suitable for you. That means this framework is not acceptable. If framework is not acceptable, you are going to get useless, absolutely crap financial statement. Doesn't make sense to audit them and put a signature on that. Let's not accept the assignment where framework is not suitable. It is not good for the particular entity. Quickly, how many preconditions? 2. Give it to us in writing agreement. Number 1, responsibility to prepare financial statement, and then internal control system to prepare that financial statement. Not only that, then share all the information. In fact, additional information which we ask for, and then unrestricted access to all the employees for question, for inquiry. Now, there's one now here. See what they are saying. Basically, a discussion is going on. The company has mentioned in audit terms that they will not be able to provide internal audit report. Okay, so this is the question. They will not be able to. They are saying that okay, listen, auditor, we'll do everything, but we are not going to provide you internal audit report. Another company also imposed some limitation on scope of Mr. Ram. What are the preconditions Ram should ensure before accepting or refusing the proposal? Also advise whether Mr. Ram should accept the proposed audit engagement. Now here they are targeting two things. That's what student needs to understand. First, they are asking for precondition, which we have already seen, which we will explain. But then they are talking about an issue that internal audit report is not shared. Okay, internal audit report is not shared. They are not ready to share the internal report. And apart from that, they want to put some limitation. Limitation means restriction. Scope means what we are going to check and how we are going to check. The range of checking which we are going to perform, that is scope. So they want to restrict that also. So you need to target that. Now it's very interesting. Understand this. Now, if restrictions are made at the time of accepting assignment, it is covered here in essay 210. And if restrictions are made after assignment has started, initial letter is exchanged, then it is covered in essay 705. So here you should be very careful. Okay, now these we are talking about preconditions. That means it is the start of the audit. It is the initial stage, and during that initial stage, they are talking about putting restriction. So these are proposed limitation on scope while discussing whether to accept the assignment or not. So first you need to explain precondition, and after explaining precondition, you need to discuss one more thing. Essay 210 gives a very simple thing. At the time when you're talking to client, you're discussing precondition, you're thinking about it, whether to accept or not. If they are proposing some limitation on scope, like here they are proposing limitation on scope that we are not going to give you internal audit report, what will you do? Will you accept the assignment or you will not accept it? Accept or not accept it? Okay, so we need to be conditional answer is better. Okay. Now, what I said 210 says, if limitation of scope is such that you will have to give disclaimer, you think that there's so much of limitation, you cannot go and talk to some of the directors, you cannot go and visit some of the godowns, you cannot go and see some of the documents, agreements, reports. There are so many restrictions that tomorrow you may have to disclaim the opinion. If you are getting feeling that because of this, you may have to disclaim the opinion, you may have to give disclaimer of opinion, only then you should not accept the assignment. Now what institute has done, institute has said not sharing internal audit report is a very big thing. Not sharing internal audit is very big thing. You should not accept the assignment. But then be careful. You should always, it's always safe to give conditional. If it is very big thing, it's very big thing, then don't accept the assignment. Now we know from this question that internal audit for this company, maybe it's a very big thing. Okay. So don't accept the assignment. But in other cases, be diplomatic. If it's very big thing, don't accept. But if it can be covered through alternative audit procedure or evidence, we can go and accept it. Are you getting this point? Quickly, it's not like that if you put any limitation, don't accept. Only if limitation is so big that you are going to give disclaimer, then only you should think about not accepting it. Is this point clear? So many students may miss this particular point, that if there are limitation, the proposed terms and condition, how we are supposed to react as a auditor. Is everyone clear about this? Quickly, we saw first question of essay 200, that was on overall objective, warm-up question, reasonable assurance, and why we cannot go for absolute. Then we went ahead and we saw how one point was missing in engagement letter. And then we go ahead and we have seen just now how there are preconditions and proposed limitation on scope. Now let's go to essay 220, 5.000. Now this is very interesting. Now look at this. So in India ऐसे ये question आने के लिए तड़प रहा है. Now this question, new course, May 18 mock test paper, May 21 mock test paper, and it is not yet asked in exams. It becomes extremely important. And this is an interesting question also. Okay. So what is this interesting question? Okay, this is very simple one. Come on, tell me what will happen. So the question is very simple. So there is a firm, one of the partner has completed the assignment, he did all the work, and next day he was supposed to go and sign, but on the way, accident happens, he is no more there. Suppose he must be having age of 100 plus, so he has lived his life. And now after that, another partner comes up and he says that he was partner of the firm, I have full faith in him, and being a partner of the firm, I have right to sign. I have right to sign any client of the firm, and I will use that right and sign audit report. He says, I have full faith. The whole team has seen the work. I also have full faith on him. I will go and sign. He goes and signs it. Will that be fine? Yes, no. He is a partner of the firm. He is signing. Is that fine? Yes, no. No? What is the problem? Yes, perfect. Bang on target. There's one more thing which I didn't say. It is written that, but that's not always they are going to do that. He says that he signed everything, showing full faith on the partner. He didn't review anything. So will you apply CA Act 1949 here? No. This question is not drafted as per CA Act 1949. This is a very old question. It is drafted as per Essay 220. Essay 220. Absolutely fine. We can make all the mistakes in the class here. And and you should be happy. Good. I got rectified. Now, here you are going to explain that as per Essay 220, if there is a change in partner because of any reason, if there is a change in partner because of any reason, okay, That reason can be health was not good, the person died, the person resigned, he's not having COP, he got anything. If there is a change in partner, incoming partner should thoroughly review the work. Even if it was reviewed earlier by the earlier partner, incoming partner should thoroughly review the work and then only he should sign. Okay, is this point clear? But then, important thing is, this is not sufficient. Students are also supposed to explain what he is supposed to do in review. What is supposed to do in review? What is he supposed to do in review? 5-mark question. Yes. Yes. Complied with all the essays. Okay. Laws and regulation. Complied with engagement letter. Whether evidence was sufficient. Internal control. Slowly I am saying whatever. let's. Sometimes it happen ultimately. Okay, the first question the same masala was there. Third, fourth question the same masala is there. Okay, fine. Yes. Review documentation of the previous partner. Okay, listen guys, in this particular chart book, I am going to tell you each and every concept, wherever there are a lot of points, there is some way to remember it. Now you have to catch it. And I am going to explain. Okay, so now the question was wherever there is a change, what to do. So if you come to chart book, page number 4, let's see. You are supposed to explain as per essay 220. Okay, before I go to 220, quickly, what do you mean by quality work? What do you mean by quality? What do you mean by quality audit? What do you mean by quality audit? Quality audit work. So the answer I'm getting is when quality is better, quality of evidence is good. Okay. When things are more reliable. Yes. Adherence to regulation standards, legal requirements, compliance of SS. Okay, it's very simple. Two things only. We say that it is the quality audit work if the audit work is conducted systematically as per legal requirements, below that regulatory requirements, standards on auditing. So I will always remember it in a sequence. First, most bigger thing is law, then regulations, and then professional standards. And next, second point, the final report is reliable. It is appropriate in the given circumstances. Even if someone challenges it, we will be able to prove that it is appropriate. It should be reliable. So two things. When the work is conducted systematically as per legal requirements, regulatory requirements and professional standards, and second, the final output audit report is most reliable in the given circumstance, it's called quality work. So we have two standards for this SQC, one and SA 220. So SQC 1 explain at firm level what kind of principles, policies should be there. That means what kind of system should be there for doing audit. What kind of system should be there to do the work. That's called system of quality control. System of quality control is nothing but steps, procedures of doing the work. That's called system of quality control. So firm SQC 1 gives firm level policies and procedures. So like for example, if I talk about PwC, they are not going to recruit anyone other than CA. That's their policy. They want very competent, capable staff. They are not going to recruit anyone other than CA. We talk about EY, they may recruit, but then it's very limited, 10-15% they may recruit graduates and MBAs also in statutory audits. That is their policy. So SQC1 explain what should be the firm level policies to maintain quality. And SQC1 says we are giving you principles to maintain quality of all assurance and related assignments, not just audit. How to maintain quality of all assurance, that means how to maintain quality of audits under assess, then reviews, then also audit review of information other than historical. Yes, no? For other than historical, which we have this standard. SAE, standards on assurance engagement. And similar knowledge and skills are required in SRS, standards on related services, compiling financial statement. SQC1 talks about, it gives us principles and policies which firms should follow to maintain quality of all types of assurance and related assignments. And what about SA 220? SA 220 talks about implementation of firm level policies and principles to assignment level, engagement level by engagement partner. And essays are applicable only to audit of historical information, and historical information is nothing but financial statements, because financial statements have historical information. Okay, so scope of SQC1 is all types of assurance and related assignments, and scope of SA is only audit of historical information. It talks about implementation. And because it talks about implementation, all the points of SQC1 and SA 220 are almost same. All the points are almost same because it talks about the implementation only. Okay, and quickly, what are those 6 points? They say that if you want to maintain quality, you need to focus on 6 things. Like if you want to crack CA exams, you need to focus on 2 things. First, mentally you should be sound. Mentally you should be happy, cool, calm. You should not be worried. You should not be tense. You should be strong. You know, you should be like the high achievers. Virat Kohli is very famous, or Dhoni is very famous. Even if they get out on 20, if they may get out on 0 for 2-3 matches, they will have full confidence and perform in the next one. Or be like Surya Kumar. He is not bothered. Correct? He has his own attitude. That attitude is required. It's very important here. And the next is technical knowledge. 2 things are required. And most important, I think, is much more important is to have a better state of mind. And then comes technical knowledge. On the same lines, to maintain quality, they are talking about 6 things. Number 1, the most important and the powerful person in the team is engagement partner. He should take the responsibility. Yes, I will ensure that quality work is done. But he alone is not sufficient. He alone is not sufficient. He need good human resource. You need adequate team, competent team, good number of seniors, experts in your team. Okay. Now we got good engagement leader, ready to take responsibility, good human resource. Now both of them should be independent and ethical. Both of them should be independent and ethical. First, leader should take responsibility. There should be good human resource, and both of them should be ethical and independent. They should fulfill ethical principles also, and they should be independent also. Once they are all good, they should accept assignment carefully. Now, accept assignment carefully, however good you are. But if you're taking something which is not in your domain, you're going to fail miserably. So you should accept only that thing where you will be able to deliver. You will be able to deliver. So acceptance and continuance. There are some spelling mistakes, ignore it. Then acceptance and continuance. Once you accept the assignment, there should be engagement, performance. Like when team wants to go to assignments, there should be direction. Proper direction should be given. When team is working, there should be supervision. Then when team or any person gets stuck, there should be consultation. When very knowledgeable people give advisory services, that is called consultation. What is the difference between consultants and experts? Yes. Consultant only give advisory services. Experts work with our team. So now good engagement performance, initially direction. Then when they are working, there should be supervision. If they are stuck somewhere, there should be consultation. When they finish their work, senior should review their work. Review means two things. Review means two things. If you are completing the whole assignment in short, like you do for quarterly financial statement, that is called review. And when junior completes the work, senior sees it, that is also called review. There should be review. Then after review is done, after all the work is completed, and before signing, you should call a non-team member. Come here and check whether all the important matters are properly fulfilled. That's called EQCR, Engagement Quality Control Review. So a non-team member is called. He is supposed to say everything and check whether everything's all right, because it's human behavior. We cannot identify our own mistake. We need someone else to identify our mistakes. Okay. So EQCR, and then only sign it. So these are the parts of engagement performance. And then finally, after the assignment is performed, see, improvement is a continuous process. And in the dynamic world we are living, so many things keep on changing. We need to keep improving. If anyone comes and says that they are perfect, correct, that's not acceptable. So what they are saying that after everything is done at year end, you should monitor your own system of quality control, your own system of doing audit, whether your people know exactly how to make a good plan, how to implement it, how to have good files, evidence collection, how to make report. Evaluate it whether your own system of quality control needs any upgradation, need any change. Also go for inspection. What do you mean by inspection? When completed assignments are checked. So if before signing anyone comes and look at your document, that is called EQCR, Engagement Quality Control Review. It is mandatory for listed companies and for others as per the firm's policy. So firm may have a policy that people having turnover more than 100 crore, go for it. Go for EQCR. We can have that. So if you're doing it before signing, that is called EQCR. And if you're doing it after signing, to check whether assignment was properly performed as per system of quality control, whether quality was maintained, that's called inspection. So last thing is monitoring, and along with that there's an inspection. If you do these 6 things, you will be able to maintain quality about thousands of reports which are issued by CA firms. Quickly, 6 elements. Number 1, engagement partner leadership is extremely important. Below that, adequate, competent, capable human resource. They should be ethical and independent in their approach. Once they are good, they should carefully think about accepting new assignment, continuing old assignment, acceptance and continuance. And then finally, when there should be engagement performance. There should be systematic engagement performance. After engagement performance, there should be monitoring and inspection. You should focus on these 6 points. Any CA firm will deliver quality reports, quality assignments. Now here, come to our question. Let's see. So it is engagement partner's responsibility to ensure proper review is done. Proper review is done for the whole assignment. EP should take responsibility that reviews are as per firm's policies and procedures on or before audit report is issued. He should ensure work of every junior is appropriately reviewed by CNA. And the most important thing is he should ensure that adequate files and documents are there, adequate, sufficient, appropriate evidence should be there. And SQC 1 explained that it is always person with more experience should review the work with person with less experience. Not age, experience. They will play with it. And not just qualifications also. It is experience, person with more experienced should review the work person with less experience. And now, guys, this is important. What review consists? Number one, most important, whether work is performed as per legal requirements, as per regulatory requirements, as per professional standards. Then, if work is performed properly, what are the significant matters? What do you mean by significant matters? Matters which are so big that we have to discuss it with our seniors, managers, and partners. We cannot avoid it. That is called as significant matter. Example, when we initially go for risk assessment, we get a very big risk, that is significant risk. That's a significant matter. Then we go for test of controls. While test of control, we get very big deficiency. Significant deficiency is a significant matter. When we go for test of details, we got material misstatement, that is a significant matter. Then we got some points which are affecting audit report, EMP, OMP, key audit matter, that is a significant matter. Are you in this point? All the big things, significant risk, significant deficiency, material misstatements, anything which affects audit report, all these things are collectively called significant matter. Moment significant word is attached to anything, that means it should be given special attention. There should be special attention, there should be special audit procedures, there should be special discussion with the seniors. Seniors should mandatorily review it, correct? All these things will be mandatory. So, in this particular review, he is going to see whether work is performed as per legal requirement, regulatory requirement, professional standards. Next, all the significant matter which were raised. Then appropriate consultation. Whenever people got stuck, whether there was appropriate consultation during how to manage these significant matters, they were documented. Then whether conclusions are appropriate as per the information evidence available in the documents. Finally, after conclusions are made, whether there is sufficient appropriate evidence to support the conclusions and audit report, whether we have achieved the objectives, and finally, is there is a need to revise nature, timing, extent of work we perform. See, it's in a sequence. First, whether work is properly performed. Then, while performing work, you will come across significant matters. Review all those matters, and when whether proper consultation was taken for those matters and properly documented. Finally, after consultation, whether conclusion is appropriate, and it is as per the given evidences. Finally, whether objective is properly achieved, and last thing, he will always think whether nature, timing of extent needs to be revised. More audit process need to be performed. Fine. So that's what happens many a times. We know what is the answer. Actually, we know the crux. But then it's a 5-mark question, 4-mark question, we are supposed to explain it more. That's where sometimes students go lacking. Okay. So first give reference of essay 220 and write the full name. Till the time you don't write the full name, you are not going to get that 1 mark. Only giving essay number will not be sufficient. Okay. In fact, when you go for writing, let me focus on one thing. In fact, two very important things while writing answer. That is, you should be smart enough to show that you are writing a lot of things. You should manage space properly. See, I'm not saying it's a graduation paper and you dump garbage and you'll get marks, but mind it, there's definitely a psychological impact on the examiner when he sees that your answer is of 2 pages. You should write at least 1.5 page. Yes, I was analyzing a paper of a student who scored 95 marks. 95 marks. He's smiling. Got 95. 2 people will get pass in 95. Okay, I will pass inter and final as well. That was the inter paper, but then important learning is this guy used to start fresh question, new page. He will leave 1 or 2 lines and then write question number, and again leave 1 line. So 4 lines are consumed. That's intelligence. Then it's very important that you give headings like essay 220, underline or a box. And then you say essay 220 so and so thing is applicable and a statement. See, every heading means there's one line above it, blank, one line below it, blank, and that one line, that's 3 lines. So if I am there, I will give heading essay 220. Then I will give heading engagement partner responsibility. Okay. Then I will give heading what should be done in review. And those points. Every heading means 3 lines. That's extremely important. That is smartness. You're playing with the rules. You're not doing something which is, and most importantly, examiner is looking for some points. Moment he sees that heading, he knows that you know. He knows that you know and you've written that point. Many a times he's not going to read the statement also. Because you are putting proper headings. So giving headings is extremely important. And this will help you in managing the space. And then the old technique we all know, little bit of don't put half page margin. Little bit of margin on the left side, little bit of margin on the right side. All those things work. But you should be smart. It should not be overused. It should not happen that you have only put spaces and there are only few words. And then you should be smart enough again to put space also between your words. It makes reading easy also. And please, if you're not good at handwriting, please improve it. Okay. So yesterday, now suggested answers are out. Students are comparing. Yesterday I got some screenshots, sir. This is my answer. These were suggested answer says I'm not getting marks. It was so difficult for me to read that. When you are torturing examiner. Already he's frustrated in life. You're torturing him and that's why he's not reading your answers and not giving you marks. But anyways, those are very simple. So the message from my side is space. Give adequate space so that your answer looks for 2 pages. There is nothing wrong. Now, next people may miss is basic principles of audit. So you are supposed to give essay 220 that review should be done. These things, whenever there is a blue color, that means it is a summary. So even if you read that summary, that is sufficient. You are not supposed to read that complete thing. Green color means examples. You are not supposed to write those examples. It is just for understanding. You also need to explain basic principle. What is the basic principle? Very simple. Auditor can anytime delegate his work to others. That is allowed. Or if someone has already worked, he can refer to their work. He can use the work. Auditor can anytime delegate his work. Auditor can anytime use the work. But then in that case, there is a condition. But he will be always responsible. He can delegate work. He can delegate work. He can delegate work. He can use work, but he cannot delegate responsibility. Correct? So I am here. I have delegated a lot of work. That classroom arrangement, this, that, delegated, and I'm happy. I got good cooperation with very short notice. But then, okay, we can delegate work, but I cannot delegate responsibility. If tomorrow something is not correct, I am responsible for that. It's my personal responsibility. On the same lines, now here they are saying the basic principle should be explained. We can delegate work, we can use the work. On same lines, when it comes to partner, definitely I can use the work. That's fine. But you should rely carefully. Before relying, you should take due care whether work was performed properly. You should ensure whether your work was performed properly. You should ensure proper direction was given, proper supervision was done. You are reviewing work yourself. Once you ensure proper DSR is there, then only you can rely on the work of others. Is point clear? So you are supposed to explain that point also. That basic principles of audit. That is not as per essays. It is a It is not exactly as per essay. It is traditional theory of the audit. Guys, I think this is a very important question. Not asked in exams. It is dying to come in exams. And it can come in any form. Partner died, he's not well, he resigned, and whatever it is. Whenever there is a change, you should go for review and then basic principles also. Okay, guys, so we have seen questions of essay 200, we have seen question of essay 210, and 220 is extremely important. Next question is 5.020, extremely important. Look at this. May 19 RTP, November 19 mock, study material 20, May 22 RTP. Again, this question is dying to come. Okay, and this is a very interesting question again. So it's a listed company. It's a listed company, and engagement partner has appointed EQCR reviewer, engagement quality control reviewer. Perfect. He is perfect. He is doing his job properly. He is an engagement partner. He knows that EQCR is applicable. Everyone is aware about EQCR. A non-team member should come and see whether work is performed properly before signing. That is EQCR. So he is doing his work. So EQCR comes. And now there is a fight between these two guys. Engagement partner says that, listen, I am the person who is supposed to ensure quality work is done. I am the person who is supposed to check whether all elements are there. I am the person supposed to check whether the team is independent, whether they are ethical and independent. And I have performed my responsibility as an engagement partner. I have ensured my team is ethical and independent. I have ensured if they had shares, I have asked them to sell it off or reduce their holding. If they had any financial outstanding, I have asked them to clear them. They have cleared it. I have ensured my team is ethical and independent. Okay. Now, EQCR guy says that I will also check whether team was independent, and they're fighting with each other. He says, I've already seen it. I've taken care of independence. You don't need to come and see the independence again. You only see the significant matters, audit report, financial statement, have an overview of that. You are not supposed to see independence thing. Comment. So there's a problem. He says only I will see whether team is independent, and he said I will also see whether team is independent. Okay, let's understand. It's very simple. First of all, we all know who is responsible to maintain quality? Engagement partner. Who is supposed to see whether all the elements of quality control are properly there? Engagement partner. And one of the quality control element is ethical requirements and independence. 100% sure it is engagement partner's responsibility that he should go and check whether team is ethical and independent. It is his responsibility for sure. In fact, he is supposed to perform 3 things in that. We'll see those 3 things. But essay 220 has specified what is responsibility of the reviewer. What is responsibility of reviewer? So they have given responsibility. We'll see that also. In case of listed company, specifically, if EQCR is done for listed company, he is supposed to go and check whether team was ethical and independent. Okay. So both are supposed to focus on that point. So both are correct. But engagement partner cannot stop EQCR from evaluating independence. It's his responsibility also, and then responsibility of the reviewer also. Both are supposed to check about the independence because it is a listed company. That's a wonderful question. Okay. Let's go to charts and let's see the relevant charts there. Okay. If you see page number 4, so ethical requirements including independence. Yes, it is responsibility of the engagement partner to go and check whether the team is ethical as well as independent. It is his responsibility for sure. He should ensure that the team is complying with ethical requirement and independence requirement also. He is supposed to do 3 things, 3 steps. Step number 1, obtain. He is supposed to obtain all the information which is relevant for independence. For example, whether we have any relatives in the team, relatives of the client in the team, whether we have shareholders, debenture holders, whether any team member is having financial transactions, business relationship, etc. He is supposed to collect information whether my team, my firm members, whether my network firm members, are they having shareholdings, are they having business relationships, are they having financial dealings, what kind of non-audit services are being given, all the information, obtain, evaluate whether these transactions or relations are very big, significant, evaluate it, whether it's going to affect independence, whether there is a breach Companies Act or whether there is a breach of firm's policies. Now listen, Companies Act will give you stricter conditions. Companies Act will have some disqualification, but your firm may have disqualifications also. For example, Companies Act is applicable only to partners. Partners cannot hold shares. Partners cannot be indebted. There are no restriction for team members. There are no restriction for team members. Okay. There are no restriction for team members. But then firm may have a policy for team members also. Some of the firms will say, shut your demat account. Moment you join audit team, the moment you join it, there should not be a demat account itself. If you want to invest in mutual funds. Don't invest directly. That strict they may become. Evaluate whether any Companies Act requirement is breached or whether any policy is breached. Take appropriate action. Take appropriate action. You may remove some team members. You may replace them. Or you may go for more supervision, more review. They are called safeguards. If we ask them to sell shares, that is called eliminating the threat. We may reduce the threat, we may eliminate the threat, and if that is not possible, we may think about withdrawal. And if it's if promptly report to firm inability to resolve, not inability to resolve, he's supposed to inform the firm. So you need to explain, boss, yes, engagement partner is responsible for ethical and independent requirement. He's supposed to perform how many steps? 3. First, obtain information, then evaluate information, then take appropriate actions. It is applying safeguards, reducing threats, eliminating threats. If that's not possible, then withdraw. So that is, yes, as per SA 220, it is engagement partner's responsibility. Then come here. That's interesting now. EQCR, I think it's very important. It can be targeted in the MCQs also. It is mandatory for audits of listed companies. Mandatory for audit of listed company. Apart from that, whichever entities are covered in firm's policies, even for them EQCR will be mandatory. What is the responsibility of engagement partner? He is supposed to appoint the reviewer. Who is going to review? A non-team member who is going to review my audit, he is supposed to appoint. In exam, they will ask question, who will appoint EQCR? Engagement partner will appoint EQCR. He is supposed to appoint the appropriate person who is not a team member. After appointment, he is supposed to discuss all significant matters. This was a significant risk, this was significant deficiency, this was material misstatement, this is EMP, this is OMP, this is key audit matter. Discuss everything with him. Not to date. Not to date means not to sign. Okay, date. Okay. Okay. Not to date means not to sign. Not to sign audit report till EQCR reviewer has signed his document and said, till the time you don't get signature of EQCR, he is not supposed to sign. What is responsibility of reviewer? Again, now this was from the whose point of view? Engagement partner. You appoint, you discuss, and don't sign till the assignment is come, till he signs. Okay. What is his responsibility? Again, his responsibility is to come and discuss all significant matters. Come and discuss all significant matters. Review documents of significant judgments and conclusions. First of all, you come and understand what were the significant matters. You go and see documents. Documents for only significant judgments which were formed during the audit. What is the example of significant judgment? How you have taken big judgments like whether to rely on controls, whether to rely on internal auditor, whether to use evidence of previous year. All those are big judgments. Go and see documents supporting all the significant judgments. Okay. So what is the responsibility of reviewer? You come, you discuss all the significant matters. You go and see documents which are supporting all the professional significant judgment you have taken during the audit. Finally, go and see whether the final conclusion in the audit report opinion is appropriate. And after these important things are done, lastly, just have a review of financial statement audit report, whether everything looks appropriate. See, it's very simple. First, go and see significant matters. Then go and see documents supporting significant judgments. All the documents and whether conclusion is appropriate. These are basic things, important things. It's in a sequence. You go and see significant matters, you go and see documents, you go and see conclusions. That's in a sequence in which work happens. Finally, you go and have a review, okay, of financial statement audit report. Additional matters for listed entities. If you're doing review of listed entities, additional matter. And what is it in the additional matter? Evaluation of independence. Reviewer has to evaluate whether team was independent. Why listed company? Listed company is so big, so huge. There are so many people associated. So many shareholders, so many debenture holders, so many employees, so many people are associated. So there's a bigger threat to independence. So you go and check whether team was independent. Check whether they can proper consultation on wherever there was complicated matter, contentious matters, disagreements, proper consultation were taken. And now go and check whether document reflect the work which is performed. What is the difference? In the earlier point, we said that go and see documents. Now here you see whether documents are properly made. Do they really reflect the work performed? Whether all the work which is written in the document was performed? You go beyond documents and see whether the work was really performed. So in listed companies, we do 3 additional things. Go and check independence. Go and see consultations. And go and see whether documents were proper, whether they reflect the work performed. Okay, finally, what is going to be the answer of this question? You are going to say, listen guys, that engagement partner is definitely responsible to go and check ethics and independence. He is supposed to perform how many steps? 3. Then you will say, even reviewer is supposed to go and check. In case of listed company, he has some additional responsibility. And if you want a lengthy answer, you can explain the complete thing. You can go and explain the complete thing that yes, it is his responsibility to do this work. In case of listed, he is supposed to go and evaluate independence, consultation, and then the documents are appropriate. So both are responsible, But engagement partner cannot stop reviewer. Engagement partner cannot stop reviewer from going and evaluating ethics and independence. Engagement partner is not right is the conclusion. It's a beautiful case, very important case, and there are high chances that it will come. After study material 20, it is again coming to May 22 RTP. So guys, just see, we have now complete 3 standards. We have seen important question from essay 200. Oral objective was there. Then essay 210. How one clause was missing. How one clause was missing. We have seen that. We have seen precondition and how not to accept assignment when there is a internal audit report is not given. Limitation on scope. Then we came to essay 220. We know what to mean by quality 2 level, firm level and engagement level. We know 6 elements. We know how reviewing is important when there is change in partner. And then we saw here 2 people are fighting with each other. Engagement partner cannot stop reviewer from checking independence. See, as I said, just be relaxed, cool, calm. Don't stress a lot. You want to ask a doubt? Great. Ask. EQCR can be within the firm. EQCR can be outside the firm also. EQCR can be within the firm. EQCR can be outside the firm. It can be an individual. It can be a team. It can be individual also. It can be a team also. But only condition is he should be a chartered accountant. He should be chartered accountant, and if it's a team, leader should be a chartered accountant. So EQCR should be a team chartered accountant always. Now, so as I said, be relaxed, cool, calm. Just how many of you feel that you were a lot more energetic and enthusiastic when you were in 10th or 12th? Okay. So this is a question which a lot of final students feel. I used to get up at 3 o'clock, 4 o'clock. I used to study this much, that much when I was in 10th, when I was in 12th. And now ideally that should happen now. But now it is difficult even to get up at 9 o'clock, 8 o'clock. But to be honest, South students are much more sincere when I see in general. Okay. They are much more sincere. I was very happy. I just visited. You got very good atmosphere of studies here. And I love the concept of study hour match. Okay. This concept is not there in North. Yeah, they all go to libraries. They all study in libraries. That is again common. But then to have such kind of, so it's a good atmosphere out here. Okay. But then I was talking about enthusiasm. Correct. So what is the difference? What has happened? What has changed? You're the same person. See, yes, maturity. So he's saying maturity. So it doesn't matter, it doesn't make sense to study so much, work so much. And responsibilities increase. Okay, I think one of the biggest changes, you are very hopeful in 10th and 12th. You thought you are going to conquer the world. You can win everything. And you have never seen failure till that time. You used to think everything is possible. You're so hopeful, you used to think everything is possible. And because you used to think everything is possible, and you had that faith also, and automatically that energy used to come. But moment you saw some practical difficulties, reality check, some failures, you stopped being hopeful. You stopped, being positive that, okay, this thing can happen. Still, I may achieve a lot of things. So I'm saying be hopeful. It may happen that 60 marks paper is from this 3-day session. It can happen. I'm not talking about probability, but possibility. We can be very hopeful and we can think about a lot of possibilities. It can happen that even after some attempt, maybe you go in an interview, crack it. CFO likes your knowledge, your communication very good, and you may get an opportunity which a lot of others are not getting. Can it happen? It keeps happening all around a lot of times. See, I was a rank holder, but then I didn't clear final in one go, and it was an accident I came into teaching. If I wouldn't have given second attempt of final, I wouldn't have been teaching. So I appeared for first time, I cleared one group, and then my professor said, will you teach for 2 months? You already the result, you are waiting for results. Come and teach for 2 months. And okay, I will come. And that's how I started teaching. So if you still believe in a lot of good possibilities, if you are hopeful that fine, a lot of good things can happen, automatically you will get energy. Because people who are hopeful, who have faith, automatically their brain body will cooperate and perform at maximum. Okay, fine. So when sitting here, think about it. Okay, again 5 marks, it's done. 3 essays are done. Next. And as I said, you will be getting one more, you will getting video of around 12 hours, and maybe nowadays you increase speed, so you can do it in 10 hours. Tricky concepts from FADU chart. As I said, we have designed 2 sessions. One is Q&A session, which is happening right now. And in Chennai, we are having FADU chart revision. Okay, guys. Next question, essay 230 is again, it was last asked in November 15 exams. And then it was asked in May 20 RTP. Because it was asked in May 20 RTP, that's why it has become important. What factor would influence amount of working paper? What factors will influence amount of working papers? Complexity of the client, correct. How complex is the working? They're making ships, they're making aircrafts, very complex business. Yes. Risk of that particular area, how risky is that particular area? So factors affecting form, content. Now, they are just talking about amount of working papers. And yes, you want to say something? Amount of working paper, and the points you're supposed to write factors affecting form, content, and extent. Now, again, the point is, and again, the point is that from reading amount of working paper, it should click that, okay, I am supposed to write factors of form, content, and extent. Okay, many times students come out from the exam and the paper was general, or they may say paper was practical. Okay, that simply means they didn't had command on question bank. Lot of students, 90% of their time goes in reading concepts, and the most important thing, that is questions. The most important thing you are supposed to do in the 3 hours is read, understand, and solve questions, and the least practice things is questions. So looking at this, it should be clear, okay, amount of working papers, that means you are supposed to write factors affecting form of paper, form, content, and extent, whether it should be manual or electronic, whether it should be more of flowcharts or more of voucher details or graphs. Extent, are we supposed to cover 100 transactions or 500 transactions? Factors affecting form, content, and extent. Essay 230, audit documentation is applicable. Factors affecting form, content, extent. So RASMIN can be RASMIN factors. R stand for definitely risk of material misstatements. You should generate answer from what you see in questions, from the questions, from the standards, not from the practical life. Unfortunately, if you generate answer from practical life, you will get less marks. R stand for risk of material misstatement. More is the risk. You will need more of the documents, amount of working papers. Then A stand for nature of audit procedures. If you're performing analytical procedures is all about, we'll discuss comparison. Compare with previous year, compare with your estimates, compare with budgets, compare with other entities. You'll have more of graphs, ratios, graphs. So content will change. Nature of audit process will change the content of the document. S stand for size and complexity. Bigger is the entity, more documents will be required. Complex is the business, more documents will be required. Then M stand for methodology and tools. If you're performing CAT, computer assisted audit techniques, then will be electronic documents. If you're performing vouching verification, the manual, then again manual documents will be there. Then E stand for significance of the evidence. It's very important. If that evidence is connected to significant matter, definitely you need to increase quantity, extent. Suppose amalgamation has happened, it's a significant matter. You are supposed to have the complete detailed order of the High Court on the amalgamation. That's the most important thing. Then E stand for exceptions. What are the exceptions? Mistakes here. Mismatches. Nature extent of exceptions identified. More are the mismatches. Things are not tallying with each other. They are conflicting with each other. That is called exception here. N stand for not readily determinable conclusion. Conclusions are not readily determinable. That means they are very complicated. You have to read 4 documents and to make one conclusion. If that is the level of complication while making conclusion, you have to think a lot, apply 5 factors, do 2 discussions, and then come to conclusion. More discussions, more documentation. Quickly, R for risk. More is the risk, more is the document. A for audit procedures. M for methodology. Is it CAT or is it manual? Then E for evidence, significance of audit, evidence. Again E for exceptions, where a lot of mismatches are there. And then N for not readily determinable. That means if something it is not easily concluded, you will need more documents. Guys, more than 50% won't write this answer properly. More than 50%. One more thing I have seen that, see, again, if I talk about cricket, because cricket is very popular, if a batsman thinks about a new shot, he knows how to play it. But if he has not practiced it enough to execute in practical life, he is not going to be successful, isn't it? Knowing question is not sufficient. Revising it enough number of times, and you should know exactly these are the 4 points, 5 points. Take question to that level. Take each question you're focusing on to that level where you know exactly these are the 3 points I'm supposed to write. These are the 4 points I'm supposed to write. I'm not saying cramming each and every sentence. No. There's a difference. Only having overview of multiple questions. This is the overview, this is the overview, this is the overview. That's not good. Cramming each and every sentence, when that is not good. Now there's a in between, there is a way out. Take things to that level where you know these are the 4 points I'm supposed to focus on. These are the 3 points I'm supposed to focus on. Okay, I know the review. This partner has changed as per 220 also and basics also, and this is the shortcut to remember it. The flow in which audit happens. Okay, this is the shortcut in which I can remember. Take answer to that level that this is the way to remember the points. This is the flow to remember the points. This is the shortcut to remember the. Go to till that level. It's okay if you cover less number of questions. Suppose you're covering 400 questions, but then you have not taken the quality of studies to that level. It's better to study only 300, but to take it to that level. Are you getting this point? Okay. Next is, it's very interesting again. Come to essay 240. Oh, May 22 RTP, a new question altogether, an interesting one. Essay 240, question 11.500. If you're having old question bank, you may simply take the PDF with the important questions. It is there on Audit Guru Telegram channel. Okay, now, why this question is important? Because even I used to see institute says this essay is in the course. Text and the content of essay is humongous. So they may target any new thing. So they have targeted a new thing, but the good thing is they have given you chance. It was asked in May, and that is how they bring the new question. First, they bring in MTP and RTP, and then they take it to the exams. Across the question bank, you will find that it came in MTP, RTP, then exam, MTP, RTP, then exam. Very high probability this will come. Okay. And there's a reason why it will come. Because those who make study material, I have a gut feeling they only make papers also. It is never disclosed. And if someone has worked very hard in developing a question, okay, they want their work to be appreciated. They want to show their work to the world. There are high chances that this will be there. See, what is the question? So there's a company who are managing hotels. They are owning and managing hotels. They are even selling packages. So their one stream of line is owning hotels. One stream of line is managing hotels. One stream of revenue is selling packages. One stream is air bookings for airline bookings for corporate and individual. So they have multiple lines of businesses. Multiple revenues are there. Audit team decided risk of improper revenue recognition for hotels should not be treated as fraud risk. So audit team says that, okay, so these guys are having multiple businesses, the multiple sources of revenue, and revenue recognition, there is no fraud risk, they are saying. Anyone would like to comment on this? They are saying there is no fraud risk in this. Anyone, if someone knows about SA 240, a very specific thing? Very good. Bang on. Perfect. SA 240 says it's a presumption. It's a presumption that there is a fraud risk in revenue recognition. It is pre-assumed there is a fraud risk. But this assumption can be rebutted. This assumption can be nullified. It can be nullified if you prove that they have a very simple, straightforward revenue recognition. For example, they have only one building given on rent. There's only one agreement. One building, one agreement. Every month end, they accrue the rent, they get the rent. 10 lakh rupees a month. So 1 crore 20 lakhs a year. That's the only revenue they have. If revenue is so simple, this single stream, very simple, then you can nullify this presumption. Then and then only you can nullify this presumption and you can say that there is no fraud risk in revenue recognition. But here in this case, this is having multiple lines of revenue. Different lines of revenue is there. This presumption cannot be nullified, rebuted. Are you getting this point? And they have explained this thing. This conclusion based on assessment of earlier years where no fraud was identified. So they said in past there was no fraud. So this time also we think there is no fraud risk. Again, then they say that while testing financial controls, you see that they are not properly designed. Internal controls over revenue recognition are not properly designed. What they done? They perform additional substantive procedures. So they are saying, okay, in this area, controls were not good. So if test of controls fail, you increase substantive procedures. Yes, no. If controls are weak, you increase substantive procedures. You do that. They are doing everything, but they are not declaring it as a fraud risk. it was identified that they didn't declare fraud risk, and later on it was identified that management did not account for revenue received from corporate hotel booking amounting to 35 crores. So there was first of all, team never flagged that area as fraud risk. It's fine, they increased audit procedures, but after some time they identified a fraud of 35 crores. That company earned 35 crores, but it was not shown in the accounts. The separate account was opened and money was diverted there and partially received by CFO also. In the light of above scenario, kindly guide statutory auditor with respect to their responsibility relating to fraud in audit of financial statement. Now, some people may answer it as per responsibility of auditor with respect to fraud, because last sentence is like that. But then that's why Q&A practice is important. They have well explained what they have done. It's okay, different standards they have referred to, but the most important standard which they have referred to is SA 240. Let's understand. Okay. So, as I said, I will be giving this. In fact, if you go to vsmartacademy.com, I will share that link in the Telegram channel also. We have created a listing, it's a free of cost. So you go to that listing, go to the login, all the free resources for this attempt you will get at one place, and this particular PDF with class markings will be there, available there. Okay. Now you're supposed to explain that 3 essays are relevant: essay 240, essay 315 and essay 330. And let's talk about essay 240. Then you're supposed to explain as per essay 240 that there is always a presumption that there is a fraud risk in revenue recognition. Yes, it can be rebutted. It can be rebutted. But when it can be rebutted, if single type of simple revenue recognition is there, if there is a single type of revenue, a very simple revenue recognition, single type and very simple. For example, I give example of one building given on rent. Then only it can be rebutted. In this particular case, it is multiple lines of revenue and there are different terms and conditions. It's complicated and even the internal controls are weak. You cannot rebut this presumption. That was the most important thing. Then you need to explain essay 315 also. And what essay 315? Understanding entity and its environment. You should always go and understand entity and its environment, because then only you will understand what are the complicated areas where judgments are required, where there is a pressure, and then only you will be able to identify risk. Identify risk and then assess risk. So they are saying, as per essay 315, in audit, on continuous basis you should collect information, and whenever you get a new information, like they got information about internal controls, that there is a weakness in internal controls, you should identify new risks and you should change the assessment levels. So essay 315 says, understand entity and its environment. After understanding, keep updating your knowledge. As you get new information, change the level of the risk, perform more audit procedure. Same thing is given in essay 330 also. That if you identify risk, there should be specific audit procedures to check that particular risk. There should be response to that particular risk. If you find that internal control systems are weak, you should go and perform exactly where there is a weakness. Now in this case, they are following 315, they are following 330, but they are not following 240. That is their mistake. So you discuss the case again. You say, as per essay 240, fraud risk was required. As per 315, updating risk was required. As per 330, additional audit process is required. And then you say, okay, they have done that, but they have not done, it's not followed essay 240. That is their problem. And then they are applying for 143.12 also, because there is a fraud. and it's a company, there should be fraud reporting also. Very important question. Quickly, first refer to 3 standards, then say what is required as per say 240, 315, 330, discuss the case, and then conclusion. Compliance with 2 standards, non-compliance with 1 standard. And I was happy to see this case in the sense institute has really, this is called implementation of knowledge. They have implemented, okay, this is how it should be implemented in practical life. And that particular statement is very important. Single type of simple revenue transaction. Then only rebuttal is possible. Now, if any student has seen this question once, he will be able to crack it. Come to question number 13. Again, very popular in old course. Very popular in old course. In new course, it is part of the study material 17, study material 21. And the question is about management fraud. Responsibility of the auditor with respect to management fraud. Now, you are supposed to explain now. This is what I am saying, to what level you should retain. That in this particular thing, you are supposed to explain nature of management fraud, how it is performed. You are supposed to explain nature, how it is performed. You are supposed to compare it with employee fraud, and then you talk about responsibility. So first to explain, okay, so maybe you can start with very simple thing. SA 240 fraud that is applicable. You explain management fraud. When the top management people are involved in doing fraud, that's called management fraud. Then you explain how generally it involves 2 things. Overriding control. Top management is so powerful, they can bypass, they can stop internal controls, they override internal control systems. Okay, they can ask employees to switch off the CCTVs. They may not record things on registers. They may ask people not to record few things, and so on. So you need to explain first. They define it. Then you explain the nature, how it is performed. Generally, it involves overriding of controls. But second, it involves complex transactions. They'll perform complex transactions and misapply accounting principles. Complex transaction, they will show sale of goods of rupees 1 lakh, and they will repurchase the same goods after 6 months for 1,10,000. Now it's a very unusual transaction. Why will someone buy the same goods which he has sold, and that too for higher prices? Or they may involve multiple entities in India offshore, and lot of transfers will happen. So generally, top management will enter into complex transaction and misrepresent. Here now it is not a sale and repurchase; it is a financing activity. Sale of good is not sale of goods. It is loan taken of 1 lakh and goods given as security. And then 1,10,000, purchase of 1,10,000 is not purchase of 1,10,000. It is repayment of loan along with interest and stock is received back. So you will explain that generally they do it by two things: overriding controls and then entering into a complex structure, complex transaction which people don't understand, and they will misapply accounting principles and fool everyone. Then you'll explain, compare. If we compare management fraud, employee fraud, people doing it are different. Management fraud is majorly deceiving investors, but employee fraud is about misappropriation. It is difficult to detect management fraud as compared to employee fraud because they are more powerful. They can go for collusion, they can go for concealment, which auditor may not understand. Then you will explain management is one. It is TCWG and management's responsibility to prevent, detect and correct all the frauds, including management fraud. It is their responsibility to prevent it. That is their responsibility to detect and correct it. What is the responsibility of auditor? Always go with overall responsibility. So it's always a bigger thing. Auditor's overall responsibility is to give opinion whether financial statements are as per applicable framework. If it is a fair presentation framework, additionally also specify whether it give true and fair view. To achieve this, go and check all the material items. Are they free from material misstatement? And this whole activity should be done with reasonable assurance. Okay. So now if you know these common points, okay, I will add. So I will add definition. So now if you know, okay, I will explain definition. I will explain nature, how it is conducted. I will compare it with others and I'll explain who is responsible, what is management responsibility, auditor responsibility. So I can remember that chart. I will explain the definition, I can explain the nature. In nature, there are three things. Then, now that's very important, common points. You will see these common points everywhere. You will see these common points everywhere. Common point number 1, 2, 3. First, common point everywhere, section 140, subsection 12. If there is a fraud, 1 crore or more, it should be reported to central government. Section 123, 12. To audit committee, BOD, and then ultimately to central government. Correct? Then, TARO reporting, clause number 11. And then, one more thing, ability to continue as auditor. Ability to continue as auditor, you can come to page number 7, first column, page number 7, first column, situation where auditor is unable to continue the engagement. Let's see. Suppose there is a misstatement in the financial statement, something, suppose he saw that balance as per books is 80 lakhs and actual balance is only 30 lakhs. There's a gap of 50 lakhs. There's a huge misstatement. Cash is overstated. And I think he said he thinks that cashier has taken away the money. He goes and inform management. Tomorrow when he comes, he sees that cashier is promoted. He is given best employee award. There is no action against him. In fact, the cabin of auditor is changed. It has reduced to half. Now this auditor is confused. These are exceptional circumstances. I am suspecting a fraud, or maybe I know that fraud has happened. I've informed management, and instead of catching hold of that fraud and catching hold of people who have done it, punishing them, they are taking action against us, or they are not cooperating with us. This is called exceptional circumstances. If there are exceptional circumstances, do three things. First, think about it, whether as per any law I am supposed to report it. Like as per Companies Act, we are supposed to report it to the central government. Next, think about it, whether you have lost all the faith on the management. If you have lost all the faith on the management, if that is the case, you have lost all the faith, okay, then in that case, if you lost all the faith, think about withdrawing. I cannot continue with this particular people. Audit is a collaborative activity. You give evidence, I check. But I have lost faith on you, I will think about withdrawal. And when you think about withdrawal, because you are breaking an agreement, you are supposed to go and inform all the authorities, ROC, company, ROC, CAG, why you are going against it, why you are breaking the assignment. Inform and discuss with them. Let's freeze, guys. So if there are exceptional circumstances, how many things you will do? Think about it, whether I am supposed to report these circumstances to anyone, and if yes, report it. Second, think about it, should I withdraw? And if you have decided about withdrawing, go and inform and discuss with people about the withdrawal. Now guys, these three are the common points which will keep on repeating continuous basis. Exceptional circumstances. Now listen. Now there is a standard answer. Right now what we have discussed is management fraud. So definition of management fraud. nature, how it is performed, how it is different from others, compare who is responsible, and you discuss these 3 common points. What are 3 common points? Companies Act, CARO, and then Asset 240, exceptional circumstances, inability to continue. Now, if you get question about suspected fraud or actual fraud, if you get any question of suspected fraud or actual fraud, example, there is a big mismatch in inventory, suspected fraud. In cash box, there is cash balance as per books is 2 crore 10 lakhs. In cash box, there is only 10 lakhs. And 2 crores, there is a statement, IOU. Everyone understand IOU? IOU is simple slip, where third party says that within few days, I will bring back and give cash to you. It is authorized, but it's a very temporary thing. But to such a big extent, that 2 crore is IOU. Or, you know that everyone knows there's a debtors ledger. Suppose there's a debtors ledger. Balance as per debtors ledger and balance of, everyone know there's a concept of DLA, debtor ledger adjustment. Listen quickly. Okay, so it was removed from the course. I don't know why they removed it. It was a very simple chapter in accounts. Suppose there's a ledger. So at a point of time, only one person will be able to account. To increase the speed, what they did, split ledger into 3 parts: debtors ledger, creditors ledger, and all remaining ledgers will go to general ledger. So now there's how many ledgers? 3. Debtors, creditors, and in between general. So now at a point of time, how many people will be able to accounting? 3. That's wonderful. Debtors guy will manage debtors, creditors will creditors, others general ledger. But now these ledgers will not tally. General ledger will not tally. Why? Debtors accounts are missing. Creditors ledger will not tally. Why? Creditors accounts are missing. So in general ledger you make 2 accounts, DLA and CLA, debtor ledger adjustment and creditor ledger adjustment. These are dummy accounts. In DLA you will pass entries on monthly basis. Total credit sales, debit. Total money received, credit. Total discount, credit. Total bad debts, credit. On monthly or quarterly basis, you will pass entries in DLA and CLA. This DLA will represent total debtors and CLA will represent total creditors. Now you again make a trial balance. Take general ledger, all the accounts, and use DLA and CLA. If it tallies, that means this general ledger is accurate. If it doesn't tally, that means there is an error. And again, DLA account should match with debtors ledger. All the balance of debtors taken together and DLA account should match. All the creditors taken together and CLA account should match. You know what? These DLA, CLA are dummy accounts. They are introduced to ensure whether general ledger is accurate, whether debtors ledger is accurate, whether creditors ledger is accurate. They are called control accounts. This is what is called as control accounts. So in one of the questions, they will say that there is a big mismatch in debtor subledger and control account. Again, that is an indicator of fraud. Are you getting this point? Okay, so if they say there's a big mismatch in inventory, they may say that there's a IOU. All these are questions. They will say that there's a big mismatch in the debtor subledger and control account. Then they will say that it's very famous that there is a entry of 2 lakh rupees per month consultancy charges. But there are no supporting documents. There are no supporting documents for it. Again, it is a fraudulent entry, that means it is a fake entry. Or they will say that company has appointed special auditor. Special audit, company has appointed special auditor. He has done the audit. He has given the report on suspected fraud, but they are not sharing it with us. They are not sharing that report with us. Basically, they will frame a situation, and all those situations are given here. They will frame a situation. There is a suspected fraud or actual fraud. Suspected fraud or actual fraud. So whenever you get this question, there is a standard answer for all these questions. What is the standard answer? Come to chart book. Page number 7. This is the standard answer. Standard answer, you'll say that as per SA 240. As per SA 240. If you go to audit and you see there's a possible misstatement, you suspect that there's a misstatement, then what you should do as auditor? You should immediately think whether this misstatement can become material misstatement. You should think about it. You should make a professional judgment whether this misstatement can become material mistake. If yes, immediately modify audit procedures. Additional audit process should be implemented. More evidence should be collected to find out the truth, whether there is a misstatement. If material misstatement is if you think a material misstatement can occur, modify audit procedures, additional audit process should be there, it should be performed. Next, if there is an actual misstatement, think immediately, is it intentional? If it is intentional, it is because of fraud. Is it intentional? Is it indicating fraud? And if yes, immediately implication, okay, person number 1, 2, 3, not reliable. All the evidence obtained from them should be kept aside. All the information from these 3 people should be kept aside. Next, this particular location risk should be increased. Whenever you suspect a fraud, there are a lot of implication. There will be implication on reliability of documents. A list will be prepared. These documents are not reliable. There will be implication list of people that whatever these guys says, we are not going to rely immediately. There will be implication on document reliability. There will be implication on whether to rely on people. There will be implication whether to rely on system. And then we may increase risk of some areas and we may perform more audit procedures. So think about implication. Then whenever you get misstatements, we study this in SA 320. Whenever you get problems, you should always think whether maturity level is appropriate. Whether we need to revise it. Whenever you get any big information, you should always think whether I should revise my maturity. So again, think whether you should revise it, and then whether you should revise it, and then find out revise maturity again whether it is material. Go to the management and ask for rectification. First revise maturity level, then again think whether it's material and go to the management and ask for rectification. Ask for rectification, and if they are not doing it, we may qualify or give adverse. Let's freeze, guys. 3 things. Number 1, whenever you go to audit, if you come across possible misstatement, think about it whether it can become material misstatement. If it can become material misstatement, modify audit procedures, perform more audit procedure, get the evidence. Next, if it is a actual misstatement, think about it whether it is because of fraud. And if it is because of fraud, consider the implication on documents, on people, on system, on risk. Consider the implication. Third, think about it whether I should revise maturity, and again think which misstatements are material and ask for rectification. If they are not rectifying it, we'll go for qualification or adverse. These are standard. So now as a person, as a student, you will remember 3 points. There's one very powerful thing, guys. You cannot remember complete statement, but you can remember single word, and you should use this. So if you remember only one single word, possible misstatement, I need to explain one thing. Actual misstatement, I need to explain second thing. Revision and rectification, I need to explain third thing. If you remember these single words, now next is your ability to write it into statement. It is difficult to remember statements. See, students think that they are not using exact language, so they are not getting marks. Point is, they are not retaining points. That's why they are not getting marks. If they retain points and explain that in own language, they will still get marks. But that retention is required. So again, possible misstatement, you write few things. Actual misstatement, again you write few things. Review, revise material and rectification again. And again those common points. Everywhere. Companies Act, Section 143.12, RO, clause number 11. All the frauds which are noticed or reported to management should be reported. RO, clause number 11. And then ability to continue. You will get 2-page big answer. Then you discuss the case again. Don't hesitate. Write the complete case. Length matters. I am not saying to write garbage, but length definitely matters, and you should write it. Complete case again, and then you go and discuss. Conclusion is very simple. Apply points discussed about. Whatever point we have discussed, we need to apply more audit procedure, ask for rectification, etc. So you may not have all these questions in your IMP list. Question was error in valuation of inventory. Even that is a institute. You know, when I talk in Hindi, institute ki mahanta hai, this exceptional thought process of the institute. They talk about error, but they wanted to say there's a big difference. Okay. You are saying error in inventory, that means you wanted to say there's a big difference in inventory, and that means you want us to understand that it may lead to fraud. So it is a suspected fraud. So it is big error in inventory is a kind of a suspected fraud. It was asked it's the old question, November 11 RTP, November 13 RTP, practice manual 17. Again, this was asked, okay, difference in control account. This may not be there in the important basics, so only just listen. This is an example. So big difference in inventory, error in inventory is a suspected fraud. Huge difference in control account is a suspected fraud. IOU in 2 crore 2 crore is IOU, it is a suspected fraud. No documentary evidence, this must be there in IMP list. No documentary evidence to support expense of 24 lakhs, it is a suspected fraud. Special audit report not provided. You guys appointed a person and a special audit was conducted, but you are not sharing with us. That is a suspected actual fraud. Teaming and reading, that you all must be aware. So if you get this question, there is one standard answer for all of them. Okay, we are through with 240 also. Now, today's target, as such, we have thought a lot. At least we should try to do 100 questions. Okay, near that. And when it comes to company audit, we may leave some of the portion of company audit because generally those questions are easy and they're doable. I think big challenge is with standards, and apart from that, then there's a next challenge is retention. So I got this question, how to retain. See, if you, as I said, if you are able to take question to a particular level, that these are the 3 points, these are the 4 points, these are the 5 points which I'm supposed to target. Take each answer to that level, and then comes revision and the last day revision. if you have overviewed a particular concept one day before the exam, there is a high probability that you will retain it and reproduce it. So I will say retention in itself is a journey. It starts with conceptual clarity and then it moves to next. These are the points. This is the way to remember it. This is the practical life audit flow, or this is the mnemonic, or this is the story, or this is how I will remember. And then third is, now you have to revise it again and again, and even last day, one day before the exam. So when you go through this particular journey, you get the confidence and you retain. Okay. Now, next is now essay 250. It's very simple. What are roles and responsibility? Oh, this question is not there, sorry. Okay. There's a very famous question. Very famous question. And see, so many times it is there. May 18 RTP, 20 mock, 21 mock, 22 RTP. It has been repeated again and again. So the question is, it's very simple, that in one of the factory, auditor observes that children are working. Children are working, so it is a suspected non-compliance or actual non-compliance of law. Child Labor Act. So the suspected non-compliance or actual non-compliance, auditor comes across it. What is he supposed to do? That is the question. Okay, what is he supposed to do? Because management says that it is outside your scope. You are not supposed to check all these things. Okay. Yes, sir. What could be the answer? Yes. If it affects financial statements, so affects on, yes. We should we should see compliance with law, rules and regulation. Okay. Now, first of all, so one thing which they have not discussed at length at this point, but then we study this in basics of essay 250, and as I said, when you will see that there is one more FADU chart revision, I will be discussing that thing also. Auditor is supposed to identify laws which have direct effect on financial statements, and he's supposed to check compliance. Then others laws where there is a material effect, where there may be material effect, he is supposed to check non-compliance. That means only two things. Non-compliance means only taking two things: inquiry and checking correspondence with regulatory authorities. What kind of letters have been exchanged? That's it. Are you getting this point? And apart from this, if there are any other laws, only when there is suspected non-compliance, supposed to perform audit procedure quickly. As per essay 250, auditor is supposed to divide all the laws in three parts. Number one, laws having direct effect. That means industry specific laws, schedule 3, which has direct effect on financial statements, income tax, GST, direct effect on income expenses, laws which are industry specific, have impact on income expenses, asset liabilities, or has impact on financial statement format, presentation, disclosure, they are called direct effect. He is supposed to check compliance. And laws which may have material effect, he is supposed to check non-compliance. Checking non-compliance means doing only two things: inquiry and checking correspondence. You got the difference? Checking compliance means doing everything to check whether the law is complied with. Checking non-compliance with performing only two things. And All other laws, he is not supposed to perform anything till the time there is a suspected or actual non-compliance. So first of all, we'll say that as per SA 250, this is definitely within the scope of auditor. This is definitely within the scope of auditor to go and understand and examine this particular matter. Client is not correct. Next, what is he supposed to do? Come to page number 7, middle column. Whenever he gets information about suspected non-compliance or actual non-compliance, quickly go and understand the nature of act and circumstances. Go and understand. First of all, understand what law says, what Child Labor Act or important section says, rule says. Go and understand that. Go and understand what is happening. Okay, there were 40 children working in particular premises. They were doing some packing work, and you spoke to them. What is the age? And you suspect that they are underaged. Then you talk to them that who introduced you guys to here? They say, this is one of the contractor, and he has brought us here. Go and understand the circumstances well and understand law, rules, regulation first, then what circumstances are, and quickly find out whether there is an effect on financial statements. Are we supposed whether provision is required for penalty, whether license will be cancelled and is it affecting going concern? Understand the impact, whether provision will be required, whether going concern need to be evaluated. After you do this in your cabin, then go and discuss with TCWG and management that this is our analysis. This is our understanding of law, rules, regulations, circumstances. This is what we think is the effect. You tell your version now. And they will say, oh, no, we are not at fault. We have given that place on lease. That is not our work. We are not at fault. The person who has taken that area on lease, he is responsible. Okay, show us the evidence. Understand their point of view also. That's equally important. If they doesn't give sufficient appropriate evidence, go for legal advice. You are not cooperating, you are not giving information, you are not helping us interpret the law. We'll go and discuss with the lawyers. If still no sufficient appropriate evidence, modify, we may give qualify or disclaimer as the case may be as per 705. Also consider effect on other aspects. This again and again. Are we supposed to increase risk? Are we supposed to mark people as unreliable? Documents are unreliable. Written reprint as unreliable. So let's freeze, guys. So you are supposed to explain. This is within the scope very much. SA 250, it is within the scope. Then you are supposed to explain that if there is a suspected or actual non-compliance, first understand law, rules, regulation and circumstances. Understand the effect on financial statement. Then go and discuss with TCWG and management. Understand their point of view also. If you're not getting information, then go for legal advice. Still you're not going for information, you're not getting information, modify opinion. Finally, after considering effect on financial statement, consider effect on other aspects. In across the standard, they keep on discussing this. Take effect on other aspects, and other aspects is again whether increasing risk, whether increasing audit procedures, whether marking people as unreliable and so on. So that would become, so it is definitely very well within the scope. We already know that we divide laws in 3 parts. You discuss divide law in 3 parts, and that's how we respond. It is within the scope. That is the first thing you target. And the next is this: what you do when there is a suspected or actual non-compliance. You discuss the case, and then in the conclusion, there is a conclusion that ensure that proper accounting is done. If you're not getting information, qualify disclaimer. If you're getting information but they are not doing proper accounting, qualify adverse. Quickly. So whenever you get this question, first target within the scope and then target what to do if there is suspected or actual non-compliance. Next come to SA 260. Okay. So it's a May 22 RTP question. May 22 RTP question. During the audit, you are facing many problems. People are not cooperating. They are not giving information. They are giving late information. Okay. So what will you do? So that is called a significant difficulty. That particular thing is called significant difficulty. May 22 RTP question. So let's understand. I said 260. Page number 8. Okay. So everyone know essay 260? Communication with those charged with governance. TCWG. There's a list of matters, and in the FADU session, I take those matters. Immediately after appointment, there is some communication. Then before starting audit, there is some communication. See, this is the way to remember it. Each and every chart, you will find some flow, practical flow or some shortcut in which you can remember. After appointment, there is some discussion. After appointment, there is discussion. Before starting the work, there is a discussion. During the audit, there is a discussion. After audit, before signing, there is a discussion. Other matters, and in listed companies, you may discuss more things. Okay, so this is a sequence, you can remember all the matters. Anyways, significant difficulty is one of the matter that should be discussed. So the question was, what will you do if there is significant difficulty? Generally, students will go and say, qualify disclaimer. If you are facing problem, you are not getting evidence, you qualify or give disclaimer. Qualify disclaimer, okay. Significant difficulties, let's understand. You need to explain as per essay 260, if during the audit you come across significant difficulty, you are supposed to go and inform TCWG, those charged with governance. And if they are not able to, and you should see at the end, if they are not, if this significant difficulties, whether it is restricting you from collecting evidence, whether it is becoming limitation on scope. If there is a limitation on scope, you are not able to collect sufficient appropriate evidence, then you are supposed to modify opinion. If it is affecting one or two items, then qualify. If it is affecting many items, then disclaimer. Now let's understand significant difficulties. It's in a sequence of audit process. Now, student will not get mark if he is not explaining what is significant difficulty. If student simply goes and explain the response and is not explaining what do you mean by significant difficulty, he will lose marks. This is why you need Q&A practice. Having knowledge is one thing, and then applying it is one thing. So if there is significant difficulty, give reference of essay 260 and then explain what do you mean by significant difficulty. Now, example, you go for audit, you get very brief time. You ask for 2 months and they say that finish off within 1 month, we don't have much time. If you are getting very less time, it is a significant difficulty. Then after getting less time, they are putting restrictions. You cannot visit so and so place, you cannot see these documents, you cannot talk to people, significant difficulty. Then unavailability of expected information, depreciation working should have been ready. It is not there, significant difficulty. You are taking a lot of time, instead of 1 or 2 days, you are taking 1 or 2 weeks, significant difficulty. Unexpected efforts, I am supposed to walk 2 kilometers to get one voucher. It's unexpected hard work, you are expecting unexpected efforts. Not willing to extend or give more details about going concern. See, it's a sequence. First of all, when you went to do audit, there's a brief time, less time. And after that, there are restrictions, limit restrictions. You cannot go and do this, that. And then when you went ahead, you're not getting expected information. Whatever you're getting, there is a delay. There's a lot of unexpected effort. Okay. Expected effort and finally going concern. That's called significant difficulty. You need to explain. These are the example of significant difficulty. And you should see if it is resulting into limitation on scope. And if it is resulting in limitation of scope and not getting resolved, you are supposed to take opinion on, you are supposed to take effect on opinion on financial statement. Again, guys, people will lose marks if they are not going to explain significant difficulty. And it may happen, they may write only facing many problems. They may not write significant difficulty word. You'll have to understand that they are targeting significant difficulty. Okay, this is very simple. It is in study material, so it is there. It's very simple. Communicating to shareholders versus communicating to TCWG. Communicating to shareholders happen as per communication to shareholders is nothing but audit report. Nothing but audit report. So communication to shareholders happen as per section 143, subsection 2 of Companies Act and SA 700. And communication with TCWG happens as per SA 260. There are different law and standard governing both. Objective is different altogether. Communicating to shareholder overall objective, whether financial statements are as per applicable framework, whether you give true and fair view. Here, objective is to keep TCWG informed about all the matters which are happening right from the inception. It's a win-win situation for both. TCWG will be able to understand what is happening in the company, take better decisions, have better governance, and auditor will get a lot of insights which otherwise he is not having. It's a win-win situation for both. You have to give list of the matters which are explained. Communication to shareholder is not confidential, it's a public document, audit report, but communication to TCWG is a private document. It is never disclosed in the public. So you need to explain as per which law and standards people are doing it. You need to explain what are the objectives and content, and then to explain that one is confidential and one is not. It's very simple. Quickly, we have seen a lot of standard asset, and in fact all these standards, these are targeted. These questions are from recent MTPs, RTPs and study material. It is never like that. You should never focus on 200 series. They will ask question from 200 series, and if you're not able to answer, it's a problem. Quickly, we have seen 200, 210, 220, 230, 240, 250 and 260. Okay. Now this is again very interesting. This is a lot of points. Even the second case is very interesting. Okay, both the cases, let's discuss one by one. So there are three joint auditors. And each one of them have appointed their own actuaries. Three joint auditors are there. They have appointed their own actuaries, and there's difference in actuarial report. Mr. X and Y, Mr. X agreed to Mr. Y's actuary report. So X and Y say that this one particular actuary report is correct, but Z says that no, I have a different opinion. So there is difference between three joint auditors. Fine. Now there is a dilemma what to do, whether we should follow majority rule. Out of three, two are saying one thing. Are we supposed to follow majority? So they say, now this is very interesting. They are talking about that there's a difference of opinion. So they should have asked how to tackle this difference of opinion, how to report. But they have asked, explain responsibilities. Question is about reporting. But in the last line, they are asking, write responsibilities. You should write both. You should explain responsibility part also, and you should explain reporting part also to be on safer side. Then next question is again very interesting. That there are three joint auditors. They have divided work, and they have kept consolidation of the branches as a common area. Okay, we all know in joint audit there will be some divided work and some undivided work, common areas. So they say that okay, we have divided our work business wise, but then consolidation will be checked together. It will be common area. All the branches and zones were divided in three joint auditors, but it happened that one of the auditors is concerned about internal controls in one large branch. He feels that controls are not proper. Mr. Z, one of the joint auditor, expresses a concern about internal one of the large corporate branch situated in zone. Irregularity was not reported in the final account as the other two joint auditors are not in favor of reporting, and decision of not reporting the same was taken on the basis of majority. One of the auditor feels that internal controls are not good. We should go and take more audit procedures, do something, we should report it. But they all met, they discussed it, and they said that we should not report it. Subsequently, fraud was detected in that branch. Who will be responsible? Okay, first of all, in this particular question, we are targeting two concepts. One is responsibility of joint auditors. Responsibility of joint auditors, and second, we are targeting reporting. And it's a very wonderful case. The second one is very interesting. And the interesting is that one of the auditor was performing that audit of a particular corporate branch. He came across a problem. He went and discussed with everyone, and they decided by majority rule that it should not be reported, and subsequently fraud was detected. Who will be responsible? All the three? Only the person who was doing that branch, or only the two people who said no to reporting? Came in notice of everyone, all of them, because area was divided to that particular. Let's see, guys. Let's see the chart of responsibility. Then we'll come to the answer. Number one. First, you need to explain in which areas there will be a separate specific responsibility. All the work which is divided, this is your branch, this is your branch, this is your branch, everyone is responsible for their individual areas. If something goes wrong, they will be responsible, they will be answerable, accountable, and they will be punished. So in this case, we'll see this case, if work is already divided, branches are already divided, respective auditor will be responsible. Fine. Then you further explain risk assessment of that particular area is a specific responsibility. After risk assessment, understanding internal controls and evaluating it, testing it, it is a specific responsibility. You cannot say that other auditor has performed risk assessment, so I will not perform. Other auditor has performed a test of control, so I will not perform. I will have to perform my own. Then deciding NT, nature, timing, extent of substantive procedure and performing it, again it is a separate responsibility. So guys, first all the work which is divided, it falls in specific response. Then further elaborate in that risk assessment of that area, test of controls of that area, nature, timing, extent of substantive procedure of that area, everything goes to specific responsibility. Okay. So as per this part, we may think that Mr. Z, who was given audit of particular branch and their things went wrong, he will be responsible. He was given that branch and fraud is detected in that, so he is responsible. But next, joint responsibility. All the work which is not divided, consolidation not divided, joint responsibility. DTA, DTL not divided, joint responsibility. This will go in joint responsibility. Now again, all the decisions, risk assessment of common areas, joint responsibility. Understanding controls of common areas, joint responsibility. Performing nature and extent of further audit process, common areas, joint responsibility. Don't just stop that area and all the responsibilities with respect to that area of risk, then test of control, then substantive procedure, joint responsibility. And then there's very interesting point. If any matter is brought into notice by one joint auditor to all other joint auditors, by other joint auditors on which there is an agreement in which they have agreed with each other, how it should be tackled, then all the joint auditors will be responsible. Are you getting this point? In this particular case, he brought the matter to it. He informed everyone about the matter and they have taken decision together and they have applied which rule? Majority rule. That was not required, but then the other person agreed to it. Even he will get response. Now in this case, fraud was related to particular branch. So particular joint auditor was responsible. But moment he brought it to the notice of everyone and everyone took the decision together, it became responsibility of all. So that's very important that because it was informed to everyone and everyone took decisions together, it will become responsibility of all the joint auditor. Once again, area is not divided, joint responsibility. Everything of that area, joint responsibility. If any matter was brought to notice of other joint auditors and there was a common decision, again it will be a joint responsibility. Are you getting this point? Then three things, always joint responsibility. Compliance of law, rules, regulation to financial statement, schedule 3, all the law compliances, always joint responsibility. Presentation, disclosure of financial statement, notes to accounts, appropriate, always joint responsibility. Audit report prepared as per law, regulation, standards, always joint responsibility. Are you getting this point? Quickly, 6 points are there. Common areas, their work, and brought to notice of everyone, joint. Then always compliance of law, presentation and disclosure, and then audit report, always joint responsibility. So in this case, it's a very good case. It's a very good case where you will say that further during the conclusion part, audit of zone CSZ, one of the joint expressed concern about internal control was not reported as two joint auditors were not in favor. All the three joint auditors will be held responsible. That was the conclusion. Again, very interesting case. Very interesting case. Okay, which students may generally miss. So need to explain responsibility and very important point of notice. Is this point clear? So what is the answer if you remember? Okay, I will explain divided work and all three things of divided work. Undivided work and all three things of undivided work and matter brought to notice of everyone. And then three are always in joint. Law compliance always in joint, presentation always in joint, audit report always in joint. And then next you're supposed to explain the next part, reporting. Again guys, listen, they are not asking about reporting, but in the first case, okay, we will have to talk about reporting. So whenever auditors are ready with their opinion, they should meet and discuss it. Before finalizing their report, they should meet and discuss what should be written in the audit report, what opinion should be given. If they agree to each other, give a common audit report. If they agree, there is a consensus, they agree to each other, give a common audit report, whatever it is, clean, qualified, adverse, disclaimer, whatever it is. But if there is a disagreement, then not bound by majority rule. No need to follow majority rule. There will be a separate audit report. People who are agreeing to each other, they will issue a combined audit report. Person who is not agreeing to it will issue separate audit report. And the good thing will be, there will be OMP. In combined report, they will say that there is one more separate report, refer it. In separate, they will give OMP, other matter paragraph, they will say refer combined report. They both will refer to each other. So both the chart needs to be explained about responsibility also and about audit report also. Okay guys, we are through with 200 series finally. And in 300 series, we're directly seeing 320. Sir, why not 300? Because that part of second chapter. This part of second chapter. So we are through with 200 series. It took us 3 hours to see important questions. But as I said, it's very important to take each question to a particular level. Then only you'll be able to write and reproduce it. Now, next is 300 series SA 320, that is materiality. Okay, listen. So 43.000. During the year, significant contractual arrangement. There is an auditor of company. There is a significant contractual arrangement that draw attention to a particular aspect of company's business. So what do you mean by that? So during the year, aspect means part. So we are conducting audit, and while conducting audit, there is one big contract. It can be regarding particular part of the business. It can be expansion of the business. It can be buying a business. It can be selling a business, buying a business, selling a business, and so on. So a very big, a particular part of the business is a big contractual agreement, arrangement that draw attention to particular aspect of company's business. People are focusing on one thing a lot. Company, he wants to re-evaluate the maturity concept. Please guide. Because of this, they want to re-evaluate maturity concept. Please guide. Then there's again, can maturity at the time of planning and the time of evaluation of result can be different. They are not using the word revision. So we need to understand that re-evaluating maturity, that is, they are talking about a revision of maturity. Okay. Now, let's say they're focusing on 5 things. So this question is about revision. But when you see answer, they're explaining a lot of things. So as a student, you need to know, okay, they're talking about revision, but they need to explain a lot of things. First, they explain different types of maturity in short, quickly. In any audit we go, initially we compute a maturity, and the first maturity we compute is financial statement level maturity. What is financial statement maturity? Explain. So initially in any audit, when auditor goes, he computes financial statement level maturity. Now, financial statement level maturity, tell me how we will compute TBD level maturity, transaction balance disclosures. Suppose financial statement level maturity, very famous way is 5% of profits. 5% of profits. Suppose that goes to 5 crore. What will be maturity for fixed assets, investment, current assets, current liabilities, incomes and expenses? Yes, same. Generally, maturity decided at financial statement level, same maturity will be for transaction balances and disclosure also. How come? If you are saying a misstatement is material at 5 crores in financial statement, on same lines, misstatement of 5 crore will be material if it is in fixed asset or investment or current assets or current liability or income or expense. So you will explain generally maturity is decided at the initial level, at when you are making strategy at the initial level. Maturity which is decided at initial level, financial statement level, the same maturity is applicable for TBD level also, same maturity generally, but if required, you can have lower maturity for particular area. For example, if you think that penalties are sensitive, people are focusing a lot of penalties, users are focusing a lot of penalty, you can have 2 crore maturity for those penalties, not higher but lower. So we'll explain. We decide maturity at initial stage, financial statement same is there, but if required, we can have lower level maturity if required only for particular TBD, transaction balance and disclosure. So explain that. Then explain, you are aware what is performance maturity? Any maturity which is below maturity is performance. Okay. Anyone, what is performance maturity? Come to page number 9. Page number 9, middle column. Okay. It's very simple, straightforward. No audit is foolproof. Every year we come to know that there were misstatements in last year. Every year out of experience we come to know there were some undetected misstatements. Undetected misstatements in last year. We always come to know this, and this is happening because of inherent limitations of audit. Audit is not foolproof. We always come across situations where there are undetected misstatements. Suppose on average we came to know there are some undetected misstatements. Okay, so we asked, let's make an estimate. How much undetected misstatement? So they said to the extent of 2 crores. Okay. On an average, every audit we complete, there are undetected misstatements of 2 crores. Fine. So part of the maturity level, suppose 5 crores is the maturity level, part of the maturity level should be allocated, deducted for covering undetected misstatement. That's called haircut. Cut it, haircut. So inform team, out of 5 crores, 2 crores is deducted for undetected misstatement. Now onwards, while performing audit, whether it is planning or test of control or substantive procedure or whether to give opinion, you will use only remaining 3 crores. And that 3 crores remaining amount is called performance materiality. Because the whole work will be performed as per that performance materiality. What is benefit of doing this? By doing this, we can do one thing. What? Listen. Our team has ensured that uncorrected misstatements are within 3 crores. Within 3 crores. Performance materiality was 3 crores. Team will ensure that material misstatements are within 3 crores. Because if moment they cross 3 crores, we will report it. So we'll ensure that it is within 3 crores. Now, what will happen? Undetected misstatements are within 2 crores. Uncorrected are within 3 crores. Total misstatement will be within 5 crores. It's very simple. Take a parallel example. You're doing planning, budgeting your expenses. You should always set aside something as unexpected expense. Always set aside something as unexpected expense, and remaining should be planned how you are going to spend it. By doing so, you will never go beyond your budget. On the same line, something should be allocated to undetected and only remaining should be used. By doing this, total misstatement will never cross the limit. Okay. And we'll be able to conclude whether financial statements are free from material misstatement. And one more thing, performance maturity is computed for both. Suppose 10 crores is the total maturity level. Haircut is 3 crores. Undetected haircut for undetected misstatement 3 crores. What is remaining? 7 crores. That is called performance maturity. Performance maturity will be computed for both financial statement level 7 crores and TBD level 6 crores, then 7 crores, 4.2 crores. So if you have two maturity level, there will be two performance maturity levels also. Is everyone clear about this? Yes, no? You got this point? Some portion is deducted and remaining is called performance maturity. By applying this concept, misstatement will always remain within total maturity level. Okay, let's see guys. See, now the issue is you need to understand if there is a revision. I will first explain what is overall audit strategy, what is area level strategy, then I will explain performance maturity should be computed for both financial statement as well as area level, TBD level. Okay. Then next, what are the uses? Planning phase, performance, evaluation of misstatement, uncorrected misstatement, opinion. These are uses of materiality. And yes, materiality can be revised. Computing materiality is not one-time activity. In fact, in audit, nothing is one-time activity. We can always go and revise it. If you get new information, additional information which was not there available earlier, shall revise financial statement materiality, TVD level materiality, if auditor gets information which was not available initially. If can materiality level increase in revision? Yes. It can increase or it can increase also, it can decrease. In performance materiality, that will not happen because you make deduction. So always it will be on layer side. But here materiality level is, suppose it can be increasing also or decreasing. If it is decreased, common sense, if materiality level is decreased from 20 lakh to 2 lakhs, you need to work hard or less? Hard. Because earlier 20 lakhs was what? Materiality level. Now it is only 2 lakhs. We need to check even small items and we need to focus even on small material misstatements. Are you getting this point? So moment materiality is lowered, you need to check a lot of things, a lot of efforts are going to increase. Revise performance materiality and NT of further audit process. Revise, if it is lower, revise materiality level, revise performance materiality and further audit procedures also. And then what could be the reasons of change? Let's freeze, guys. They have given a lot of things in one answer only. Quickly, essay 320. And the question is whether you will re-evaluate. Okay. So first we'll explain types of materiality. We have financial statement level, then TBD level, and then we have performance materiality. Then we will explain the uses right from planning, risk assessment, evaluation, open formation, everywhere it is used. Can we revise it? Definitely we can revise it. If you are getting new information which are changing your understanding, you can definitely revise it, no problem. If it is you are lowering materiality, you may increase audit procedures also. Finally, reasons of change. This is the core answer. This is the core answer. Reasons of change. Change in circumstances. Change in circumstances. Okay. Now, suddenly company decides to close down a particular business. So we'll have to change materiality of that particular business, particular branch. Change materiality of that particular branch. Or, okay, there was a question. So I just told you that 5% of profit is a very popular way of deciding materiality. Suppose they are going to close down one business. So what will you take? Profit before tax from continuing operations or profit before tax, total profit before tax? You're understanding my question? Yes, no? Yes, no? Question is very simple, that we took profit as a base, we applied 5%, we got materiality level. Now the one of the business is getting closed. So should I segregate that and then apply 5%, or I should ensure it is there and then apply 5%? SA says you should take profit from continuing operations only, and that's common sense. Schedule 3, you know that all the incomes and expenses are from continuing operation, and all the income expense from discontinuing corporate, they are clubbed in one line, and only one line is written. When your income and expenses is only continuing operation, then your materiality level should also consider only continuing operation. You may get a question in exam. These are total profit, this discontinuing operation, compute the base and apply the percentage. You will get expected materiality level. If there is a new information, there is a fraud, error, increase in risk, change in understanding of entity and its operation after performing further, you think risk levels were not appropriate, you increase the risk. You increase the risk. So listen, if you increase the risk, that area will become sensitive. Yes, no. If that area has become sensitive, then you will reduce the maturity level and ensure more things are checked. If any area becomes sensitive, directly reduce maturity level and do more checking. Let's freeze once again. First, we'll explain types of maturity. Types of maturity. Then you will go and explain it is uses. Then you explain yes, revision is possible. And if revision is on downside, you need to increase audit procedures. And last, you'll explain three reasons. Change in circumstances. Why change in circumstances? Things have changed altogether. Example is given. Major part of the business getting sold, change in circumstances, new information which is received, or finally, change in auditor's understanding. If any of these three things happen, then we will revise our maturity level. Next is asset 330. Again, very important question, number 21 RTP. Okay, I understand. Only 45 minutes to go for break. So I generally मैं जहर सुनाता हूँ. ठीक है. What is जहर, sir? Okay, something which you, in fact, yesterday I posted a video. So to kill one frustration, you need one more, bigger one. Okay, that's the only solution in life. Instant relief from one frustration you get when you have one more. In fact, yesterday I posted there is life is all about going from one problem to another. If you're thinking that CA final is the only problem in life, okay. So once you conquer it, there will be something else. Then there will be something else. There's something else. There's something else. There's something else. So it is simply going from one problem to another. Why I'm saying this? There will be always problems. So, sir, we should stop working on that. No, you should not let them overpower you. There will be always some problem or the other. Always. You become chartered accountant, there will be problem which job to join. Then there will be a problem how to get a promotion. Then there will be a problem should I shift to practice. Correct? When that problem gets over, I should get a good girl or boy as the case may be. Then there's a problem tuning should match. Correct? Then there's a problem I need a bigger home. Then there's a problem where to invest a lot of money you have. Then there's a problem you will be tensed. Oh, I have given my money on interest to someone, whether he will default, he will not going to repay. Then you go ahead, there will be a problem whether my health will be okay. Then there will be a problem whether someone will break the contract. Okay, what I'm saying will be always problem, sir. You are motivating us or demotivating us. What I want to say, because there will be problems, don't let these problems have a lot of impact on you. It's very simple to deal with them. Very simple. You simply need to ask yourself what is your purpose. Like your purpose is to become a chartered accountant. Someone would like to save a lot of taxes. Someone would like to help people converting black to white. Okay. Someone will say that I want to create a fintech or whatever it is. Define that purpose. And then simply decide one thing, what best I can do in next 2 hours. Nothing more than that. So students, lot of time they do excessive planning. This chapter, this pages, number of pages in number of hours. Excessive planning. They will spend 20 to 30% time in planning. And they will go to the minute detail with Excel sheet. Proper Excel sheet. And they will think, I am the most hi-fi student ever. I have Excel sheet plannings for everything what I do. So they will make all the plan, but they won't be able to execute anything. When it comes to execution, there is one big zero. Why? They are putting a lot of pressure. There's so much pressure, so much pressure, so much pressure that you don't feel like studying. And during this pressure, you will enjoy everything. You like test matches because you simply want to run away from the pressure. People will read a lot of news, which is useless. It is not going to impact anything in your life. What Modi does or Rahul Gandhi does doesn't matter in your life, but you will show a lot of interest. What Ukraine and Putin are doing, you will discuss, you will worry that also. You see, so you're simply running away from pressure. Because you have created a lot of pressure on yourself, you're going to mobile again because it gives you relief. You're running away from pressure, you're running away from things. What is the solution? Cut down the pressure. You understand only one thing. You have only one thing in your hand. How can I utilize my next 1 or 2 hours properly? If you simply focus on that, let's make these 2 hours better. Nothing more than that. This will make your day better, this will make week better, month and everything better. So anything in excess is useless, and even planning. Even excessive planning, it is useless. That just creates a lot of pressure, so don't do that. So solution is don't take a lot of pressure of any of the problems because they will be there always. You have to live with them. Simply define your purpose, repeat that purpose 2-3 times in a day, and next, what I can do in next 1-2 hours, and keep going. Correct. Now, very interesting question. So before that, I thought some time pass is required. जहर रह गया बॉस. So अब जहर वो हिंदी में बोलना पड़ेगा अपने को. So some of you may connect, some of you may not connect, and some of you may be aware of the जहर also. ठीक है. तो जिनको पता है पोपट नहीं करेंगे. So what is जहर? It is a bigger frustration. ठीक है. चलो क्या सुनाएंगे? किसी को एग्जाम्पल लेंगे? तो आपका नाम सर? अक्षय. So Akshay, when he was a baby, moving in diapers, correct. He used to like a lot of sweet things. So he used to like a very, what, Bonvita. So he used to like a lot. So he used to eat a lot of Bonvita. So one day while playing, it happened that by accidentally he pushes that bottle from the window. It falls down on the ground. So he gets frightened. He goes away from the window. Okay, fine. It is not there. So after 2-3 hours, uh, one black cat comes and she has a good look at the Bonvita bottle. She watches bottle for an hour. And then suddenly she starts pushing the bottle. She takes the bottle behind the tree, digs in one hole, and then pushes that bottle inside it. Again, fills it up, sits on the bottle for an hour, sees here and there whether anyone is there or not. And then after this so the whole process take around 3-4 hours. And finally she goes away. So what nonsense. So the point is, so this is there. Okay. कमजोर दिल वाले नहीं सुनेंगे. Some people may get a heart attack for listening. What nonsense is this? ठीक है. और ज्यादा लॉजिक लगाएंगे तो you cannot apply a lot of logic. Okay. Okay. Anyways, so the point is why she does it. Come on, some answers. So this will boost creativity also. हाँ, only if someone is aware, जिसको पता है पहले से पोपट नहीं करेंगे. Let's not spoil the. Why will this black cat with golden eyes? Why she's doing it? How come we know why? The complete concept is nonsense. What is he doing in diapers? We don't know. Why what he's doing in bottles? We don't know. Why that black cat comes? We don't know. Why she's doing it? We don't know. Okay, मैं बता रहा हूँ. Some people will understand it in one go. Correct. Some people may understand after some time. Sometimes they understand when they go back home. Correct. So sometimes students will laugh, smile because others are smiling. But they have not really understood what has happened. Then they'll smile once again when they'll understand. Then they'll smile once again. Oh, I didn't understand that time. Okay. So it's very simple. Because ऐसा तो होना ही था. It was simple. Because on every bottle it's written Cadbury's Bonvita. Cadbury's Bonvita. My God, never day. बोले मारो मुझे कोई तो उठा लो बोले. That was such. They lost faith on me. That's why when I start the class or on first day at least I never say hell. People will start judging me. What nonsense is this? But that's what I said. To kill one frustration, you need one more. So kill frustration of studies, you need one more frustration. Students all say, "Sir, padhao, padhao. It's better you teach." Okay. Now, next is essay 330, and there are a lot of things into it. Again, it's a mix of a lot of things. It's a unique question. So what is the question? While formulating, the question is, manager says that I want to rely on internal controls with respect to related parties. You all must be aware in India and across the world how to tackle related party things. It's very simple. Law standard says that they give definition. Identify related parties. There should be approval before related party transactions are conducted. Then once they are conducted, there should be a records, register under section 189. Record should be there. And after records are maintained, at the end of the year, you should make a summary of all related party transaction, and summary should be disclosed in notes to accounts. Relationships and summary of transaction should be disclosed. 4 things should be done. To do this, you need very good internal control system to identify whether a party is a related party, to ensure proper approvals are taken, then proper records are kept, and after records, whether proper disclosures are done. So auditor is saying to do all these 4 things, you need good systems in the company. You need chartered accountants, company secretaries, softwares to identify approvals, then record and disclosures. You need people, you need softwares, you need registers for that. And this thing is done by internal control. So auditor has decided, is thinking about relying on internal controls which are used by management with respect to related party. Whatever controls management has designed for related party. Okay. Then, so for this, he will have to test those controls. For this, he will have to test those controls Can Mr. use the evidence obtained regarding operating effectiveness of control, identification, disclosure of related party and transaction in interim period? Sir, what is interim period? You know interim financial statement, that means monthly, quarterly financial before year end basically. Okay, so let's understand. The question is, the person has gone for audit. There is huge related party area, lot of related party and transaction, and he's planning to rely on internal controls on related party. And then he's saying that I'm planning one thing, that I will perform test of controls on interim date. On which date? Interim date. Interim date means suppose 30th September or 31st of December, I will perform tests. And I will rely on the results of those tests. So when you perform audit procedures before year end, in the middle of the year, that's called interim testing, interim period. So, comment. Let's understand this. So first you need to explain that SA 550 rated party is applicable. SA 550 rated party is applicable. What SA 550 says? You go to any audit, first go and obtain information about rated party, understand, is that area risky? Is that area risky? For example, if transactions are happening are not at arm's length prices, it is risky. There's a complex structure, hundreds of entities are there, cross-holding, risky. So go and find out whether related party relationships and transactions are risky. If they are risky, go and perform FAP. FAP stands for further audit procedures. In that, first we perform test of controls. Go and test those controls and then perform substantive procedures. Substantive procedure include two things, that is analytical procedures and then test of details. Yes, no. So SA 550 says go for risk assessment, then go for further audit procedure, go for test of controls, and then go for SAP. So as per SA 550, we should go and test controls. Then SA 330 also says you should go and perform test of controls. But you should go and test only which controls? Relevant controls. Only which controls? Relevant controls. Can anyone explain what is relevant control? There are two types of controls come in relevant controls. Number one, listen, when you are understanding entity and its environment under SA 315 and you are finding out risky areas, so you identified inherent risk. Which risk? Inherent risk. For example, there is an inherent risk in retail business, in cash and stock. In cash and stock. In every business, they will find inherent risk. We'll discuss it. So you found inherent risk. Or let me quickly say, what is inherent risk? You go to any business, for some time you assume that there are no internal controls. Then you will understand real nature of the business, real nature of the people, and real nature of the items. And then you will think where material misstatements can occur. And all those areas will be marked as inherent risk. So for in retail, if you assume there are no internal controls, you know a lot of manipulations will happen in stock and cash. Moment no one is supervising, people will take away the stock. So there is a risk in stock and cash. So in all the businesses, you will get inherent risk. Moment you get inherent risk, you call the management, come here. So these are the inherent risks. Tell us, are there internal controls to compensate it? Yes, we have internal controls. We have two cashiers. Okay, so two cashier system. Very good. Next, whenever there are two shifts, two cashiers. Okay. Whenever cashier comes, there is a thorough check. He is supposed to keep all the cash in the locker. When he comes, he should not have any cash with him. When he sits on the counter, there is a CCTV and it is written there, every receipt payment there should be a voucher. Everything should be accounted. Great. As his shift gets over, he puts money in the envelope, he matches with the system, whatever cash collected during the period, he writes it. Same is done by the second cashier and everything is deposited next day in the bank as it is, 2 packets. Cashier 1, cashier 2, different entries are done. Very good internal control system. You ensure that no cash is taken, nothing deposited, nothing is unaccounted. Very good. We'll make note of it. This is a very good control. It is compensating inherent risk. It is a useful, and I think prima facie this control is working. Those controls are marked as relevant controls. Controls which compensate inherent risk and which we identified while identifying RMM, risk of material misstatement. They are called relevant control. Now, one more thing, inherent risk and then chances that control will fail is control risk. We combine both, we get RMM, risk of material misstatement. So as per SA 330, we should definitely go and perform test of control, only relevant control. Number 1, all the controls while assessing risk of material misstatement, in that inherent risk and control risk, some controls were identified as important and relevant. Those controls should be checked. Next, nowadays they are highly automated areas, automated systems. For example, share market is highly automated, banking is highly automated, IRCTC train booking is highly automated, e-commerce is highly automated. They are fully dependent on system. These are the area in which we cannot bypass test of control. In other areas we can bypass test of control. Test of control is a intermediary step. In small business we think controls are not that good. Bypass test of control. Directly perform substantive procedure. Are you getting it? Yes, no? Yes, no. But then they are saying that if area is highly automated, substantive procedure alone cannot provide sufficient appropriate evidence. So all automated areas, you will say that controls are important and relevant. It should be checked. So first explain, as per SA 550, we should go and check controls. As per SA 330, all relevant controls should be checked. Wherever we expect that control can compensate risk, they should be checked. Or highly automated areas where audit substantive procedure alone cannot provide sufficient appropriate evidence, they should be tested. And further, if you are planning in audit strategy, you want to rely more on controls. They need to perform more testing, more persuasive evidence about control. Okay, so they are making a building thing. SA 550 test of control should be performed. As per SA 330, all relevant controls should be performed. If you feel that related party controls are relevant for you, they are compensating risk, you should definitely perform test of control. So in first two things they are saying yes, if auditor wants to perform test of control, it is in line with SA 550, it is in line with SA 330. Are you getting this point? Then they explain interim period checking. Yes, it's very much possible that auditor does checking on quarterly basis or half-yearly basis or 9-month basis. So in many assignments, you must have seen people go for December closing. December closing sense, auditor goes and check everything till December. And then directly they go for March ending and check few things and finalize the audit. Yes, no. That is called interim period checking. It is absolutely fine if auditor goes and does test of control in interim period, whether it is December ending, but he need to take care only two things. Once he comes back for finalization in March, he should check whether there are any significant changes after interim checking. whether version of the software has changed, whether people have changed, whether new software was introduced, whether new machine was introduced, whether there is a significant change. Next, he should obtain additional audit evidence for remaining period. He obtained evidence for 9 months, April to December. Get few more evidence for Jan to March. Are you understanding interim period? Yes, no? So, ultimate conclusion is he shall perform test of controls which are relevant for related party. He should go and check whether internal controls with respect to related party are performing properly. And in case of interim period, we have said two things. First, whether there is significant change, and then additional evidence for which period? Remaining period. Let's freeze, guys. Again, I think, only once you should have been aware that this is the question, this is how to approach it. You will first explain as per SA 550. First, find out the risk, perform FAP, and FAP include test of controls. So, as per that, test of control should be performed. As per SA 330, all relevant controls should be checked. These controls with respect to that party are relevant. They should be checked. And yes, interim period checking is absolutely fine. Just ensure once you come back whether there are significant changes and get more evidence for remaining period. You did checking till 31st of December, get more evidence for Jan, Feb and March. So conclusion is shall perform. Okay. Now next question is, so this was important again, but again, if student has not seen this question before, it will be difficult for him to go and crack it in the exam directly. And if someone has not seen this question, they will go, sir, it was a practical paper. It was not practical. It was asked in November 21 RTP. Only the point is you were not aware that such question was there. Okay. Can we use previous year audit files in test of control? Can we say that I performed test of control in the previous year? So I will use only those files, those evidences I will transfer. I will use those files only. I will not perform test of control in the current year. Can I do that? Can I do that? Yes, no. Yes, no. Yes, no. Answer is yes, I can do that. Auditor can, in first year, he has to perform complete test of control. He is not having any previous evidence. Auditor can very much use evidence of previous year. He can rely on it and skip test of control in current year. He can rely it for how many years? 2 years. He can rely it on 2 years. Control should be checked once in every third year. Once in every 3 years. Are you understanding this point? But every year he has to think carefully whether he can use evidence of previous year and when to retest, whether he can use evidence of previous year and when to go for retesting. Let's understand. Come to page number 10. Page number 10, middle column. Okay. Auditor, when auditor is making his strategy, he has to carefully decide, can he use previous year audit evidences? And for how many years he should use previous year audit evidence and when to go for retesting of controls. So auditor, when he makes his strategy, he has to determine whether he can go for whether he can rely on evidences of previous year and when to go for retesting. Now, so yes, it's very much possible we can rely, but decide carefully whether to rely on previous audit evidence and when to go for test of controls. While making this decision, when you are making strategy and we are taking this decision, you have to think about some factors. So PM and CMR chief guest ask them. PM and CMR chief guest ask them. Think about few things. P stand for personnel, employees. Whether there is change in employees who are executing controls, who are putting signatures, who are putting stamps, who are checking things. Whether there is a change in employee. If there change in employees, people applying controls have changed. You may think about retesting. Then, how effective were previous year controls? Last year, somehow we relied on it. They are not very strong. Somehow we relied on it. They are not very strong. Okay, let's go for retesting. M stand for, oh, it is a manual control. Manual control are less reliable because human behavior is uncertain. Person who used to be very honest for many years, suddenly he may change. And he may say that it's okay to have bribe. Okay, human behavior is the most complicated thing ever. So manual controls are less reliable. Let's go for retesting. C stand for components. We'll study there are 5 components of internal control. Apart from the control activity, like taking approval is a control activity. Segregation of duty is a control activity. Taking approval is a control activity. Keeping record of everything is a control activity. Apart from that, there are other components. Those controls, other components are not very good, reliable. Okay, they are not very good. Again, this point says that you can think about retesting. M stand for, oh, there is a risk of material misstatement in this area. Why you take chances? Again, go for retesting. Changing circumstances. Everything has changed. New law has come. New law has come. New standards have come, but your softwares have not changed. You are worried. It's better to go for retesting. G stand for general IT controls are extremely weak. General IT controls, who can enter IT department, who can sit on computers, username, password are on each monitor, post it. Then why username, passwords are there? General IT controls are weak. Listen guys, every year while framing strategy, we need to frame for how many years to use test of control evidences of previous year and when to go for retesting. While taking this decision, you need to consider these factors. P stand for personal change, how previous year controls were effective. M stand for manual automated. C stand for other components, how good were there. M stand for misstatement, risk of material misstatement. Then chief guess. C for whether circumstances have changed and general IT controls. Depending on these factors, we'll decide whether to rely or whether to go for retesting. Suppose point number 3, we decide, oh, we are going to rely on previous year. Now, here again think what? Whether previous year evidence is relevant, is useful for you. How to do that? Go and check whether there are significant changes in the controls. If there are no significant changes, evidence is still relevant. Now listen, in the earlier point we were discussing changing circumstances. Here we are discussing changes in the internal control. We applied altogether new software, so previous evidence is of no use. Whether it is still relevant for us. If the answer is yes, if there is a change, if the answer is there is a change, retest. We cannot go and rely. If the answer is no, there are no significant changes, We can rely on control. We can rely for 2 years. Gap should not be more than 3 years, once in every third audit. And now very interesting what they have said. Test of controls should be designed in such a manner that at least some controls should be checked every year. So that means divide controls in 3 parts. Part A, B, C. First year, listen, first year you check everything. It's the first year. You don't have previous year. So first year you have to do a lot of hard work. You don't have any backing. After that, next year you divide controls in 3 parts, A, B and C. Check only A. Leave B and C. Then next year check only B. Leave A and C. Next year check only C. Leave A and B. What will happen? If you divide in 3 parts, automatically it will happen that A will again come for checking after 2 years. B will again come for checking after 2 years. C will again come and check after 2 years. They are saying plan in such a manner that all the test of control in 1 year and nothing in 2 years is not a good strategy. At least some control should be checked every year, and that can be done easily by dividing controls in 3 parts. Let's please. So you'll explain point by point. First you'll explain while determining strategy, I have to decide few things. Then explain that we need some factors. PM and CM are chief guest, ask them, these are the factors. Even after deciding, you have to see whether the evidence is relevant. It is relevant only when there are no significant changes. And next, if there are no significant changes, you can rely, but for how many years? 2. Third audit you have to do it. And frame strategy in such a manner that there is some testing every year. Again, important question. 18 RTP, November 19 mock paper, May 22 RTP. May 22 RTP, it is there. Oh, great. We are through with 300 series also. 200, 210, 220, 230, 240, 25, 260, 299, then 320, and then 330. So you are not seeing essay 300 and 315 because that is covered in chapter number 2. And then we have very interesting essay 400 series. Hello. Okay. Now let's move to 400 series. As I said, our focus is to have quality questions, good discussions. Let's use our time effectively and let's hope to cover maximum number of questions. But doesn't make sense to rush quickly. And as I said, you need to take every question to a good level. If you're not taking that, it's of no use for the exams. Now next is 400 series. You have first standard 402. Now this is a very famous question. And 402 is all about outsourcing. So you go to a client and you see that the client has outsourced a lot of work to the third party. And now that party which is giving services, that is called as service organization. And our client who is taking services is called user entity. And a very popular question, you can see how many times it came in May 06, 11 exam, then mock, RTP, 13 old course. But then it is due since long in new course. Since long this particular portion is due, they have not asked question. So that's why it has been taken to the important list. And what is the question? So question is very simple. As an auditor, we see that outsourcing has happened. A lot of services are taken from outside. As an engagement partner, guide the audit manager in assessment of services provided by the outsourcing. What are the sources of information? And third, discuss the procedures to be applied if he is unable to obtain sufficient understanding. Okay. So 3 questions are there actually. There are 3 questions. Number 1, first question is, if you come across such outsourcing, such service organization, how will you assess it? How will you understand it? What points you will understand? Next question is, sources, from where will you get this information? And third, What will you do if you are not able to understand it? Let's see, guys. If you come to chart, come to page number 11. It's very simple, straightforward. So we have taken an example that our client is taking services from outside. So our client will be called as user entity using services of the service organization. It is user entity, and we are auditors. We will be called as user entity auditor, user auditor. And when we do audit, we'll have to follow SA 402. Now the entity which is giving services, that is called as service organization, and the person who is doing audit of this service organization, that is SO auditor, and he will have to apply 3402 for a particular report. We'll understand what is that report later on. And what services we are getting? Salary processing is done. Salary processing is done by service organization. Okay. Now let's further go in detail in the example. What exactly is happening? So listen. Earlier there used to be a salary processing department, 200 square feet of place, 5 employees were there. Their systems, and they used to have a software of 10 lakh rupees. So a department used to compute all the salaries, bonuses, commissions, their payments. But then company realized that it's very costly to maintain such a big department, and then 5 staff, software, everything. It's quite costly. And secondly, a lot of information gets leaked. Who is earning how much and what is the bonus and all, it is getting leaked, and because of that there are a lot of problems. So they did one thing. Let's do one thing. Let's take services from the third party. Let them process salary and give us final instruction. We will simply upload the file and make the payments. So a lot of cost saving will happen, and second most importantly, there will be confidentiality. So now what is happening? Earlier there used to be a full-fledged department. Now there is one single clerk. Now there is single clerk. That clerk makes any document in triplicate. Appointment letter in triplicate, after appointment promotions or transfers or termination, all the documents are made in triplicate. Once documents are made, they go to HR. HR overviews them and approves important document. Then goes to CFO. CFO also approves certain document which are above a particular limit. So now there is a segregation of duty. 3 people are involved. One is clerk, other is HR manager, other is CFO. 3 people are involved. Automatically work of one is checked by another. One copy is given to employee. You keep it. One copy is kept by the user entity in the master file. And then one copy with all details like what was the number of leaves, overtime, everything. 25th of every month, it is sent to service organization. So these 4 steps, 1, 2, 3, 4, they are performed at user entity. Preparation, approval by HR, approval by CFO, email. These 4 steps are performed at user entity. They are extremely important steps. They ensure that proper input is given to service organization. That's why they are called CUEC, that is complementary user entity control. Those steps, those processes which complements, supports service organization, that is called complementary user entity controls. Controls at user entity which are complementing, which are supporting working done at service organization. Then at service organization, we have Naresh, who receives the letter. opens the letter and confirms with the clerk. Okay, only these many appointments? Yes. These are the resignations? Yes. These are the promotions? Yes. He collects information, opens envelope and confirms all the information with the clerk. Now the communication between two parties, it's called interaction. More interaction is good. More interaction means more dependency. If we are interacting more and more with those guys, we are dependent more and more on them. Then Mahesh types everything and converts into electronic form, particular file format. Then Jignesh uploads it and software processes it. Finally, Ganesh evaluates the final file, whether final file is appropriate. So there's a person to open envelopes, there's a person to type it, there's a person to upload it, then there's a person to evaluate it. Finally, it is emailed to user entity. Now, step number 5 to 9 is called internal control system at service organization. So this is how processing takes place. This is how processing takes place at service organization. And then finally, when Excel file comes to user entity, they say that we are not going to rely blindly on it. We are not going to rely blindly on it. At user entity, there is an internal control system. We'll first compare number of employees with our master file. We have employee master file. We'll compare, okay, number of employees are good. Fine. Then we'll select 10 employees and we will recompute their salary. Whether our salary as per our calculation and as per their calculation, is it same? Let's do it for 10 employees. Third, we will have a monthly analysis, 5-month analysis. What is the movement of the salary? Is it justified? We check number of employees. We randomly recompute. We compare graph of 5 months. When everything appears normal, usual, no problem, then payment is made. That is called internal controls at user entity. They are relevant controls. They compensate the risk which can arise in SO processing. Are you getting this point? So step number 10 is relevant control for us. It is compensating the risk involved in service organization processing. Is this point clear? So now this example will be very useful, that how practically salary processing happens. Now let's see. First question. Now again, guys, in every chart has been written and then typed and then it is there. You will find something or the other. You will find a flow. You will find something to remember. Like you will never find that there are 8-10 points together. No. Because it is difficult to remember. We'll always break the points to make it easy to remember. Now here, in this situation, what SA says, most important thing is to understand the whole arrangement. Most important is to understand services which are taken and how they are taken. So they are saying you need to understand 4 things which are related to services and 4 things which are related to service organization. As per SA 402, it is extremely important for auditor to understand the whole arrangement. Once he understands, he will be able to identify and assess risk. What he should understand. So the question is what he should understand. 4 things he should understand with respect to services and 4 things you should understand with respect to service organization. So if you go to any user entity and you find that such kind of services are taken, understand 4 points with respect to services and understand 4 points with respect to service organization. Now what 4 points should be understood? Number 1, nature of services. Very simple. Are you taking help in purchase? Are you taking help in production? Are you taking help in advertisement? Are you taking help in transportation? Are you taking help in collection? Are you doing help in accounting, maintaining records? What is the nature of services? First, extremely important thing is what is the nature of services? After understanding nature of services, next extremely important thing is how significant it is for business. Now you are taking security services, but it's not very significant part. You are taking cleaning services, not very significant part. Maintenance, some office maintenance of equipments, it is not a significant part. You should understand, is it very significant? Is it connected to production? It is connected to production of goods and services. Is it having a heavy impact on revenue? Whether things will not work because of it. Understand the significance. It's very important to understand significance. Then only will increase the audit efforts. Otherwise, it doesn't make sense. If you're doing watchman on services, we are not going to go inside detail. It's not required. So understand nature of services, then understand how significant they are for the business of the organization. Next, effect on internal controls. What kind of effect they have done on internal controls? Earlier, we used to have our own salary processing department with 5 people and 1 senior. And now the complete system has changed. The way of doing things have changed. Now there's only 1 single clerk. So understand what is the impact of that on internal control systems. Next, very important, nature and materiality of TBD it affects. So if salary processing, it is going to affect salary account, bonus account, commission account, leave encashment account, provision for pension, provision for gratuity, 4 things. Quickly, nature of services. It is significance. What is the impact on internal controls? And lastly, nature and materiality of TBD. So moment you understand services, you will get 4 answers, these 4 things. Then you understand nature of service organization. What is the nature of relationship? Is it a group company? Is it a subsidiary? Or it is an outside entity, independent entity? Understand whether it is an outside entity or whether it's a group company or whether it's a subsidiary. Understand what kind of contract, extremely important thing. What kind of understanding is with that? It is a legally enforceable contract or is it a MOU, memorandum of understanding? Understand what kind of contract. Then what is the degree of interaction? If there's a lot of interaction, that means we may be heavily dependent. How dependent are we on service organization? How much dependency is there on service organization? Degree of interaction with SO. And lastly, what are the relevant controls we have applied to ensure there are no material misstatement in the whole arrangement? Like we said, we will match with master data, recompute and graph. That is an internal control system at user entity. Are you getting this point? Quickly, we are supposed to understand 8 things. Number 4 is for service, 4 is for SO. Nature of service, is it significant? What is the impact? And nature and materiality, TBD, transaction balance, disclosure effects. Service organization, what kind of relationship we have, then what kind of terms and contracts we have with them, what kind of interaction with them, and lastly, what are the relevant controls for the information which comes from service organization. So you should remember relationship with them, contracts and agreements with them, what kind of interaction with them, and lastly relevant controls. Now, so as an auditor, we are supposed to understand these 8 things. Then we may understand, okay, there's a risk out here, there's a judgment out here, there's a fraud pressure out here. We will understand. Like, and guys, again, like in asset 240, there are fraud risk factors. There are fraud risk factors. Then there are indicators of fraud. So when I take that FADU session, it will be covered in that. And as I said, you will be getting videos for that. So the whole combination is follow both of them. Now, question is, how will you get these 8 things? What are the sources of information? Now that part is not in chat. That is in Q&A. Now this first four things were FADU, four services for SO. And now next thing is, what is the sources of information? So there are various documents that will help you. Most important, the most important is what kind of agreement or MO you have with them. Obtain a copy. That contract will specify every damn thing. What is roles and responsibility of user entity and what is roles and responsibility of service organization. The most important document is contract. Okay, as I said, if you go to vsmartacademy.com, there is a course, free course. Go to that. There's a login. You will get all those, all relevant soft copies and all videos which are relevant at one place. Okay. Now, so first obtain contract. After that, if they have prepared a system overview, many people prepare a system overview. Overview of what is happening at user entity, overview of what is happening at service organization. If you have prepared any model or any diagram or any flow chart or anything, have system overview. So first contract, then below that system overview, then technical manual. While installing softwares, people need technical manual. You can use that to obtain information. Or user manual, it is given to people who are doing data entry and so on. So even that is in sequence. Most important is contract. Then below that, system overview. Below that, technical manual. Below that, user manual. Across the chart, you will always find some flow, because as a student and as a person, I am not very good at memory. So I have to always make an effort to remember things. But then I think that is a blessing, in that I always have something how I remember things. So you can catch hold of that and you can use that for you. Suppose if I would have been gifted with a very wonderful memory, I would have said, it's so easy, next, it's so easy, next, easy. Okay, so good thing is I am not blessed like that. Next is source of information, reports and letters. It may happen that SO auditor has prepared some report. Which auditor? SO auditor. That's very good source of information. It may be that our entity's internal auditor has prepared some reports, or management letters are prepared. Management letter. What do you mean management letter? Anyone? Yes. One there. Okay. Yeah, I thought so. Many people think yes. No, 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 no. Many people confuse it with WR, written representation. It is not that. Management letter means it is a letter given by the auditors to the management where they explain internal control weaknesses. So management letter. So these, again, these are SO. Just a minute. Okay. Listen, listen. If you want to understand how things are happening at SO, If any report is sent by SO auditor, report is sent by SO auditor or SO's internal auditor, SO's internal auditor, or any management letter was issued. Management letter means weaknesses in internal control. It can be issued by any auditor of SO. It can be a statutory auditor, it can be internal auditor, it can be regulatory authority, or whether SO themselves have prepared any report. Again, it's in sequence. Most important is what SO's statutory auditor says. Next is what its internal auditor says. Next is its management letter, and next what SO says. All these are sources of information. So there are some four documents and 4 types of reports and letters. That is sources of information. See what we want to understand. We want to understand these 8 points, and we want to understand what is happening at user entity and what is happening at SO. So these are the 8 sources of information, 4 types of documents in sequence, 4 types of reports again in sequence. Next is, what if you are unable to obtain understanding? So we tried really hard. User entity is useless. They are not maintaining proper documents. They themselves doesn't know a lot of things. User entity is useless, and there are not enough documents with them, with the help of which we will be able to understand what is happening at user entity, what is happening at SO auditor, and 4 things about services, 4 things about service order. We are not able to understand what to do. If we are not able to understand what is happening at service organization, user entity and service organization, we will perform additional audit procedure. We will perform some additional audit procedure. Additional audit procedures. Now let's understand. Easiest. Contact service organization. Dear service organization, please explain what you do. What Naresh does, what Mahesh does, what Jignesh is doing, what Ganesh is doing. Please you explain. Directly put a easiest and easiest thing is directly put a mail to service organization, ask them. Contact SO directly. Contact them. Or do one thing. There's very interesting report. Obtain type 1, type 2 report. What is that? We'll see. First of all, ask them or ask the auditor, SO auditor, to send type 1, type 2 report. We'll discuss what is it. Or do one thing. Send someone else. So suppose that service organization is at Chennai. Call your Chennai associate. Please on my behalf go and see how they are doing processing. Please go and see. Appoint someone using another auditor to go and obtain understanding. And the last thing is, most efforts are required in this. Go yourself and visit service organization and yourself go and perform procedures. Easiest is ask. Little more efforts, ask SO auditor. Simplest is ask SO. More steps, ask SO auditor for type 1, type 2 report. More efforts, appoint someone on our behalf to go and see things. More efforts, you yourself go and visit and perform. So it's in a sequence again. Efforts are increasing. Is this point clear? It's a very famous question. What will you understand? Suppose in fact you get a question and they are talking about service organization, outsourcing, and they will simply ask, what will you do? What will you do means what? There's a whole essay for it. You have to explain those 8 points, 4 of SO and 4 of services and 4 of SO. Then you, okay, that is the most important answer. So whenever you don't understand what to write, write that. And then they explain what are the sources. What are the sources? And lastly, what if you're not able to get information? Okay. Lunch is having its effect. So I can understand 2 o'clock. I am not used to so much of. I did a mistake. Tomorrow onwards, it's t-shirt. It's, I came with a full shirt. Okay. Now, okay. Listen. And guys, as I said, extremely important. Take my words. It has to come in exam. Only attempt is not fixed, For sure, it has to come in exam. Without any doubt. Correct. Okay. Now, let's let's first understand what is type 1 type report, then we'll be able to understand this. So anyone will like to explain what is type 1 type report? What, sir? You only explain. What will we do? Or sir is saying I'm somehow trying to, hide somewhere so that I can sleep peacefully for a few minutes. If anyone feels after lunch like that, please be free. 5-10 minutes is absolutely fine. If that is going to recharge you for next few hours, see, I will tell you. If someone sleeps in my class, I doesn't feel bad because I was one of you. So I was in a boarding school, 8th, 9th, 10th. So there are so many evil elements in the hostel. So you need to first ensure that all those evil elements have slept, and then only you can go to sleep. Otherwise, you never know what will happen. There'll be polish, there'll be paste, anything can be there. Correct? So because of that, you sleep late. And then our head, Mr. Posoko, he was a brigadier, retired brigadier. So 5:30, he wants everyone on the ground, whole school. It's winter, 5:30, it's completely dark. We are not able to see our own hand, and now he wants there. Okay, so 5:30 you are there. That means you get up at 4:34, quarter to 5, and then you're supposed to run. For a person like me, so in second round I will say third, and fourth round it is 6. So, but no, not like that. No. They will make a map and you run through that route, make a route. Oh my! So that means you cannot skip. You cannot skip any of the distance, and then you have to you have to run with good speed because if you are late, you will skip the breakfast. Okay, so run with your full energy, full strength, everything, and then you reach mess. After exercise, get ready, go to the mess for breakfast. It was a mess. So people used to have a different approach altogether, different attitude altogether, as if they are there to prove themselves that they can eat more, they are the strongest. So idli, idli is supposed to be sponge, it should, but it used to be idla. You cannot press it only. So people are having in competition 32 idli and they're drinking sambar from jug. What the hell? What is happening? And in that atmosphere, you tend to eat more. Now, classes. No enough sleep, lot of exercise which is beyond your capacity, and you have ate like there is no tomorrow, everything. Any lecture, any professor, matter of 5 minutes. No one can stop me from sleeping. And then I came up with different ideas. So throw pen and then go down and then sleep there. All boys class. So again they are, sir, he's sleeping. What the hell? Why are you worried? I am sleeping, not sleeping. So there'll be entertainment. And then I remember my maths professor He's going to, you coconut, sir, this coconut will break. So when anything like this happen in my class, it's okay. Go better sleep. I understand something, very important must have happened in the background. Maybe you were not able to sleep early. That's the big problem of the whole generation. Big problem of the whole generation. They are not able to sleep because this is a dangerous device. Mobile phone, which people are not able to leave. Okay. Anyways, come back. Type 1 type report. So what is this report? So we asked service organization, prepare a flowchart. Prepare a flowchart and explain how step by step things happen at your organization. Okay. That is called description of internal controls at service organization. You also explain one by one how you ensure completeness of information, how you ensure accuracy. Everything you explain, you make a complete 15-20 page booklet only. That is called as description of internal control system. That is called as description. That is called as description of internal control system. So, service organization prepares description of internal control system. But then, how can we rely on it? How can we rely on that 15-20 page document which describes internal controls at service organization? So we ask SO auditor, listen SO auditor, we know that you were checking financial statement, that's a different assignment. You check financial statement as per standards on auditing and you give report on financial statement, that's a different assignment. You take one more assignment of examining description of internal control. That means you take one more assignment of checking flowchart. Okay, and now for this you need to apply SAE. If you recollect, if you are checking anything other than historical information, that means projected financial statement or this flowchart is other than historical. You have to apply SAE, standards on assurance engagement. And it's no coincidence, it is 3402. Why it is 3402? Because it is there to support, to help auditors apply 402. So we have 3402. You apply 3402 and make a report. Okay, so now I understand. Type 1, Type 2 report is report on description of internal controls, which is prepared by management of service organization. Now there's a two report, Type 1 and Type 2. First, let's see Type 2. Automatically we'll understand Type 1. Type 2. It's a very simple report, just like any other report. First, they will write, it is responsibility of management. It is responsibility of management of service organization to prepare description of internal controls. Just like in normal report, we say that it is responsibility of management to prepare financial statement. We say that it is management's responsibility to prepare description of internal control at service organization. Then our responsibility is to check this description by applying SE 3402. And we have checked all those controls, but we have not checked CUEC, complementary user entity control. Now system which is implemented user entity, how I am going to check it? Complementary, I have checked everything in this flowchart, but I have not checked things which are done at user entity. And finally give opinion, 3 things in opinion. Number 1, is flowchart fair? Fair means, is it realistic? Is it giving real thing existing is in service organization? Is flowchart giving fair description of internal control system at service organization? Whether such kind of flowchart is suitable? Yes. For such kind of processing, such kind of flowchart is suitable, it is perfect. First of all, whether the flowchart is a fair description. It is a fair description. Is it suitable for such kind of processing? For processing salary of 1000 employees, it is perfect. Then, is it operating effectively throughout the 12 months? Three things. Is flowchart reliable? Is it fair? Is it really suitable for such kind of processing? And is it operating effectively throughout the 12 months, throughout the 9 months, whatever time period? What will happen in type 1? Only one change. Type 1, we don't comment about operating effectiveness throughout the year. In type 1, we don't comment about operating effectiveness throughout the year. So many a times person is appointed late. He is not having enough time. So he is not going to report on operating effectiveness. He is going to report upon whether this flowchart is fair and is it suitable. That's it. Okay, is this point clear? Now, what is the question? Question is interesting. It is there in the study material, but many times you may not be able to understand what is written, why it is written. Sub-service organization. Last thing for the essay. Sub-service, that means we gave our work to service organization for processing salary, and tax processing, tedious processing he has given to sub-service organization. Alright, what will you do as an auditor? And next question is, what will happen to type 1, type 2 report in this particular case? So there are two methods of reporting. Let's understand, guys. It's very simple, straightforward. If you understand from here only. First, to explain what do you mean by service organization. Very simple. You have given your work to service organization, and service organization has given its work to sub-service organization. Okay, you can extend this manner. Or service organization is using services of sub-service organization. So first explain what has happened. You have given work to SO and it has given to SSO. After explaining that, again SA 402 is relevant. Now, just like we were having keen interest, how processing happens at service organization. Now we will be having keen interest how processing happens at sub-service organization. Now, how much interest will take, how much depth will go for, that depends on few things. That depends on two things, two important factors. Number one, what is the level of interaction with sub-service organization? If there is a lot of interaction with sub-service organization, that means there is a lot of dependency. What is the level of interaction? What is the level of interaction with sub-service organization? More interaction means more dependency on sub-service organization, first. And second, what is the nature and maturity of transaction it is getting affected? TDS, it's huge. It is affecting TDS calculation. In this company, bonus is huge. It is affecting bonus calculation. Go and understand two things. What is the level of interaction and what is the nature and maturity of transaction is affecting. Okay. So accordingly, we'll understand how much importance, efforts and resources should be deployed to understand SSO, sub-service organization. Now, guys, repeat the 4 points. Without thinking much, I will say one more thing in audit. Sometimes you will see that somewhere 5 points were there and somewhere 4 points were there. Don't try to remember this 1 point is extra here. Write those 5 points at both the places. You should not write less. In audit, I am saying, in audit is absolutely fine to write little extra. Because paper checker is not seeing what extra you have written. He is seeing whether you have written what he wanted. So even if you write something extra, it's okay. Don't become so critical that you are trying to remember every small thing. No, there should be a balance. I know 3-4 points to be highlighted. I will highlight it. I will explain own language. Now here again explain the 4 points. If you remember, nature of services, its significance, effect on internal control system, and lastly TBD. Now, if sufficient understanding is not obtained, then get type 1, type 2 report. Type 1, type 2 report. Now listen, there are two methods. If type 1, type 2, listen, if description of internal controls that includes controls at SO as well as controls at SSO, that is called as inclusive report. Oh, wonderful. This description explains internal controls at SO as well as internal controls at SSO. That's wonderful. That's called inclusive report. That one report will give us loads of understanding, everything. But there is one more approach, that is carve out report. That means only controls at SO, nothing about SSO. That is which approach? Carve out approach. If there is a carve out approach, auditor will not get all the answers in one report. He'll have to struggle and see more documents as discussed earlier to obtain understanding of SSO. So here to have to explain that two methods are there, inclusive report and carve out report. Are you getting this point? Let's freeze, guys. If you get a question on SSO, first explain what is SSO. You gave work to SSO, they gave work to SSO, that is SSO. Okay. Then, once you explain SSO, you go ahead and then discuss what is the importance of SSO. Depends on two factors, that is interaction and nature and maturity of TBD. Two things. Then you explain what thing, if it is important, what things you have to understand? 4, which you have studied earlier. And if you are not able to understand, go for type 1, type 2 report. But that is of two approaches, inclusive and carve out. If you get an inclusive report, you will understand every damn thing, what happens at SO and what happens at SSO. If not, carve out report, you have to work hard. If it is a carve out report, you have to work hard and you will have to apply you have to see a lot of documents and reports to understand what happens at SSO. So you explain these 4 points. Okay, last question for the standard. Great, then we are through with one more series. We are through with 200 series, 300 series, 400 series. Okay. Next is type 1, type 2 report. Now what is that? Reference to type 1, type report. Suppose we have read in detail type 1, type 2 report, and on that basis we have made our report. Should we give its reference? Should I write in my audit report that I have read type 1, type 2 report, that was of immense help to me, and on that basis I have prepared my report? Should I do that? Yes. Yes, no. Answer is depends. Okay. Listen, they have involved SSO also. Again, extremely important. November 22 mock. What they explain, it's a payroll operation. Okay, it accounts for 65%. That means highly material. So there is a service organization. It is doing payroll processing. 65%. It's a huge part. 65% of total cost they are managing. Then we have obtained type 2 report. Then they are saying there is a service organization, sub-service organization, and it is based on carve-out method. Okay, so we obtain type report, carve-out method, and further final opinion is unmodified. Assistant has given reference to type 2 report. Is that correct? So basically they are saying assistant has prepared it and it has given reference to type report, it is appropriate. It's very simple. Now listen guys. If you are giving clean opinion, that means unmodified opinion, we don't have to give reasons to people. If something is good, something is good. No need to explain it in, no need to explain much more. What they are saying very simple thing. If you are giving clean report, unmodified report, you don't need to explain in detail lot of things. You don't need to give reasons why it is clean. It is clean. It is unmodified. No need to give reference. No, if you are giving unmodified opinion, no need to give reference to any of this type 1, type 2 report, or whether it is carve out or whether it is inclusive. No reference is required. Nothing. Unless required by law. But even if we give reference required by law, we will write one sentence. It will not reduce our responsibility, because we can delegate work. We can use work, but we cannot delegate responsibility. But next, if you are giving modified report, you know that if you are giving modified report, you need to explain complete detail in basis of modified opinion. You need to explain all the detail in basis of modified opinion. If you feel that reference is going to enhance the understanding of users, you can give reference. But even if you give reference, you write, even after reference, you write that we are responsible for our opinion. We write that it is not going to reduce our responsibility with respect to opinion. So the concept is clear. In unmodified opinion, we generally don't give reference, but in modified opinion, we may give reference. In this case, as we are giving which opinion? Unmodified. No reference is required. Junior is not correct. Shall not refer. CA is saying remove it. It is absolutely correct. So there was one more hint in the answer. How can they ever say that CA is wrong and article is correct? So conclusion, they have written that CA is correct, article is not. Don't feel bad about it, because you will be CA and then you will be having articles. Come on guys, let's finish off 4. There is only one more thing. SF 450. Page number 11. Page number 11, third column. Okay. Now listen. What do you mean by misstatement and what are the sources of misstatement? Okay, who will tell me what do you mean by misstatement, sir? What do you mean by misstatement? Difference between FAP, and difference of what? Exactly. Perfect. It's very simple, straightforward, as correctly said. When there is a difference between information, that is said ACPD, when difference in amounts, its classification. Classification means capital versus revenue. Presentation means in which line item it is written. And disclosure means notes to accounts. If there is difference between APCD amount, classification, presentation, disclosure, which is required as per applicable financial reporting framework and which is actually given, if both are not same, it is different. If they are different, then that is called as misstatement. Difference between ACPD, applicable framework, and what is reported. Now, This can be intentional or unintentional. So it can be because of fraud or it can be because of error. And then the question is, what are the sources? What are the sources? What are sources? Why misstatements happen? Okay, let's see. Most common is omission. So while accounting, a lot of transactions are left out in the month of March. Purchases, sales, or provisions are left out intentionally, unintentionally. There is omission. Or things are recorded, but they are not accurate. The rate was not accurate, quantity was not accurate, amount was not accurate. Or they were accurate, either data was not accurate or its processing. While posting it, something went wrong. Or everything was accurate, but then accounting policy was not appropriate. Applied LIFO, which is not allowed. Accounting policy was not appropriate. We are not doing goodwill write-off where it is required and so on. Finally, it can be because of estimates are unreasonable, unrealistic. Unreasonable, unrealistic. In competitive market, we are saying selling cost will be zero. While computing NRV, it is wrong. There is always a selling cost in competitive market. And last thing, there is a misinterpretation or overlooking. Inaccurate estimates are going wrong because they are unreasonable or accounting is, there is a misinterpretation. There is a court order. We read the first paragraph, first page and we decided what will happen. But you go and read the last page also. There is a clear misinterpretation or overlooking because of which provision is going wrong. Let's treat guys sources. First, because of omission. Otherwise, there is a recording but no accurate recording or processing. Else everything is fine, but there is a selection and application of accounting policy is not appropriate. If even that was fine, there are two things. Either estimates are unreasonable or estimates are out of misinterpretation or overlooking. Guys, we are through with 450. It was asked in May 22 RTP. This was asked in May 22 RTP. What are sources? So 200, 300, 400 and then 500. So I was asked an interesting question. So during the lunch, that sir, there is a lot of cross-linking of essays. Cross-linking of essays, how to handle that? There is a lot of interlinking. So guys, out of 100 questions, it will be hardly 10, max 15 questions where there is a lot of interlinking. And you will be able to understand and retain that that interlinking only when you do Q&A. Don't get stressed a lot. Assume that those are the only questions where interlinking is required. Understand them, retain them and be happy, go with that only. The rest of the 85-90 questions, they will be generally on specific essay only. So don't take a lot of stress. Like we studied essay 241 common answer, where we put everywhere. Then there was some related party test of controls for related party. There were multiple. Don't be stressed out of that. Assume these are the only questions where there is interlinking. Okay. And apart from that, there is small interlinking everywhere, which I will explain. It's very simple. For example, like whenever we modify, we write essay 705. EMP, OMP, we write 706. So we keep referring to 700 series. That's very simple, common. And Then we keep referring to this one essay again and again, essay 315. So let me explain what is that. Essay 315 explains how to understand entity and what to understand. What are different procedures you can apply to understand the entity and what to understand in the entity. Essay 315 explains how to understand overall entity, its business, everything. It explains how to understand the whole business. Now, Essay 550 explains how to understand related party. 560 explain how to understand subsequent event. 570 explain how to understand going concern issues. Now many times what they say, listen carefully, that when you are applying essay 315 of understanding entity and its environment, including internal controls, collect this information also. So they are explaining when you are applying themes of, when you are explaining 315, while applying you are collecting information for the whole entity, collect this information also. It will go hand in hand. Are you getting this point? Yes, no. Or they will say this. When you are understanding entity and environment, you would have received some information about related party, use it. Use information obtained about the entity and its environment while checking specific point also. Are you getting this point? Yes, no. So that's why you refer 315 again and again. Sometimes they say, while doing that, do this also. Or sometimes they say, in 315 you would have understood the whole entity and its environment. Use that understanding here. Use that information here. Use that file here also. Yes, no. Are you getting this point? So sometimes they say collect more information in 315, and sometimes they say use information collected in 315. That's why they give reference, lot and lot reference about 315. And apart from that, then related party is always 550. So that is common sense based. But I am saying, fortunately or unfortunately, 50% paper is a repetition. 50% of the paper is repetition. This is not a practical paper where you go and read and now think, I will generate the answer. You should think whether I have studied such kind of question anywhere, and I will generate answer from there. If you are not able to generate answer like that, then you think about it now what to write. There are 50% chances. Either you will be bang on target, or target is not within any range. It is misfired. But then I am saying at least 50. Last time out of 88, you have to solve only 70 marks. You have to solve only 70 marks. Out of 88, 73 marks was from question bank and 55 from IMP list. 55. And now the important question you should ask, if someone appeared for that, why I was not able to capitalize on that? That is an important question to be asked. If there is so much of repetition, and there lies the reason, there lies the issue, and the issue there is that, as I said, no proper command on question bank, or you have just done the overview, you don't have so much grip that you can generate a complete answer because you are just having a overview. And question bank is the most neglected thing. People keep it for the end, and that end never comes because you are always busy in revising concepts only. But what about Q&A? Okay. Anyways, solution is focus on Q&A. It will be really helpful. Now, you guys want to take a break or no? No? Very good. Come to 58.500. Okay. This is a very famous question. Okay. We went for audit, and on the basis of report of a leading advocate institute its own paper, they are promoting advocates. On the basis of report of advocate, income tax provision was prepared of 5 crores. But so auditor relied on it, but the actual payment of tax came to 50 crores. And it was observed that straight away there were mistakes, problems. Straight away there were mistakes and problems in the report of the advocate. Comment. So there's a very wonderful way of, they will write one word. Sometimes they will not write that word also. Comment. Okay. Now, this question is about experts. You all know, person having specialized skills and knowledge in a field other than accounts and auditing, that person is expert. He is appointed by management to do accounting work, that is accounting expert. And is appointed by auditor to do audit work, that is auditing expert. Management, okay. In either of the cases, suppose management's expert make a report, can we blindly rely on it? No. We have to carefully evaluate it. And that is called in SA 500. That SA 500 says, don't blindly rely on management experts report. Apply 3 steps. Apply 3 steps and then only rely on work of management expert. Then we have SA 620. Don't blindly rely on auditor's expert. Apply 6 steps. Apply 6 steps and then rely on auditor's expert. SA 620. So for management expert we have SA 500. Otherwise we have SA 620. Now listen. What answer we have to give? First of all, they have not specified whether the expert is management expert or auditor's expert. Always assume, because that is what happens in practical life. Always assume that the person is management's expert, appointed by management for helping in accounting. Management expert. Then explain, it is a common audit practice. During the audit, the auditor may seek to obtain conjunction with client or independently reports, opinion, valuation and so on. It's absolutely fine. First explain in this particular scenario, as management expert is there, as a 500 is relevant. Then you explain auditor is free to rely on the reports. Auditor can definitely use the work of expert, use the reports, calculation, working papers of the reports, absolutely fine. But he cannot delegate responsibility. So he should be careful. He can use the work. He can delegate the work, he can use the work, but he cannot delegate responsibility. So he should be careful. He should apply 3 steps. Step number 1, CCO. He should go and check competence. Competence means knowledge and skills. Is he having training, qualification, experience, market status, that we need to see. Competence, capability. Will he be able to deliver in given time, team and equipment? Will he be able to deliver time, team and equipment? And then CCO, competence, capability, objectivity, then we should obtain understanding of his field. Go and understand how actuary works. Go and understand how oil valuation person works. Have some understanding and then finally go and evaluate the work. Go and read the report. Go and see the files which he has made. It's a 3-step process. CCO, that is competence, capability, objectivity. Understanding the field of expert yourself and evaluating his work. Evaluating his work means reading the reports and files. So you can delegate, definitely you can use the work, no problem, but you cannot delegate responsibility. Case discussion and continue right as per case given above. It appears that auditor blindly relied on the advocate. He blindly relied on the advocate. Blindly on the advocate, its provision, it is inappropriate. There is a mistake by the auditor. There is a mistake by the auditor. Okay, he should have insisted for proper provisioning. He relied in a haste. He relied without any proper analysis. Otherwise, such a mistake, 5 crore to 50 crore would have been noticed. So you have to explain one by one. 500 is relevant. Use of expert is fine, but there should be a responsibility, case discussion and conclusion. Fine? Yes, no? That was essay 500. Now, listen. After 50, 500, we next have 501. Okay. Now this question was asked in November 22. Okay, now there are two things involved here. Okay. So it's a question I ask generally. How will you check existence of inventory? 5-mark question, sir. So, so the answer, immediate answer is physical verification. Okay. More to it. Then next, what? 5 marks, sir. Yes. Yes, all can contribute. Yes. Physical verification should be within reasonable interval of time. Okay. So physical verification and management records. Okay. Next. If he is unable to attend physical verification, then additional audit procedure. Okay, then external confirmation. Yes, next. If he has given some warehousing works, so from there, what else? Cost NR, which is their valuation. No? Send some third party, it's far away. Verify. AS2 Indies 2. AS2 Indies 2. Okay. GST records. Caro 0 marks. That's why, and this is a perfect. Every time I ask this question, I get this answer, and this is the perfect answer why sometimes we are not able to score. It's a very fixed and a standard answer, and a very popular one. If you look at this, how many times it is repeated? This question is repeated so many times, and now there is a standard answer, a very standard answer, and the whole thing was, listen, so you have to say SA 501 is applicable. It is management's responsibility to conduct physical verification, auditor's responsibility to attend. He has to do two things. First, attend physical verification, and in that he has to perform for 4 points when he attends physical verification. Look at come at chart book, page number 12. Only two steps, nothing else. AS2, GST records, third party, this, that, service organization, and okay. So simply have to write step number 1. He has to attend physical verification. SA 501 is applicable, conducted by management, attended by auditor. He has to do 4 things. So I just imagine the whole situation. So I entered a factory gate, then I take a left, then I remember a big warehouse, and 4 of the employees are standing there, and go and meet them and say, well, welcome, we're waiting for you. Go and understand, go and evaluate management's instruction about physical verification, and are they reliable? You have to explain what to do in physical verification. You just wrote some single point on physical verification. You wrote a single point on physical verification, and the whole game was what to do in physical verification. So first, evaluates management's instruction and understand are they reliable. So they will explain that for physical verification, there is one person from HO, there is one expert, there is one senior supervisor of the location, and there are 2 juniors. So 4-5 people team, and physical verification is done simultaneously on all locations. Great. And inventory movement is stopped from midnight 12 o'clock. Nothing will come and nothing will go. And our system is aligned to 12 o'clock. Okay. So we have to go and see management's instruction for physical verification, are they reliable? Point number 1. Point number 2, if it's okay, go ahead. I got your points, it is good. Perform physical verification. Go and observe. After evaluating, go and observe how management team is applying those procedures. If you feel appropriate, perform test count. Not 100%, and here people will go wrong because in articleship they have done exactly opposite. They have done all the counting, and that too 100% counting, and here we are saying don't do counting, let them do. You go and observe. First their instruction, then go and observe how they are implementing it, test count, inspect the inventory for the condition. Is it damaged, defective? That's it. And step number 2, as correctly said, simply compare all the physical inventory obtained in physical verification and inventory as per financial records. If there is a discrepancy, go and investigate it. Simple. Only 2 steps. There is no reference of Caro. There is no reference of anything else. Correct? And then question is interesting. It doesn't stop there. There are 2 questions. Warehouse, border area. So these warehouses are border area and they are bombshells. It keeps on falling, sir. Grenade, everything. And sometimes it may happen that it falls on you also. Okay, or people will say that, okay, you have to go to a nuclear plant facility. Yes, radiations are leaking. If you come in contact with that, it's cancer, and then 3-4 years. You get 3-4 years. So sometimes it can be dangerous because of nature of inventory or location. So what if it is impractical? What to do? So the next chart is special case number 2, page number 13. Page number 13, first column. Understand this, very simple. So you have to explain the second thing now. First you need to explain what to do when you go for attend physical verification, and step number 2, compare. 3, focus on 3 things only. Number 1, as an auditor you should always focus on reasons. As an auditor you should always focus on reasons why physical verification, attending physical verification is impractical. Is it nature of inventory or location of inventory which is, go understand the reasons, understand the nature of inventory and location of inventory. If there is three things, if there is threats to safety, it is acceptable reason. Don't go and attend physical verification. It is acceptable reason. If there is a general inconvenience, not a acceptable reasons. You have to go and attend physical verification. And third, there is difficulty, time and cost involved. Now you have to think carefully here. If there is a difficulty, time and cost, DTC, if there is DTC, if there is a DTC, in this case, you have to think whether alternative audit procedure and evidence is available. If alternative audit procedure and evidence is available, we can avoid physical verification. But if alternative audit procedure and equally persuasive evidence is not available, we cannot avoid it. So you need to first discuss reasons. Go understand the reasons, understand nature of inventory, understand location of industry, and then write three things. If it is threats to safety, it is an acceptable reason. Don't go and attend. If general inconvenience, it is not an acceptable reason. You have to go and attend. If there is a problem with difficulty, time and cost, think carefully whether there is an alternative audit procedure and alternative evidence available which is equally persuasive. If yes, avoid it. If not, do it. Then, if it is unavoidable, impracticable, you go for alternative audit procedure. Very simple. Compare with previous year. I always think about previous year first. Compare balances with previous years. Is it on the same lines? Then, for purchasing inventory, there must be some documents. Proof that inventory has come. See those documents. Next, there will be documents proving the inventory sold, gone. There will be proof inventory has come. There will be proof inventory has gone. See those documents. Alternative source of evidence. Finally, if there is any internal report, see again sequence. First previous year, then prove the documents are right, then prove the documents are gone. Subsequent utilization, subsequent sale, and internal audit report. If alternative procedure doesn't give true and doesn't give sufficient appropriate evidence, then the lack of evidence will think about modifying, qualify or disclaimer. We'll think about qualifying. Either we will go for qualifying or we will go for disclaimer. Is point clear? So it's very simple. First discuss about reasons. After reasons, discuss about alternative procedures. And after alternative procedure discuss, if not able to get evidence, we need to modify opinion. So we need to explain two things. There are two separate questions. Existence and condition of inventory is different question, and what if things become impracticable, that is a different question. Okay, this was asked in exams, recent exams, so we have two options: to drop it or to keep it. But then understand how things happen. So this question was there in study material 17, May 18 RTP, and module. It was in the module also, and it was waiting to come, and finally it was targeted in November 22 exams. So if taking our assumption, we assume that questions which were asked in 2 attempts, they won't be targeted again. That's the assumption we take. So we can leave it. But then again, how much did you score in this question? Okay, should we see this or no, sir? Leave it. Overview. Let's do it only. Listen, what was the question? That you are on audit, and you are using negative confirmation request. You are using what? Negative confirmation request. And there is one small lot of small balances. There are a lot of small balances. If there is a lot of small balances, auditor may go and use negative confirmation request. Everyone understand what is the difference? Positive confirmation request and negative confirmation request. It's very simple. Positive confirmation request can be in two forms. In positive confirmation request, third party is requested to always respond. Requested to always respond. It can be in two forms. Number one, you can directly ask balance as per their books, whatever it is. Or number two, you can give balance as per your books and ask them whether balance agrees or not. When you request third party to always reply, that is a positive confirmation request, either directly ask their balance or give our balance and ask them whether it agrees or not. On the other hand, if in request you say that please reply back only when there is a mismatch, exception, things don't match, that's called negative confirmation request. Now in this question, you need to explain things one by one. You first need to explain what is negative confirmation request. That we are supposed, a third party is supposed to reply directly to the auditor only when things don't agree with each other, things don't match, then that is a negative confirmation request. They need to explain, tell me which is going to give you more evidence, positive or negative. Which is going to give, definitely reply in positive will be more and quality of evidence in positive will be more. You need to explain that negative confirmation request is going to give you evidence which is less persuasive. Persuasive means reliable, which is less reliable as compared to positive. And they need to explain why. Suppose we didn't get any reply in negative. It is possible that letter is not delivered. It is possible that letter is not delivered, or it is possible that it is delivered but the other person didn't check it or didn't reply it. It is possible he didn't check it, he didn't reply for it, and we are assuming that everything is all right. There is a problem with negative confirmation request. We don't know if it is undelivered. We don't know if the person is not replying as such. We don't know whether he has read or not that particular letter. That's the biggest challenge with negative. Listen, there is no response. In PCR, there is response with confirmation if it has less perseverance because there is no response. It may because not received, or it may not have been replied because of information disagreement, or they were just careless to reply. Hence, no response is not explicitly indicating accuracy of any information. So there is a problem that no response doesn't mean everything is fine. Again, they are explaining that quality of evidence, persuasiveness which you get is always less. And further, if there was one balance of 25 lakhs, it was not small. You should have gone for positive confirmation request. And you could have gone for alternative audit, and you are not getting reply on it. You could have gone for alternative audit procedure, subsequent cash recovery, other letters and email exchange, examine others documents such as GRN. It's a trade payable, whether subsequently creditors were paid, where there is a correspondence, and proof that really goods were received. All this proof, listen, if alternative audit procedures are there, proof that goods were really received is a proof creditor is genuine. Subsequent payment proves creditor is genuine. Lot of correspondence and email exchanges proves creditor is genuine. And you are going to, so case discussion and the conclusion, go for positive or go for alternative procedure in case of 25 lakhs. Going for negative is not appropriate. So this was the answer required. First explain negative, problems in negative, and then finally give conclusion that go with the positive or alternative procedures. So doubt is, there are 5 conditions. If 5 conditions are fulfilled, you can go for negative confirmation request as a sole audit procedure. It's very simple. I will give quickly 5. So I take example also. Example is that there is a company. Where complete sale is done by agents. So company take 50,000 deposit and give agency. Okay. So let's understand now the scenario of the company. Company take deposit, that means they are reducing their risk. When risk of material misstatement is low, they are given app. So when internal control systems are strong, there are large number of such agents, 20,000 such agents, when large number of small homogeneous balances, and there is no history of misstatements, and there is no pressure also in present circumstances. When these 5 situations are there, then you should, when all of them should satisfy all. That if everything is like that, it's very simple, straightforward. Are you getting this point? There is low risk, there are good controls, small homogeneous balances, correct? And finally, there is no exceptions in past, nothing expected right now. We should go for negative confirmation request if all the 5 conditions are fulfilled. So basically, where you need less evidence, you should go for negative confirmation request. Risk is low, controls are strong, why to worry much? Go for negative. Now, next is refusal. We are through with SA 500, that is audit evidence. We focused on expert thing. 501, that is special consideration for specific items. And then now 505 is external confirmation. What if there is a refusal? Come to page number 14. Page number 14. Listen. So we send management list of 100 daters that we want to take confirmation from these 100 daters. Management said okay to 95, no to 5. So whenever management refuses that we will not let you send confirmation request to this 5, there is a refusal from management side. You cannot take confirmation from them. What should you do? You should go and understand the reasons. You should go and understand the reasons. If reasons are reasonable, realistic, justified, go for alternative audit procedures. There are more ways of checking debtors. Subsequent recovery. Go and check subsequent recovery. Compare with previous year. Compute data turnover ratio. You can do all these things. You can do all these things to check it. There are alternative audit procedures. If they are giving evidence, good enough. If they are not giving you evidence, inform TCWG that I am not getting evidence, and if they are also not able to help, take the impact on opinion. So first, understand the reasons. Are they reasonable and justified? If they are reasonable, go for alternative procedures. Go for alternative procedure. Okay. If you are going to get sufficient appropriate evidence, good. Otherwise, inform TCWG and consider the implication. Further, if the reasons are not justified, you are giving any reason, there is no legal document, there is no document to prove any problem, we find something fishy, if they are not reasonable, directly go to TCWG and take impact on opinion. We will consider it lack of evidence. No sufficient appropriate evidence. We may modify, we may qualify, and if required, we may give disclaimer. So it's very simple, straightforward. Understand the reasons. Are they realistic, reasonable? Yes, alternate procedures, go ahead. If not, one more thing. After doing everything, see, I've kept this for both. It is evaluate effect on RMM and ROF. Means think about it. Were you expecting such parties? Were you expecting such parties, such issues, such matters? If answer is no, that means you doesn't understand the area. Increase risk of material misstatement. If you are not expecting, it's only new risk, and if it is intentional, then also include risk of fraud. If it is a new information for you, you should think about increasing risk of material misstatement. Okay. Guys, we are through with 505. Okay, guys, let's see. ऐसे 510 510 बहुत ही सिंपल है. इसके ऊपर दो क्वेश्चंस है, दोनों का आंसर एक ही है. नाउ ऐसे 510 आप सबको पता है कि ये हर असाइनमेंट में लगता नहीं है. इट इज एप्लीकेबल ओनली इन इनिशियल ऑडिट एंगेजमेंट. इनिशियल ऑडिट एंगेजमेंट मीन्स आप इमीडिएटली प्रीसीडिंग ईयर देखो. Go and see immediately preceding year. If previous year is not audited or audited by someone else, then only SA 510 is applicable. And the famous question is, what are the audit process? So first question is initial audit engagement. We know. Look at immediately preceding year. If no audit is done, or it is done by someone else, then it will get applicable. Next is audit procedures. Now what we have done, and audit procedures are same if no audit is conducted in previous year or audit is conducted by someone else. They have said, they have distinguished what will happen if audit is not done or audit is done by someone else. In both the cases it is going to be same. And further they are also asking about reporting. So come to 510, page number 14. Page number 14. What are the audit procedures? Let's see, guys. It's simple, straightforward. First of all, we are supposed to check two things in SA 510. Number one, whether opening balance is free from material misstatement. So are there material misstatement opening balance? That's simple. And second, we are supposed to check consistency of accounting policy, whether policy of opening balance and policy during the year is same or not. If not, will go and see if there is a change, whether change is justified. Whether change is justified, is it properly accounted, presented and disclosed. Now let's see how we will check whether there is a misstatement in opening balance. Simple. We have divided audit process in three parts. First, evidence from last year, then evidence from current year, and what if there is a misstatement. Let's see. Evidence from last year. Common sense. Go and check whether opening balances match with closing balances of the ledger. Whether it matches with the closing balances of the ledger of previous year. Then next, obtain previous year's financial statement, latest previous year financial statement, and check whether opening balances match with the financial statement. Then next, obtain audit report. Go and read audit report of previous year. If there is available, predecessor auditor's report. If it is available, great, read it. If it is clean, absolutely fine. If it is modified, and then all the areas in which there is a modification, there are chances that misstatement will remain in the current year also. Mark all those areas as high risk of material misstatement. And when you are opening previous year, go and check prior period items also. Go and check prior period items also. Now, what is prior period items? If there is a mistake of previous year which are rectified in the current year, they are called prior period items. Go and check also. It's very simple, guys. You will get a lot of evidence from the previous year. First evidence is last year closing balance of ledger matching with opening. Next, previous year financial statements. Next, previous year audit report. Again, it's in a sequence. First, there is a ledger. Then, bigger than that, financial statement. Then, audit report. And last is prior period items. If there is a prior period item, go and understand what was the mistake and how it was rectified in the current year. Go and check that. Then, lot of evidence from the current year. Current year audit procedure automatically gives loads of evidence. For example, in case of fixed assets and investments, when you go and attend physical verification, you see assets, and at the same time you will see acquisition documents. You will see assets, you are sure assets are there, and then you see original documents, acquisition documents. Whenever you see that it is acquired before 1st of April, it proves that it was there on 1st of April also. So when you see fixed asset and investments, their documents, automatically you get evidence that they were there on 1st April also. It was there in opening. Then see date. If inventory is getting sold, if you are seeing that opening inventory is getting sold during the year, it is evidence that opening inventory was correct. If you see that opening datas are getting recovered, it proves that opening data is correct. If you see that opening creditors are getting paid, it proves that opening creditors were correct. So you will get loads of evidence while performing current year audit procedure. Just think about fixed assets and then investments and then inventory, debtors, creditors, lot of evidence. Apart from that, if required, he can perform specific audit procedure. Means he can prepare a reconciliation. We all know opening plus purchase minus sale is equal to closing. Let's keep opening balancing figure, and that balance should match with the opening as such. So we can have a specific audit procedure like preparing reconciliations, which will give a lot of evidence about opening balance. If there is a misstatement, there are no restrictions. Go and perform additional audit procedure, whatever you want. Go and pull all the records of previous year. If there is a misstatement, there is no restriction, go and perform any additional procedure which is required for checking and finding out how big is the misstatement. And further, ask for rectification as per SA 450. You ask for rectification from management under SA 450. Let's freeze, guys. So it's very simple. If you want to check whether opening balance is misstated, lot of evidence from last year ledger, last year financial statement, last year audit report, prior period item. Then lot of evidence from the current year audit procedures, and if required, specific audit procedures. Then lastly, if misstatement is deducted, just don't hold back. Perform additional procedure as required and rectification as per 450. For consistency, it is simple. Go and read accounting policy of previous year and current year. If there is a change, simply go and check whether change is justified. Is it properly accounted? Is it presented and disclosed? 4 things. So this is And then we have reporting also. Let's see reporting also. How will you report on opening balances? You went for checking opening balance. If you are unable to obtain sufficient appropriate evidence, we will give for qualified or disclaimer. You went for checking opening balance, you are not getting anything. You are not getting ledger, you are not getting financial statement, you are not getting audit report. So we go for qualified or disclaimer. Then if there are material misstatement, we go for qualified or adverse. If there is a lack of information, qualify disclaimer. If there is a material misstatement, qualify or give adverse. Then there is a consistency of accounting policy. If it is not consistently applied, there is no consistency and changes are not, there is no consistency and changes are not appropriate. Two things are happening together. First of all, there is no consistency, there is a change and changes are not appropriate. That means they are not justified, accounted, presented, disclosed properly. If this is the case, give qualified or adverse. If there is no consistency and changes are not properly done, qualified adverse. What if there is a modification previous year audit report? If there is a misstatement in previous year financial statement or modification previous year audit report, simply apply 710. Don't apply this standard. It is better explain in essay 710. Then there is the next question. No change in opening balance. No change in opening balance. Auditor is not checking things only because there is no change in opening balance and closing balance. It is a wrong approach. Only because opening and closing balance was same, not to check it. It is not appropriate. Only because opening investment, closing investment are same is not a correct approach. They are saying same balance has remained same, and because balance has remained same, we are not checking it. Because they are writing first audit assignment objective of SF 510 to check two things: whether opening balance are free from material misstatement, whether there is a consistent. Explain the complete audit procedure again, same thing. And there is one more thing they have asked: written representation. This is the extra thing. Important, written representation. Why? Just confirm whether there was really no change in opening balance throughout the year. Listen, if there is no change in the opening balance, still you have to go and check it. Explain objectives, explain audit procedure, because it may happen that internally some things have changed. And even if there is no change, ask her WR, what is written representation. Even after obtaining all the evidences, sometimes we feel lack of assurance. We want more evidence, we want support. In that case, we can take written representation from SA 580. What is analytical procedure? Financial or okay, let's see. Simple. Page number 14, second column. Analytical procedure is one of the methods or one of the techniques of checking financial information. It is one of the way of evaluation. It is one of the way of evaluating financial information. In this, there are 4 steps. Number 1. First, understand what are the plausible means probable. What is plausible, probable relationship of the financial information with other financial and non-financial information? Understand the relationships. For example, we know that sale is having close relationship with GST. with commission given to the sellers, then gross profit, then freight outwards, then advertisement. So it is having close relationship. Simple. Step number 1 is understanding with whom it is having close relationship. Once you understand the close relationship, collect relevant data. For example, we collect data of GST and sales. Collect data of GST and sales. Step number 3, compute expected value. Use GST and do reverse calculation. If this is 18, then how much is 118? Do reverse calculation. Do reverse calculation and predict what are the sales. That's called expected sales. Step number 3, we predict what will be the sales, what will be purchases, what will be debtor turnover ratio, creditor turnover ratio, inventory turnover ratio. Predict it. And after predicting it, compare with actual. Compare with actual and see whether there is a inconsistency. There is a inconsistency. If there is an inconsistency, go and investigate that. If there is a big difference, go and investigate that. Quickly, it's very simple, guys. Analytical procedure is one of the way of evaluating financial information. First, we understand its relationship with financial and non-financial. We look for probable, plausible relationships. Once we understand that, we collect data, then we compute expected values. We predict it. We compute expected values. When we compute expected values, we compare with actuals. And if there's a difference, we investigate it. You can use it at 3 places. You can use analytical procedures at 3 places. Where? Planning phase. Planning phase, you can use it. Collect loads of financial, non-financial information of the company. Compare with previous year. Compare with others. There will be loads of learnings. If you compare with previous year, you will understand where development is happening, where changes are happening, where there are more fluctuations. When we compare with others, we will understand what are our strengths, what are our weaknesses. So compare that, and with the help of that, you can find out fluctuating areas, risky areas, dicey areas. You'll find all those things. So I use at planning stage to understand risk. It can be used at planning stage, comparisons. You'll get a lot of fluctuation. You will get risky areas to obtain risk. Next. Now, you can use it at next. Execution for collecting audit evidence. Simply make a salary chart. If it is a horizontal, it itself is a proof that everything is fine. There is nothing, no problem. Salary chart will be generally horizontal. Yes, no. Month on month salaries remain same. In between, it will have a spike for bonus and so on. No. Now, it can be used at, listen, this is the chart. It can be used at 3 stages. It can be used at planning stage to gain a lot of understanding. It can be used as substantive analytical procedures. It can be used to get evidence about any income, expense, asset, liability. For example, salary, I was saying, make a chart. If it is a flat chart, it proves salary is appropriate. And lastly, it can be used to check whether overall conclusion of the auditor is appropriate or not. So after doing everything, compare current year with previous year. If my team is able to explain why there is an increase, decrease, if I have documents to explain it, that means my team has done good audit. Overall conclusion is appropriate. If they are still not able to explain, that means they have not done sufficient audit. They need to further work on it. Are you getting this point? So in analytical, it is also useful to check whether overall conclusion is adequate or not. Getting this point? Yes, no? Quickly, what do you mean by analytical procedures? And then its analytical procedure, and then next it can be used how many stages? 3: planning, execution, and overall conclusion. Now, okay, there are only 2 questions here. Fine. Now tell me, if you want to use it as substantive procedure, it want to be used as substantive procedure. What is the difference between test of control and substantive procedure? Okay. You perform same things in test of control and substantive testing procedure. That means you do inquiry in both, you do inspection in both, you do same things, same set of people. There's only one difference. Intention is different. Their intention is to check whether systems are properly designed and operating effectively. In test of detail, it is to check whether transaction balance disclosure are appropriate. Intention is different, to ensure system is designed and implemented. That is test of controls. To check whether transaction balance disclosure are properly accounted for. That is test of details. So there is a difference in the intention. At one place we have to check. At one place we have to check whether system is properly working, and other we have to check whether transaction balance disclosure are appropriate. Test of control is the intermediary step. Final step is test of details. Now listen. If you want to apply analytical procedures in substantive procedure, that's called substantive analytical procedures. Now, it's up to us to decide whether to apply test of details or substantive analytical procedures. Let's see, 4 factors you have to think. Number 1, is it suitable? Analytical procedure are not suitable to each and every area. They are not suitable for legal expenses. They are not suitable for legal expense, but they are suitable for GST. They are suitable for commission. They are suitable for cost of goods sold. They are suitable for salaries. But then again, check whether it is suitable for the area, and also check whether it is suitable for the assertion. They are suitable for completeness and valuation. They are not suitable to check existence of the asset. They are not suitable to check occurrence of the item. Are you getting this point? Yes, no. Analytical check whether it is suitable for that area. It is suitable for that particular area and particular assertion. Next, same, collect reliable data from wherever. Collect reliable data, accurate data. Then develop expectations. Predict. And if you are making prediction in range, what do you mean by range? Minimum, maximum. Ensure the range is precise. For example, you are saying provision for doubtful debt can be anywhere from 5,000 to 50 crores. Then everything will be fine. It should be sufficiently narrow. And lastly, compare, and if there is a difference, investigate. Guys, it's similar to definition. First, is it suitable? If it is suitable, get reliable data. If you get reliable data, compute expected values and then compare with actual. Then next is investigating results. How will you investigate results? If there is a big difference in expected value and actual, how will you investigate? Yes, exactly. It's very simple, straightforward. In fact, overthinking will lead to incorrect answers. If anytime we obtain, there is a big difference If anytime we obtain, there's a big difference. The first thing we go for is inquiry. There are two ways of investigating. Quickly, as per SA 520, listen. Two ways of investigating. Number one is inquiry. Ask management to come and sit and ask them all the questions and cross questions. Why this difference is there? Why not this? Why not that? Why this is the reason? Why that is the reason? And second, so first go and check. First go and do inquiry, and second perform other audit procedure as necessary. Okay. Once again, how many ways of investigating? Two. That is inquiry, and if required, other audit procedures. When you are in that also they have written, if you are not happy with the inquiry answers, then only you go for other audit procedure. If you are happy with inquiry, they said that your profitability has increased by 5%. They have given exact detail with all credit. Then fine. If you are happy with inquiry, no need to perform other audit procedures. You are not happy with the answers given by them, you have to perform other audit procedures. Situation where other audit procedure may be required. For example, other audit procedure can be anything, matching with different documents. For example, manager has been unable to provide explanation together with audit evidence obtained relevant to the management response is not considered adequate. So whenever he thinks that management is not giving proper answer, justified answer, he can go for other audit procedures. They are doing the same thing. Let's freeze, guys. We are through with SA 520. I understand there are a lot of essays, a lot of things. It's okay. Okay. See, now we were discussing this. Nowadays, everyone wants everything on YouTube. But the fact remains that are people really sincerely watching it? Now, when I remember now, we started our session at 9 o'clock in the morning and we'll be continuing till 6 o'clock. And if generally I have seen, in between things get little sluggish. But then by the end of the session, everyone is alert. So it may happen that instead of 6, we end up at 6:30. Sir, as of now, so I think even half an hour is typical. Okay. But then, so around 9 hours, 9.5 hours, definitely in between we have break of half an hour and so on. But then that is the whole idea, that you sit for those 9 hours at a stretch and you try to focus. Because I've seen then students simply increase the speed. 50% time they are able to understand what they are listening. 50% time speed is increased and only lecture is getting over. And then I have seen the lecture. Okay. Anyways, so make full use of that, guys. Let's see. Sometimes even I get derailed. Okay. Now this is the question. While planning audit, you wanted to apply sampling. Okay. What are the risk factors? What are the risk factors in planting? What are the risk factors? Okay, let me do this. Nothing like risk factors. You simply have to explain sampling risk and its two types. That's why I focused on. That is how they ask. What nonsense? What are the risk factors? There is nothing called risk factors. There's nothing called risk factor. You need to understand when there's risk factor, we have to explain sampling risk and its two types. What do you mean by sampling risk? Okay. The sample selected does not represent the population. Okay. Simple. Listen carefully. Chances that conclusion obtained from the sampling process is not the conclusion which you could have obtained by 100% checking of population. Chances that sampling will not give you that conclusion which you could have obtained by doing 100% checking. That means sampling is not representing truth. It is not representing reality. It is not representing facts. Once again, it's very simple. Chances that conclusion obtained from sampling is not the conclusion which we could have obtained through 100% checking. Chances that conclusion is not representing facts of population. That is called sampling risk. There are two types of risk, type 1 and type 2. Type 1 risk and type 2 risk. Can you use sampling in test of control? Yes, we can use sampling in test of control as well as test of details. For example, there are 20 bank accounts and we make recon monthly basis. So how many reconciliation in a month? 20. So 20 into 4, 80. Suppose we have 20 bank accounts and we make weekly reconciliation. Sorry, we make a weekly reconciliation. So in a week, 20. In a month, 80. And in a year, 80 to 12, 960. Bank reconciliation is the internal control system which maintains accuracy of bank account. Which maintain accuracy of bank account. Can we go and check all 960? We'll hardly select 2025. If this 2025 bank reconciliations are proper, then if this 2025 are proper, then all the bank reconciliation must be proper. So that is example how we can use it for test of controls. Then we can use it for test of details for checking income, expenses, transaction. That is fine. Okay. Now there are two types of risk in sampling, type 1 and type 2. What is type 1? Everything is looking good. See, we have highlighted there. Type 1, type 2. Type 1 means after sampling, we are thinking everything is good. Type 1 means after sampling, we are thinking this is good, this is good, this is good, everything is good, 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 good. But in reality, it is because of error. In reality, things are not good. What will happen because of type 1 error? In TOC and TOD, listen carefully, it's very simple. Because of type 1 error in test of controls, you will say that all controls are good. You will feel all controls are good. It will lead to over reliance on controls, relying much more than required. That is called as over reliance on controls. Because of type 1 error, you may think everything is good, everything is fine, and it will lead to over reliance on controls. Next, what will happen in test of details? You will feel everything is good. So we'll keep on accepting, okay, this income is good, this expense is good, next. Because of type 1 error, you will keep accepting this is good, that is good, everything is good, and you will keep moving ahead to next areas. It will lead to incorrect acceptance. You will keep on accepting things as appropriate, but then they are not. So in test of detail, it will lead to incorrect acceptance. It will lead to incorrect acceptance. What will happen because of type 1 error? There will be over reliance on controls. We'll accept wrong things. It will reduce quality of audit because quality of audit, it will reduce effectiveness of audit. Our opinion may go wrong. We are relying much more than required on controls. We are accepting wrong things. Our opinion may go wrong. Type 1 is the most dangerous risk. Our opinion goes wrong. It affects effectiveness of audit, quality of audit. What about type 2? Type 2 means we think everything is bad, everything is bad, everything is bad. If we think everything is bad, but in reality, it may be appropriate. If we think everything is bad, what will happen in TOC? It will lead to under reliance on controls. We are relying much less than required, under reliance on controls. And TOD, see, we may think everything is bad. We may think this is bad, that is bad. Listen, if we get misstatement, we will increase audit procedures. Listen, because of type 2, we may not rely on controls as required. Because of type 2, we may reject everything. This is wrong, that is wrong, this is wrong, that is wrong. But that is a incorrect rejection. Because of this, you are rejecting everything. You are getting misstatements. You will increase your audit procedure. You will increase audit procedure. In sampling, you are getting misstatements. So you will go and check whole population. But there you didn't find anything. It led to wastage of time. It affects efficiency of audit. Is point clear? Type 1 error. Everything is good. Everything is good. Correct. But things may not be that good. It affects quality of opinion, effectiveness of opinion. Here we think everything is bad, bad, bad. But in reality, everything is fine. Because we thought it is bad, we increased our audit procedure, we checked a lot of things, we didn't get anything. It affects efficiency of audit. I hope it is clear what is effectiveness of audit and efficiency of audit. Sampling methods we will not go for. Sampling methods will not go for sampling methods. It's very simple, straightforward. So we'll not go for that. Let's see, this is important, guys. 78.500. November 22 RTP. Okay. And then FADU chart revision, we cover things. Let's please. In fact, that is the last question for that. Then we enter 550 related parties. Okay, tell me. How many steps are there in sampling? How many steps? Oh, okay. I don't know exact step, but I know steps. Okay. 7 steps. Come to page number 15. There are 7 steps in sampling. Number 1. In the initial stage, we decide a lot of important things in sampling. For example, what we want to check, define population. What we want to check, define population. What are the characteristics of population? Is it homogeneous or heterogeneous? Whether to stratify or not. In initial stage, we think what do we want to check, what is the population, where to stratify or not. First of all, we need to define population. For what we have to make conclusion, define what is population, whether to stratify or not. Then what to check? whether I want to check occurrence of the sales or completeness of the sales, what is the objective? Then what will be the audit procedure? Okay, I will do inspection of documents. What will be the audit procedure? What is the evidence? Dispatch records are the evidence. Listen guys, quickly. In the initial step of sampling, we take crucial decisions for what we have to make opinion, population, where to stratify. Then what we want to check, sales or purchase, which assertion, what audit procedure will be performed. All these basic decisions need to be taken. That is called a sample designing. After sample designing is done, we decide sample size 50, 100, 150, 200. What will be sample size? Then we decide selection method. Is it simple random or stratified random? We decide sample selection method. After sample selection method, then we perform. Once we select, what we do? Once we select, what we do? Perform audit procedures. We go and perform audit procedures. Once we perform audit procedures, what we'll get? Mistakes. In test of control, we get a mistake that is called as deviation. And in test of detail, when we get mistake, it is called misstatement. Once we get mistake, listen guys, once again, first we take important decisions, that is called as sample designing. Then we set sample size. Then we select sample. After selecting sample, we perform audit procedures. Then we understand nature and cause of deviation misstatement. Nature and cause. Why there is a misstatement? What is the reason? Nature and cause. And then we make projection. It is so much in sample, then how much in population. And finally, we evaluate the results. We analyze the results and make conclusions. How many steps? 7. Are you getting this point? Okay, now question is, this particular question, November into RTP. They are asking, they first talk about in general about sampling. Whether the use of audit sampling has provided reasonable basis for conclusion about population that has been tested. Okay, sir, what is this statement? Whether anyone would like to interpret? Whether the use of audit sampling has provided a reasonable basis for conclusion about the population that has been tested. Okay, I will explain. Listen. Come to page number 17. First time they have asked it. And it is important because of November 22 RTP. Very high chance it come with exam. Let's understand few things first. Do you know what do you mean by three different levels? What do you mean by tolerable level? Tolerable rate of deviation. Tolerable rate of deviation or tolerable level of misstatement. Tolerable level means acceptable level. Even if deviations are up to that level, we can assume that controls are operating effectively, no need to worry. Even if misstatement reach that level, we can assume that there are no material misstatement in population. Tolerable level means acceptable level. All the deviations and misstatement of the population till this level is absolutely fine, acceptable, no issues at all. So tolerable levels means acceptable levels. Okay. Then we have expected level. What is expected level? Just before sampling. Just before sampling, considering past historical data, present circumstances and situation, we make predictions. What will be the rate of deviation? 20%, 30%, 40%. We make prediction. What will be the misstatement? What will be the rate of deviation? What will be misstatement? We make those predictions. That is called as expected level. Just before sampling. Just before sampling, we make predictions as per historical and present circumstance, checking few things. What is expected level of rate of deviation? What kind of deviation you expect and what kind of misstatement you expect? Are you in this point? Sir, why we do that? That is important. That is used for decision making. That is used for decision making. For example, suppose I computed expected rate of deviation. I thought controls will fail 30% time, 30%. Rate of deviation is 30%. That means out of 100 times it is applied, it will fail for 30 times. Okay. And I am told that tolerable rate is 20%. Before sampling only I can understand, I can predict that rate of deviation will be 30 and tolerable limit is 10. Suppose 10 tolerable limit. I can clearly say that tolerable limit is 10 and expected is 30. Controls are going to fail. Why should I waste time in sampling and related processes? Before doing sampling, I know that it is crossing tolerable limit. Why to go for sampling? Directly go for. We know that controls are going to fail. Why to waste time in testing? Are you getting this point? We compare expected levels and tolerable levels, and whenever we feel that expected levels are going to cross tolerable levels, let's not waste time in test of control. Directly apply substantive procedure. Suppose in substantive procedure, expected level of misstatement is high as compared to expected level is high as compared to tolerable. Then why waste time in sampling? Directly go for 100% checking. Are you getting this point? Let's freeze. Expected level is computed before sampling, and it is an important factor with the help of which decisions are taken. Then we have projected level. Everyone is aware what is projected level? Yes. If so much in sample, then how much in population? That is expected levels. Now listen guys. Now it's an interesting thing here. In Delhi also we finished off first chapter on day 1. Fine. Okay. Once again, I'm explaining all the three. Maximum acceptable level is tolerable. Just before sampling, we make predictions. We make predictions what is going to happen. And if we feel before doing sampling only that controls are going to fail, why to waste time in test of control? Directly go for substantive. Or we are going to see that we are going to get misstatement. Why are you wasting time in sampling? Directly go for 100% checking. Just before sampling we compute. Again, just before sampling we compute expected rate of deviation and expected level of misstatement. And third is projected. We project if so much in sample, then how much in population. Now let's see, guys. Three situations are given. Suppose we project. Suppose before that suppose we expect that misstatement will be 20 lakhs. Misstatement will be 20 lakhs. Okay. And tolerable level is 50 lakhs. Quickly, what is tolerable level? 50 lakhs. And expected level 20 lakhs. Now understand. We selected a sample and we made projections. And it is coming to projected level 10 lakhs. Oh, great. I have made projection after selecting sample and checking it that I will get only projection of 10 lakhs. Projected misstatement level of 10 lakhs only. It is even below expectations. It is even below the expectation of 20 lakhs and much below tolerable level. I made projections and it is hardly 10 lakhs. I am getting strong evidence, confident evidence, that is called reasonable basis. I am getting strong evidence, confident evidence, reasonable basis that there are no material misstatement in population. There are no material misstatement in population. Are you getting this point? Once again, after doing sampling, we made projection. We made projection that it will be 10 lakhs of misstatement in population. It is much below expectations. Expectation was 20 lakhs and much below tolerable level. With full confidence, we can say there will be no material misstatement in population. Now listen carefully. When we can say that with full confidence, we can say that is called we are having reasonable basis. Reasonable basis means acceptable basis, strong basis, strong evidence to draw conclusion. Is everyone clear about this? Now next is, suppose our projected level is 80 lakhs. My goodness. Projected level is how much? 80 lakhs. Means what? My expected level was 20. Tolerable level was 50. Projection are much beyond tolerable level, much beyond tolerable. With full confidence, I can say that there are material misstatement in population. That population is having material misstatement. With full confidence, I am having evidence to prove. When we have strong evidence to prove anything, that is called as reasonable basis. Strong basis means strong evidence to prove something. Are you getting this point? Now listen carefully. Listen, if your projections are much below expectation, you are happy. Everything is all right. If your projections are beyond tolerable, okay, things are bad. Again, with full confidence, I am saying things are bad. Now, the interesting thing is this. Supper or projection is 30 lakhs. Now, this is a state of confusion. Misstatements are more than expectation, but less than tolerable. It is more than expected level, but less than tolerable level. Now, what to do? What SA 530 says that, listen, auditor, you are breaching your own expectations. That means somewhere your understanding is not appropriate to the mark, because misstatement are going beyond expected levels you were thinking. but still it is less than tolerable level. Suppose if it would have been less, situation 1, confidently everything is good. If it is beyond tolerable, confidently everything is bad. But if it is in between, this is called stage of confusion. And here we say that we don't have reasonable basis to draw conclusion. We don't have strong basis, strong evidence to draw conclusion. Now what to do? Call management, understand the reasons. Call management, why this is happening, why it is going beyond expectation, understand reasons. Reperform sampling, go for a bigger sample, go for more audit procedure, again try to draw conclusion. Again try to draw conclusion. Are you getting this point? Again trying to draw conclusion means whether it is either below expected or above tolerable. If you get evidence, good. If you're not getting evidence, we will assume that there are material misstatements. We will take a conservative assumption. We will assume there is a material misstatement. Are you getting this point? Once again, let's freeze final thing, okay? Because we have spent time, let's ensure everything is in line. Tolerable level means acceptable level. Even if things are wrong beyond up to this level, it is absolutely fine. It is acceptable level. We have tolerable rate of deviation for TOC and tolerable rate of misstatement for test of details. Then we have expected levels, which is computed. Then we have expected levels. Then we have expected levels, which is computed just before sampling. It is a rough estimate, judgment. And then we have which level? Projected. So if projection, once again, if projection is below expectation, everything is absolutely fine. We'll declare with high level of confidence that controls are operating effectively and with high level of confidence that there are no material misstatement. If these are beyond tolerable level, if it is beyond tolerable level, with full confidence we'll say misstatement controls are not operating effectively. In test of detail, we'll say there are material misstatement in the population. If it comes in between, there is a stage of confusion because it is more than expectation and less than tolerable. It is a stage of confusion. We'll go for resampling. We'll perform more audit procedure. We'll go in depth and try to draw conclusion next time. And if we are not able to draw, again you fall in that confusion thing. We will take a conservative assumption that controls are not operating effectively and there is a material misstatement in population and act accordingly. Are you getting this point? Now they have asked us, what do you mean by reasonable basis? So you are supposed to explain that in sampling, the last step is to evaluate the result, to study the result, to analyze the result, and to draw conclusion whether sampling is giving us strong evidences or not, reasonable evidences or not, reasonable basis or not. If it is providing reasonable basis, we are happy, we'll draw conclusion immediately. But if we are not getting, it is a stage of confusion. We'll perform further investigation, resampling, more audit procedure and try to get conclusion. Are you getting this point? We will extend our audit procedure to try to get conclusion. If we are not able to get, we take an assumption that in test of control, controls are weak. In test of detail, there is a material misstatement. अरे कुछ समझा? Okay. Now listen. Guys, we have seen a lot of things from the morning. We first saw 200 series, then 300, then 400. In 500, we saw essay 500, then 501 inventory, 505 external confirmation, 510 opening initial engagement, opening balance, 520 analytical procedures, 530 sampling. and we are focusing on all important questions. There is a high probability that each one of the question is there. Okay. थोड़ा इधर उधर का बात क्या करेंगे? Student ask very interesting. It's very important that, see, if only it is a concept, correct? Long number of hours. After some time, people are like, you teach properly because recording should happen. We will think what to do. So I was in Aurangabad for a session, Maharashtra, Aurangabad, and it was an inter-session then, but final students met me after the session. 2 hours we were discussing various issues, various matters. Okay. But they were good, good discussions. So one of the discussion was, sir, whether these selective studies are good. No one wants selective studies. No one wants to do selective study. Who want to do it? But it's problem of time. Everyone wants to cover everything. I want to cover 100% course. I want to revise it 3 times, 4 times. But the point, it doesn't happen that way. It is because of the time pressure we have to do it. It is because of time pressure we have to do it, and CA is all about incremental approach. Okay, let me have mastery of 250 question. Let me have mastery of tricky concepts of FADU. If time permits, I will add few more. It's a step-by-step process. It is because of the circumstances we have to at least do this much and then take the next step. Okay. And if everything goes well, sometime it may happen. I finished up 250 also, finished up tricky concept also, 350 also. And I did more 5 questions from each chapter. And now my coverage is super good. Everything has happened, but at least you should start studying. So many times students are not able to start studies. This selective approach helps them at least to start studies, come in rhythm, and so on. So selective studies is start of the studies. And if everything goes well, you will end up doing much more. Correct. Then second thing, so that was a good conclusion we reached. That is start, and let's see. And some many times, those who are cool, calm mind, those who always keep smiling, bindas, tension free, fearless, those students tend to do much better. They're tension free. They're not worried. They're not tense about anything. They don't take tension of failing. It's okay. हिंदी में मैं बोलता हूँ कि डोंट बी अफ्रेड जब तक कोई गोली नहीं मारता. Someone is shooting you, don't be afraid till that time. It is absolutely fine. And then next, first rank holder gets around 70%. 70%. That means he was not aware about 30. And there must be around 10-15% he was not aware, which was not asked. So in the first rank holder, even first rank holder was not having a lot of knowledge. It is absolutely fine if you miss few topics and concepts. Absolutely fine. There is not a single person who covers everything. Something or the other is always left. Don't worry about it. I got a rank, you know how much percentage I was having? 57. 57%. So why I'm explaining this? And when I got rank in 2 subjects, in one subject I scored 40 and in one 42. Because my other subject used to go well. So costing 40. Costing, there's a consistency. Inter also has scored 40, final also has scored 40. It's my favorite subject because there was no 39. Otherwise, everything was gone. Always got 40 only. What I want to say, it's okay if your studies are not complete. It's okay if you are lagging behind. If you have strong set of mind, you will be able to give your best fight. And many times that fight is enough to get to the other side. Don't be worried a lot. Okay. So message number one was, okay, it's okay to do selective studies. I understand. It's a starting point. Let's start at least. Something or the other will be left out. Left out. It is absolutely okay. And third, let me tell you one more thing. All of us are different. Please accept that. And all circumstances are also different. Like my cousin, he's a lawyer. He's a gold medalist. He remembers even commas in the law. He is gifted with sharp memory. He tells me what I used to do, what we did 10 years back on my birthday. Don't give me depression. I don't remember what we did last year or before that, and you are telling me what we did 10 years back. So some people are gifted with phenomenal grasping, phenomenal memory. Don't try to compare your effort with them. Don't blindly follow that. It is okay. Everyone has its own capacity. Work as per that. Someone may be able to do 4 revisions, 5 revisions. When I got rank, I did only one reading. Not even multiple. Everyone is different. So have faith on your capabilities. Simply follow that. Don't need to compare and copy from anyone. Because many times, so many revisions should be there and this should be there and that should be there. Again, you end up doing nothing. Or you end up killing your confidence. Most important thing in this last 40 days, 40, 50 days, lot of 50 days is how confident you are. If you are confident, you are energetic, your output is better. And if you're putting a lot of pressure on yourself, correct, your confidence will go down and you will spoil a lot of your days. So don't do that. Okay, time pass? Okay, time pass? No. 45. Yeah, okay. Now, listen. Next question is essay 550. Okay, only two questions are there. Now, question is, so you have a question, how to verify existence of related party transaction? How to verify existence of related party transaction? Yes. How? Tax audit report. Yes. Board resolution. Ask management only. Okay, now listen, guys. Why ask? So, question is, you have to train your junior how to check existence of existence of related party transaction. Now, you guys, no one taught us anything. What will we teach our seniors, sorry, juniors? Okay. So they are going to ask like this. How will you check existence of related party or sources of related party transaction or the best records and document you should review for related party? Listen guys. Hello. There is a possibility that management intentionally or unintentionally, by their mistake or intentionally, they may not give us list of all related parties. Some related parties may be left out, or all related party transactions. Some transactions may be left out. There is very much chance that management intentionally or unintentionally miss some names of related parties and some transactions of related party. As an auditor, what documents you should check so that you get information about relationships and transactions, related party relationships and related party transactions. So they are giving you list of documents basically. But this is how they ask. How will you check existence of related party means how will you find out about related party? Possible sources of related party means what are the documents you should see? So all of them, they want to ask only one thing. What kind of documents and record you should go and see to obtain information about related party? Let's see the chart. Page number 18. Page number 18. So it says, be alert throughout the audit with respect to related party relationships and transaction. Management may intentionally or unintentionally hide information from you. So be alert and check these documents. Now this is mandatory. First thing is mandatory. Three things are mandatory. Number one, most reliable evidences ever is external confirmation. Obtain external confirmation from bank. Bank, listen, this is the name of the party. I want all the transaction company has done with this particular related party. Ask bank for confirmation. Ask bank, what are the transactions during the year with these parties? Then you can ask law firm. Listen, law firm, give external confirmation. Give external confirmation. How many contracts are signed with this related party? They will give you information. Then you can have more confirmation with other third parties. Like financial institutions, you can have with from them more information. You can ask director. You can ask directors also. So let's freeze guys, it's very simple. To obtain information about related party relationships and transaction, it is mandatory to obtain external confirmation from banks. Smaller than banks, get from banks, then legal counsel and other third parties. Go for minutes. Now you know this. All related party transactions are approved by audit committee or board of directors or shareholders. Go and see minutes. From minutes, you will get a lot of information about related party transactions which were approved. Go and see whether they are properly disclosed in the list. Any other record can become very important. For example, merger and demerger. Merger, demerger, a lot of related parties may come up. Demerger, specifically, so reconstruction. All those may become your related party and they will be related party transaction. So obtain external confirmation, then get the minutes and any other important document in the circumstances. Now these are the documents which may give you information. See, for purpose of remembering them, we have arranged it in a sequence. Most important is law. So law related document. The next important is contract. So contract related document. Below contract, next is shareholder. Most important is law. Below law, there is a contract. Below that, there is a shareholder. Below that, there is a director. Then professionals. And below the company, we have subsidiaries and associates. Let's see, guys. So this is just to remember law related section. So when you think about law, automatically you think section 189 register is a big source of information about related party and transaction. Then information supplied to regulatory authorities like SEBI, SEC and 3CD tax returns. In tax returns, you get information about related party relationships and transactions. Big source of information. Then contract. Talk to legal team. Contracts which are renegotiated again, changed again, there's a high chances they are with related party. If you have contract for not ordinary course of business, everyone understand not ordinary course of business? Things which normally doesn't happen. It is called not in ordinary course of business. So if you are finding contracts which are not in ordinary course of business, there is a high chance that such things are done with related parties. So first go for law 189 register, correct? And then returns you file to SEBI, SEC, tax authorities. Below law, then we have contracts. Contracts which are renegotiated are outside normal course of business. Then below contract, you have shareholder. See shareholder register. Person is holding huge shares. They all are our related parties. People who are controlling us more than 50% or who are having significant influence over us 20% or more, they are our related parties. Then director, see director register. Director will tell you in how many other companies he is director. Those other companies may become our, if he is executive director both the places, they will become our related party. Then for transactions with director, go and see their contracts, their remuneration, their contracts. For transaction, go and see their contracts. You will get remuneration. You will get related party transactions. Then below that, see their life insurance policy. Even that is a transaction, related party transaction. See pension plans, that is a related party transaction. Everyone understands statement of conflict of interest? Sometimes it happens that director is having personal interest in a company and that company is having transaction with the company where he is a director. Sometimes director may have a personal interest in the third parties with whom companies dealing. Yes, no. Then in that case, he gives statement of conflict of interest that I am having interest in so and so companies. So I will not attend the meeting and I will not vote when you are deciding things about them. So statement of conflict of interest may tell us where else director is involved and they may become our related party. See, again, it's okay. You may not remember everything. It's absolutely fine. But even 50-60% will be good enough. Then professionals. See internal audit report. That can be source of related party. See invoices with professionals. Generally, professionals of the related party are same. If he is doing combined billing of 100 entities, that means they may be related parties. Subsidiary and associate. See investment register. You will understand who are subsidiary and associate. Especially you will understand sub-subsidiary. Let's freeze, guys. They are giving us source of records for finding out related parties. This is a source of information, records. Now this is a very time pass question. Very time pass. Guys, if it comes in exams, it is wonderful. November 20 mock, November 21 mock. 84.000. It's absolutely time pass. Moment you read it, you may think, oh, what a complicated case. What a complicated case. But then there is nothing in there. Nothing. Let me explain what they have written. In first point, they have said that we have taken a loan. A company has taken loan from holding company without any interest. Without any interest. Then they have received asset from holding company free of cost. Loan free of cost. Asset free of cost. Then they have made some payment of per month 3.25 lakhs, but the actual payment should have been only 3 lakhs. 0.25 is not in arm's length, it is extra payment. Okay. You have received few things free of cost. You have made something extra. And then there is a refusal. You are not ready to give information about some items. So you may start thinking, okay, getting things free of cost. You may start thinking about Companies Act. It is a related party transaction. You may start thinking about related party transactions approvals. You may start thinking about frauds. And see the last sentence. Explain, advise items to be reported to TCWG. They are simply asking what item should be reported to TCWG. All of them. So question is, this is the issues. Out of this, what item should be communicated to TCWG? All of them. And again write the question. Inform this, inform this, inform this, inform this. Answer complete. Suppose this question comes in exam, November 2021, 2 times it has been targeted in mock paper. You read only last line. What will you communicate to TCWG? Listen. What they have written. SA 550 says that all the significant matters, that means all the big matters which come across, all the significant matters, big matters which come across during audit of related party relationships and transactions should be reported to TCWG. Not even 260, they are saying all the significant matters which related to related party, all the important matters should be communicated to TCWG. And this will, then they give example. Non-disclosure, and this will also include instances where management is not disclosing intentionally or unintentionally name of some related parties or of some of their transactions. So they are giving example. Listen. First of all, they are saying all the important matters, significant matters related to related party should be informed to TCWG. And then they are giving examples. For example, listen, if related parties are first identified and then approval, then records, then gives disclosure in notes to account. Suppose mistakes are in these 4 steps. Explain TCWG everything. Number 1, suppose some related party relationships or transactions are left out. They were not able to identify. We identified it. Report it. Some approvals are not taken. Report it. Some records are not properly maintained. Report it. Disclosures are not there proper. Report it. So basically, if anything wrong, report it to TCWG. no proper identification or no approvals or no record keeping or no disclosure, report it. Report it. Then they're explaining small thing. Are you aware what is difference between TCWG and management? Yes, no. So people who work 9 to 9, they are management, handle operations. People who come quarterly basis, monthly basis, quarterly basis for supervision, and they take long-term decisions and make policies, they are TCWG. It may happen that both are different altogether. For example, we have board of directors, TCWG, and management, we have CEO, CFO. All the directors are non-executive. They are non-executive, and companies handled by CEO, CFO, and CS. So it may happen that both the groups are totally different. It may happen few people are common. It may happen all of them are same. For example, partnership firm. There are 4 partners. They are only management and they are only TCWG. So what they are saying, if both are same in any company, management and TCWG, if both are same, then in that case, no need to communicate again. Listen, they make the full summary again, everything as per that computers were given free of cost, loan was given free of cost, prices were not arm's length, CFO is not giving information. So communicate all the matters to TCWG, and then they are just giving overview. Listen, all the ensure compliance of Companies Act, whether proper approvals are okay. Before that, we do few things quickly. 4 things in related party. Number 1, identify, ensure identification is as per definition given in AS 89 India's 24. Whether approvals are taken as per Companies Act, whether records are properly maintained, and disclosure is again as per accounting standards and Ind AS. Further, in reporting we have CARO clause number 13, that is also for related party. Listen guys, they are simply giving references. Let's freeze the case. They gave some circumstances and then they asked, should you report it to TCWG? Of course, you should report everything to TCWG. Give reference of 550, that 550 says all significant matters related to related party should be communicated to TCWG. Give examples of that. No proper identification, no approvals, no records, no disclosure, everything should be reported. And simply write summary of all those things. And apart from that, then you should say that identification should be as per Ind AS AS, approval should be as per Companies Act, record should be as per Companies Act, and disclosure should be as per Ind AS. And in reporting, also which report? CARO report. If this question comes, it is a lollipop. But 50% of the students will get frightened because they may not read that last line. Moment you have seen this question carefully, you will be alert. You remember doing this question before? Yes, no. Why I'm saying this? This is 21 mock. So, guys, we are through with 550. Don't worry. We'll finish off chapter number 1 soon. 560, 570. And as I said, regarding tricky concept, there is one more video. That's it. Enough of studies. Yes, you can watch it in Hindi also. Yeah. If someone is more comfortable in Hindi, this is a special session for English. Special session for English only. Okay. Chennai one is also in English. We have already completed Hindi sessions. Hindi sessions are completed and they are on YouTube also. These especially in English. Okay. So I remember Delhi I was able to complete till 570. Few questions. First go. See, completing is very simple. Then you reduce number of then last day was best. 3-4 questions, bank audit, 2-3 question insurance. But the feel was okay, everything is done. That little bit of confidence should be there. I will do, don't worry. In Delhi, there was time limitation. We studied till 4:30 only. 4:30 only because classroom was not available. Here, there is no such restriction. Some people are frightened. Please save us. No. 6 o'clock we will 6. Nearby that we will stop. Now listen. Okay. Come on, guys. 2 questions on 560. Then we are through with 560 also. See, and planning is such that concepts covered in all the both the sessions are little different. We have different concepts there, different concepts here. Uh, Now, subsequent events, all the events which are happening after balance sheet date till the date of signing audit report. So in between everything is called subsequent events plus facts. Facts means information plus all the facts of the earlier period, that is which were there at the time of signing and before that. Subsequent events also include facts which were existing at the time of signing or before that, which if known earlier would have changed opinion. Subsequent event include two things. Listen, subsequent event, page number 18. Subsequent event include two things. Subsequent event include two things. Events which are happening after balance sheet date till the date of signing audit report plus facts, that means things which were existing at the time of signing or before that, which if known to auditor before, which if would have known to auditor at the time of signing, he would have changed his opinion. If you come to know any big facts, even they will be covered in definition of subsequent events. And facts can be known before date of publishing also or after date of publishing. When we give annual report to public at large, that is called publishing. We may come to know facts before publishing or after publishing. Sir, what difference it makes? There is one change in the audit procedure. Listen. So SA 560 subsequent events, including events also and then facts also, which if known earlier would have changed opinion. Okay. And it is before publishing and after publishing. Now they have given audit procedure for each one of them. Audit procedure for events after balance sheet date till the date of signing. Audit procedure for facts known before publishing. And audit procedures for facts after publishing. So they have given 3 audit procedures. Okay. Now, and there is only one point which changes in before publishing and after publishing. Only one point, single point changes. Now listen. Page number 19. Come to this point. Listen. Auditor has to perform audit procedure for subsequent events which are happening after balance sheet date, before date of signing audit report. Okay. He has to perform audit procedure, and one of the audit procedure he has to perform is to do inquiry, is to ask whether subsequent events have occurred. And you all know which needs to get accounted. They are called adjusting events, and others are called non-adjusting events. SA 560 has given list of the subsequent events which either needs to get adjusted, or majority of them, as per Ind AS, if anything major happens, even if it is not adjusting, it should be disclosed in notes to accounts. In fact, this list is based on Ind AS only, complete list. Once again, you will get a question in exam. As a auditor, what inquiry you should do for subsequent events? Give examples. So we are going to ask following things. Matters which should be included while inquiring subsequent events. So they are saying, when auditor is doing inquiry for subsequent events, these specific inquiries should be done. Just for retention, I have divided in three parts. Inquiry related to assets, inquiry related to capital and liability, and overall inquiry related to assets. Whether after year end you have planned or sold, you have planned or you have done purchase or sale of any big asset. As per Ind AS, if after year end you have planned or done acquisition or sale of any big asset, it should be disclosed in notes to accounts. So we'll do inquiry for assets, whether you have planned for sale of acquisition or you have executed any sale or acquisition after year end. Next, again related to asset, whether any asset was taken over by the government or destroyed after year end. Compulsory acquisition. Again, that needs to be given. So we are doing this inquiry, and if anything comes up, that should be written in notes to accounts. Next, whether any event has occurred which affects recoverability of assets. That means any debtor has become insolvent, any item has become obsolete, and so on. So it's very simple. 3 points for the assets. Whether sale or acquisition is planned or it has occurred. Whether government has acquired or any destruction has happened. Or is there anything which affects recoverability? Then regarding capital liability, whether there is increase in capital or issue of debt instruments. Whether there is increase or issuance, increase of capital or increase in debt debentures. Whether new commitments and borrowings. So first they were asset side, now the liability side, where there is increase in capital or debt instrument, new commitments or borrowings. Again is the sequence of balance sheet. Share capital and debentures, borrowings. Is there anything which affects estimates or provisions? For example, litigation. A big litigation has come, result of the litigation has come which is affecting provisions or estimate. Any development regarding contingency, same lines. There was some contingency as on balance sheet date, whether any clarity has come up with respect to that. For example, government decision was pending, whether government decision has come up. overall, whether there is unusual accounting adjustment during the subsequent events, or is there any event which create doubt over your accounting policy? Means, suppose we have said that asset is going to continue for 10 years useful life, but during subsequent events it has been scrapped, so it questions appropriateness of policies and estimates. Okay, let's freeze, guys. I understand it's a little tricky, but then it has been asked in exams and it is there in our IMP list. Let's freeze. It is mandatory for auditor to do inquiry about following things. Divided into how many parts? 3. Asset side, capital and liability side, and overall. When talk about asset, sale and acquisition planned or happened, acquisition or destruction, anything it affects value. When it comes to capital, any increase in capital or debenture balances, any new borrowings, or anything which affects our estimates, our provisions. And overall, anything which is unusual during the subsequent event, unusual adjustment, and finally, anything which questions our accounting policy. Okay. November, this one, November 21 RTP. Okay, guys, even this is very important. Now listen carefully. Okay. First, let's understand the concept, then we'll read the question. Come to page number 19. Come to page number 19. Okay. Now listen. So, sir, your name? Jay. So we have Jay. He did non-stop audit for 3 months without a break. Not even Sundays are off. Finally, report is signed. And now Jay will go on holiday. There are 2 options. Goa or Kanyakumari. Goa. Maximum will be Goa. There is similarity between both. Both are based, spirit based. Huh? One is spiritual and one is spirit. Okay. So maximum times students select Goa and that is absolutely fine. So now Jay is at Goa. He is at Goa and he is on beach. Morning 5:30 is on beach. He's doing yoga. And he's having glass also, but then lemon water, fresh lemon water. Don't think bad about it. So the point is, Jay has signed audit report. Once audit report is signed, no obligation to perform any audit procedure. No obligation whatsoever. No obligation to perform. No obligation to perform any audit procedure. But then he was relaxing. Morning 8 o'clock, his phone vibrates. There is a pop-up from the news app that the company for which he just did the audit, government has raided one of the godowns of that company. And there was a stock of 100 crores which was expired and government destroyed it. Standard says you are not supposed to do anything. But if you come to know this information from anywhere, from media, from emails, from colleagues, from friends, from anywhere, if you come to know any fact Facts which were existing on the date of signing. These expired goods where this matter was existing at the time of signing. If through any source you come to know about the fact which were existing as on date of signing audit report, and they are so big, which if known earlier would have changed opinion. But if he comes to know facts which if known earlier would have changed opinion, do three things. Number one, pack your bags, go back and discuss with management. Goa cancel. Go to management and discuss what is this fact, and management says okay, we'll explain. 1 year back, government said that expiry should be reduced to 3 years to 2 years. We changed our new production labels. We were changing old production labels also, but one of the big godown was left, and we forgot about it. And so the complete story is real. It is correct. You have come to know all the right things. So go and discuss with management and find out whether the information received by the auditor is authentic or not, appropriate or not. So discuss it. After discussing it, think about it. Whether amendment in financial statement is required. Yes. 100 crores stock should be written off. Loss should be booked. So first go and discuss and find out whether the information was truthful. And if it is truthful, next think whether amendment is required. If amendment is required, ask management what is your intention. So 3 words you should first discuss. Next, whether amendment is required. And if yes, next, what is the intention? Management says, we will amend financial statement. Whatever Jay sir says, we will amend financial statement. We will amend financial statement. Okay, great. If they amend financial statement, we will go and perform audit procedures. We will go and check subsequent event amendment. We will go and check whatever amendment was done. And now audit report will be revised. Again, it will be signed. Because it will be signed, few more days will be added between balance sheet date and date of signing. Are you getting this point? Suppose earlier you signed on 10th of June and now you are signing on 30th of June. How many more days are added? 20. For those 20 days, perform audit procedure for subsequent events. Listen, if they are amending, it's simple. Go and check the amendment. Whether the write-off is proper or not. Subsequent event amendment is proper or not. Go and extend audit procedures little bit. Go and cover more number of days till the date of signing. Issue new audit report. Sign it after board signs it. So go for, it's very simple. Once again, go and check the amendment. Go and check few more days for subsequent events. Make a new report and sign it. But always sign only after board of directors have signed it. So it's a very common thing. Suppose they say no, we will not amend. Suppose they say no, but law says that all wrong financial statement should be amended, or you feel that it should be amended, whatever, if it is required by law or required by your thought process. Correct? If they are not amending, what we'll do? If we are yet to give audit report, suppose we made audit report but we didn't deliver. Don't deliver it. If you are yet to give audit report, change it. If you are yet to give audit report, change it and directly give changed report to the management. Are you getting this point? You signed everything. Listen, they are not changing their financial statement. They are not changing their financial statement. We made a report, earlier it was clean. We will modify the report and give modified report that your financial statement doesn't give true and fair way. If financial statement are already issued, what to do? Ask management, see, this is a wrong financial statement, don't give it to others. If they doesn't listen, go and do something for the public. You can go and give public notice. that I am withdrawing my audit report, don't show faith on that. You can go and speak at AGM also. Let's freeze, guys. If audit report is signed, then no obligations. But if you come to know about facts which would have changed, opinion, first go and find the truth. Let's discuss. If it is true, whether amendment is required. If amendment is required, what is the intention? If they are giving the new report, great. We'll check the amendment, we'll check extended thing, give revised report, close the issue. If they are not ready to do it, but law feel it should be done, we feel it should be done, take appropriate action. We'll pressurize them. We'll give public notice. We will pressurize them to revise audit report. We'll give public notice. We'll go and speak at AGM. Draw line. Only this much is the relevant answer. Here you can draw line. Now listen. Now come to question. If
management has a technique. If the auditor obliges to like to go for publication.
SA says that if management is not amending financial statement, auditor should do something so that he protects the users. He should do something so that he should seek non-reliance on these reports. He should do something so that people don't rely on the wrong financial statements and audit report. And that is just an example that you can go and give public notice that we are withdrawing our audit report, or you can go to AGM and speak about it. So standard says to take appropriate action, and appropriate action will include these two things. Listen, as such, see, he's so the point is management is adamant they are not changing. What will he do? That's what we are discussing. He's taking steps to protect himself. Withdrawing his report, going and speaking it. It has two intentions. First, to inform everyone else, and second, to keep himself safe. That I did my part. Okay. Now, who he's not following non-compliance of SA. Not doing anything is not option given in SS. You have to do something. See, no obligation is till the time that he didn't come to know anything. Moment he came to know, he is under obligation. So that is a broad thing. Moment he comes to know, obligation is created. Okay, November 21 RTP, guys. Audit report issued on 25th of July. Case was filed on 4th of August. Incident happened on 17th of Jan. So basically, a big incident happened in the company on 17th of Jan. Ideally, they should have made provision as on 31st of March. But they didn't disclose anything. And then after case was filed, auditor came to know, okay, such a big incident happened in the company and I was not aware. So knowing about the case was fact for the auditor, which if known earlier would have changed opinion. After signing, he came to know about the legal case, which if known earlier would have changed the opinion. He discussed the matter with the management and determined that amendment is required. Management said, okay, we will show it in notes to account as contingent liability. On 31st of March, we'll show it as a contingent liability. And in April, only case is filed. There is no conclusion, only case is filed. So management is ready to show what? Contingent liability. An auditor says that he will put EMP to highlight it. Emphasis of matter, paragraph that a very big litigation is pending on the company. Whether Mr. Raj has properly done his duty as per SA 560. And what about the disclosures? Disclosure of the court case in financial statement. Now listen. First of all, explain everything which we have seen right now. Coming to know something after signing, that is fact. That is fact. To explain complete thing. There was no obligation, but if you come to know something, we should have changed opinion. We should have changed the opinion. Then we will go and perform so and so things. Discuss everything. We'll discuss amendment, how to address. If management intends to change, then what we'll do? If management doesn't intend to change, they take appropriate action. So basically, they are explaining complete thing. They are not discussing case only. They should have discussed. So it is November 21 RTP, and the whole thing is fact which is known after date of signing. And they're explaining if they amend what will be done, if they don't amend what will be done.
So, the last date will be till that financial statements are presented in Excel. After that, we can't go it. Or with us.
See, listen, SA 560 doesn't talk about AGM. SA 560 only talks before publishing and after publishing. But practically, we know that once financial statements are approved in AGM, it is difficult to revise it. You will have to go as per section 131 and 130, no, 130 and 131. 130 is mandatory revision of financial statements. 131 is voluntary revision of financial statement BOD report. Yes, no? So beyond AGM, it is difficult to revise. We'll have to follow Companies Act. Before AGM, it is easy to revise. You don't need to pass any resolution. Okay. So guys, basically the complete chart is explained. You need to explain that complete chart. Very important, November 21 RTP. Guys, we are through with 560. Last two standards left, which 570 and 580. Okay. SA 570, that is going concern. Now listen. SA 570 talks about 3 steps. 3 simple steps. Step number 1. Whenever you go to any audit, look for, are there any events or condition which create significant doubt over going concern? Are there any events or condition which create significant doubt over going concern? That means look for it. Are there any financial issues? Are there any financial issues? Are there any operational issues? And third, are there any legal issues, other issues? If there are some issues which you think can affect going concern, creating doubt, step number 2, perform additional procedures. Go in depth in the financial matter. Go in depth in the operational matter or legal matter. Get additional information. And step number 3, make conclusion. Make conclusion. First conclusion about material uncertainty. Make conclusion about material uncertainty and then make conclusion about going concern and then make conclusion about going concern and put it in the report. Now, what do you mean by material uncertainty? When going concern depends on happening or non-happening of future event, that is called as material uncertainty. But going concern assumption, that is material uncertainty. It can happen, there is a material uncertainty, but chances of happening is only 20%. So there is a material uncertainty, but still going concern is appropriate. Chances of happening is 30% appropriate, 40% appropriate, 50% appropriate, more than 50%. If in material uncertainty chances of happening is more than 50%, then going concern assumption is invalid, inappropriate. Are you getting this point? What I am saying, you can have a situation where there is a material uncertainty, and because of material uncertainty, going concern may be appropriate, may not be appropriate. Yes, is this point clear? Okay. Once going concern is inappropriate, then everything is gone. If chances of closing down is more than 50% in next 12 months, then going concern assumption is inappropriate. Quickly, how many steps we are supposed to perform? 3. Look for events or condition which create significant doubt over going concern. Financial matters, operational matters, legal matters. If there are such matters, go and perform additional procedures. And third, you have to make conclusion about material uncertainty and then about going concern. Now, let's see what is the first question in 570. First question is 94.000. Now listen. So basically, this is a very famous way of asking question going concern. They will explain this is a company and everything is bad. They have lost finance, they have lost business, people are leaving, this, that. So basically, they will say that everything is going bad. Financially, it is bad, operationally, it is bad. And then they are not having counter plan how to handle it. They are not having good plans. So basically, it is clearly that things are going extremely bad. They don't know how to protect company, and it is visible that they will not be able to continue for next 12 months. That means going concern is inappropriate. Going concern assumption is inappropriate. What should statutory auditor do? So they will give a case. They will give a case, and then they will say that going concern assumption is inappropriate. That is what they want to say ultimately. What as an auditor should you do? Listen, uh, I will say that come to traditional answer. It is okay, or any of the approach is fine. Let's see. As a standard answer, you should explain. That's for the new approach which these guys are following. As a standard, you should explain all the 3 steps. SA 570 going concern is applicable. It says that auditor should go and look for events and condition which create significant doubt or going concern. And there can be financial events conditions, there can be operational events and conditions, there can be other events and conditions. And then you explain if that is there. Step number 2, go and perform additional procedure. Go and perform additional procedure so that more evidence is obtained about it, so that we can draw conclusions about first material uncertainty and going concern. Step number 3, you say that you have to draw conclusion about MU and going concern. And now listen guys, about MU. Why this thing is so important. Moment any company is having material uncertainty, that means going concern depends on happening or non-happening of future events. Immediately auditor will call management, come here. Now it's very difficult guys. Now going concern is on a lot of stress. immediately go to notes to accounts, give heading material uncertainty or going concern, make a separate section, give heading, make a separate section, explain financial problems or operational problems or legal problems, explain how you are going to tackle these problems, and give a warning to users. Because of material uncertainty, company may not be able to realize its assets in normal course of business and pay off all its liabilities. Do it. And I will also put a separate section in my audit report that is called as material uncertainty over going concern. You also put it. I will also put it. Together we will inform everyone that going concern is under danger. If you don't do it, then you're trying to fool people. If you don't disclose about material uncertainty, that means you're trying to fool people. In that case, we will qualify or give adverse. So explain step number 1, step number 2, and then also explain when MU is triggered, additional disclosure is given in notes to accounts, and also reporting is done in audit report. So basically what you're doing, you're giving a summary of the standard. You are giving step number 1, go for events and condition. You're giving step number 2, additional procedure. You are saying step number 3, conclusion about MU and going concern. And then you are explaining if MU is triggered, it should be disclosed in notes to accounts and you should put a separate section audit report. Okay. Then you should discuss the case. So first explain a summary of SA 570 and give the conclusion. What will be there in conclusion? You are going to say where you will give clean report or adverse report or disclaimer. Come to chart. Come to page number 20. MU means material uncertainty. Listen. Step number 3, conclusion and reporting. Listen. Step number 3, first we'll make conclusion about material uncertainty. If there is a material uncertainty, we'll ask management to disclose it in detail. If there is no material uncertainty, but only some doubts were there, explain only that. There's only one difference in both the disclosure. If there is a MU, we give warning that assets may not be realized in normal course of business and liabilities may not be paid in full. No need to give this warning if there is no material uncertainty. This is guys step number 3. First conclusion about material uncertainty and ask management to make proper disclosures. Next is going concern. Suppose first our ultimate conclusion about going concern is appropriate. Now there can be two situations, with MU or without MU. Suppose going concern is appropriate and there is no MU. Give clean report, unmodified report. First of all, going concern is appropriate and there is no material uncertainty. Give clean report. But suppose going concern is appropriate, but there is a MU. There was MU of 20%, 30% as the case may be. There was MU. What we'll do? Ask management for disclosure. If we think disclosure is adequate, very good. You have disclosed everything in notes to accounts. We'll give clean report, unmodified report. We'll give clean report, unmodified report, but we'll put a separate section, material uncertainty over going concern. Are you getting this point? If they don't do it, then that is something wrong. You're trying to fool people. We will directly qualify or give adverse. If there is no adequate disclosure of material uncertainty, you are trying to fool people and hide very important thing from them, we will qualify or give adverse. Next, going concern is inappropriate. If going concern is inappropriate, but you are doing such a big blunder, still now you are following historical cost basis. If going concern is not appropriate, you have to come to liquidation basis. Asset should come to realizable value. Liability should come to payable value. But you are still following historical cost. Directly give adverse. And if going concern is doubtful, there is no enough data and management is not cooperating, not giving financial data, operational or legal data, then we will qualify or give disclaimer. This is the final conclusion. Now listen guys. So our standard answer is give overview of all the 3 steps and MU, and like in these cases, going concern is not appropriate. Going concern is not appropriate. He should directly do what? Adverse. Listen, in conclusion, they have written directly give adverse opinion. Directly give adverse opinion. Basis of adverse, explain why we are giving adverse, because going concern is not appropriate and still people are following historical cost basis. Getting this point? So whenever you get any case of bad business, you have to give summary of SA 570, discuss the case and give conclusion. 94.010 November 21 mock. It is in study material also. So the question is, they are clearly saying that there is a material uncertainty involved. They are clearly saying there is uncertainty, material uncertainty is involved. Involves uncertainty ability to continue its business, and it informs the auditor that fact that uncertainty clamping on going concern would be suitably disclosed in notes to account. State the reporting requirement. So it's very simple. Management is accepting there is a material uncertainty and they are ready to make all the disclosures. What will you do as an auditor? Listen, again 570 reference. Explain what do you mean by material uncertainty depends on happening or non-happening of future events. If there is a material uncertainty, management should give disclosure in notes to accounts. What was the events, and they should give warning also. We will give a separate section, material uncertainty over going concern. We will give a separate section and highlight that there is a material uncertainty over going concern. That's it. Give reference of SA 570. Ask for disclosures. If there is adequate disclosure, give clean report. If there is adequate disclosure, great. Simply put one section, material uncertainty or going concern, highlight it. As they are saying that we are ready to give adequate disclosure. If they would have not been ready, then we would have given qualified or adverse. Again, very important. It's a study material question and November 21 mock. Last time asked in November 18 exams. Next is on same lines. Listen. It is asked in mock 22. What is it? There is a material uncertainty and it is not disclosed in financial statement properly. There is a material uncertainty and it is not disclosed in financial statement properly. We have two options, either qualify or give adverse. Institute has taken assumption directly adverse. So they have given opinion. They have given opinion. To the best of the information explanation, we say that financial statement doesn't give true and fair view. Because of significance of the matter explained in basis of adverse opinion. We are saying this because of the matter explained in basis of adverse opinion. And then they explain that because of earthquake, there is a material uncertainty. It is not properly disclosed. Investors are getting fooled. They should have explained material uncertainty. And that's why we are giving adverse opinion. They have assumed that they'll be giving adverse only. Listen guys, again the same concept is getting repeated. November 22 mock. November 22 mock. Material uncertainty, not they are obsessed with material uncertainty disclosure. Again, if they are not disclosing, see the ultimate, qualified or adverse opinion. Again, we'll give what? Qualified or adverse opinion. So ultimately, we find out that in everything, they want proper disclosure of material uncertainty. Okay. Last standard, guys. And we have only 2 questions. Come to 97.100. Now, some people have lost the patience. Okay. Should we do it tomorrow only? Or today only? Today or tomorrow? Today. Okay. Okay. Yes. 580 and then we have SQC1 also. And tomorrow. No, why I'm saying, because sometimes if you put a lot of stress, then it is going to affect next day. It will affect the next day. As such, we are doing fine. Today, we must have covered a lot of questions. What Sunday? There is no Sunday in life of CA student. I have stopped counting weekdays. I simply see dates. No. Sunday? Which word? So what do you want on Sunday? रिटर्न रिप्रेजेंटेशन करके काइंड अप कर दो ऐसे. ओके चलो. क्या? अरे यू लाइक इट सो मच. नहीं, जोक बोले खत्म कर दो. 2 ऑप्शन है, एक जोक बोले खत्म कर दो. हाँ, कल सुबह शुरू करो. ओके फाइन, अब मैं खत्म कर देता हूँ. लिसन, अब इतना डिस्कशन क्या करना उसमें फिर. तो मैडम टेंशन है. हे भगवान, सेव मी, प्लीज सेव मी. नाउ 580. So the question is this one, asked in May 21 mock, and their management argued that representation need not be in written, it can be verbal also. And they are saying, next they are asking date and period of written representation. Okay, listen carefully, it's very simple. Come to date. When should we obtain written representation? Page number 21, this thing, middle. Listen, it's very simple. Written representation, first thing, it should be obtained before signing audit report. Written representation is one of the audit evidences. It should be obtained before signing audit report, but it should be as near as possible to date of signing audit report, so that it is latest, recent, and it covers it covers maximum subsequent events, all the matters till the date of signing. So quickly, it should be before signing, but it should be as close as possible, so that it is latest, it is updated, and it covers all the issues. Then next, it should be for how many years? It depends on how many years you are giving your audit report. We will study in SS 710 that sometimes we give audit report on 2 financial year, current year as well as previous financial year. Audit report written representation should cover all the years. It should cover all the years which are referred in intro. If you are saying you are giving audit report on financial year 24-25 and 23-24, then written representation should be on 23-24, 24-25 both. Are you getting this point? If you are if you intro you are writing 5 years, like in prospectus it happens, current year and past 5 years. You are giving report on 5 years, so written representation will be on 5 years. Simple. Okay, so listen what it says. First, it should be before audit report and as near as possible. As near as possible. Then it should cover. Listen, this is, I will say, point number 1, as close as possible. Point number 2, you should cover all the periods. They are talking about 2 more points. Number 1, they are saying updation. Sometimes during the course of audit, listen, it is not necessary that you should obtain everything at the end. Suppose physical verification, you attended physical verification of stock and there was a complicated WIP calculation which you are not able to understand. So you said, okay, I tried to understand whatever I could, but you give it to in writing to me that this is the basis of calculation and this calculation are appropriate as per so and so principle. You give it in writing. So we took that during the course of audit. Generally it is taken at the end, but not necessary. Sometimes it may be taken even during the course of the audit, and sometimes we will need updations. For example, we took it for litigation, but as on year end, status of litigation is something different. So we may need updated written representation. So they are simply explaining sometimes it is taken during the year, and if situation has changed, we may ask for updated written representation. And last thing, change in management. Sir, what is that? Listen, I have given summary also of the above points. Okay, now next is change of management. So what is that? Listen, suppose we are asking written representation. Suppose we are asking written representation for 2 years, current year and previous year. We'll discuss in 710 how we make report on both years. Suppose we are making report on 2 years, we'll ask for written representation also on 2 years. We asked for it. But then management says, listen, CEO, CFO have changed. Last year we were not there. How can we give written representation of last year? That we doesn't know. Irrespective of whether this management was there or not in the previous year, you will have to give us written representation. If you're not there, make yourself aware about all the issues of previous year and then give it to us in writing. That we are not going to accept the reason that we were not CEO and CFO last year. How can we give written representation? We don't know that. You go and understand previous year, get all the awareness, get all the knowledge and give it to us. Is this point clear? And they will say that last year we gave you a written representation. Why you want again? That is as on that year. This is as on current year. It is latest that everything is all right as on current year. So we will definitely number of years signed, number of year given introduction, number of written representation taken. Okay, even if management has changed, it doesn't have any effect. We will take it. Let's start. So yesterday we had a very fruitful day. We finished off 200 series, 300, 400, and then the bulky one, 500 series. Now, let's go ahead. Come to SQC. No, SQC is not there in FADU. कुछ चीजें FADU में हम नहीं cover कर पाए थे, and then I said let new course come. I thought it will come within 6 months, but now it's in a year. So SQC1 is not in FADU. Let's see. So this is the question. It came in May 19 RTP. See how institute comes up with the new question. First they asked it in May 19 RTP, and from RTP it came in exams. So institute will always give you chance to track down new questions. Majority of new questions they come like this. They come in MTP RTP first, and from there they go to the main paper. Maybe that attempt, or maybe next attempt. It's a very interesting question. Okay, we all know elements to maintain quality. If you recall, yesterday we have studied. We want a good leader, then human resource. They should be ethical and independent. They should accept assignment carefully, acceptance and continuance. After acceptance, engagement, performance, and after engagement, performance, monitoring and inspection. So we all know one crucial and critical step is acceptance and continuance. Whether to accept new assignment and whether to continue old assignment. Now, in that, there are 4 factors we should generally see when we accept a new assignment or when we want to continue the old assignment. There are 4 things we should see. Number 1, integrity of the owner's key management person. Whether the client is having integrity. Audit is a collaborative activity. You are going to provide information, I am going to check it. So the person on whom I am relying to some extent, he should be a person with integrity. Point number 1. Then point number 2, our team should have capability, competence and capability for that particular sector, that particular industry sector. We should have adequate skills, knowledge for that particular audit. Our team should be able to remain ethical and independent. We should see whether a lot of relatives are there, whether a lot of shareholders are there, whether we will be able to remain ethical and independent. And finally, you should always consider significant matters which were identified recently in the previous year. These are the 4 important things. So first thing is for the person, people should be of integrity. Then 3 things are for us, whether our team is competent and capable, whether we will be able to remain ethical and independent, and we should analyze significant matters. So 1 thing for them and 3 things for us. So the question is not that. Okay, the question is, how will you evaluate integrity? How will you evaluate integrity? What factors will you see? So they are asking question, how will you judge whether a person is having integrity or not? See, the last line, with regard to the integrity of a client, you are required to give some examples of matters to be considered by the firm as per requirement of SQC1. We all know that SQC1 and SA 220, they talk about all the same 6 elements of quality control. 6 elements of quality control. So they want us to give examples how we are going to judge integrity of any particular client. To be very honest, till the time you have not seen this question, you won't be able to give a perfect bang on target answer. It's a new concept they targeted all of a sudden. Okay, so let's see. So we have made a shortcut RNA film, and today only, just while coming, I have released a video. If you're looking for the free content at one place, okay, and if you're looking for this particular file with class markings, then I just released a video on YouTube. Get free resources at one place. So if you go in the description, you'll find a CA final course. It is 0 value course. Simply enroll for it, 0 cost. Enroll for it, and you'll get access to these files also. So RNA film is the shortcut. What things we should see R is for reasons. If you want to judge integrity of the person, R is for reasons. We should go and see what are the reasons why they are appointing us. Only because we are a small firm? So that they can bully us? Is that the reason? That shows that they are not in people with good integrity. If we are being appointed only because we are small, we are weak, we can be easily manipulated, then that shows that these guys are not having good integrity. So look for the reasons why us. If there is no valid reason, that means there is something wrong. Then N stands for second, nature of client's operation, including its business practices. What kind of work they do? If we came to know that, okay, the nature of work and business, it's all about avoiding taxes. It's all about avoiding taxes. It's all about fooling government in various things. That is the nature of the work they're doing. Those are the business practices. Again, it shows that they are not having good integrity. Then A stands for attitude. Attitude of principal owners towards interpretation of accounting standard and internal control environment. If they take internal controls very lightly, they don't give any respect to it, they don't give any importance to it, and they say that all these accounting standards are useless, they should be interpreted and implemented in such a manner so that we should be able to manipulate the profits. If this is their attitude, again it shows that they are not having good integrity. Then RNA, fourth is F, firm's fee. The client is aggressively concerned with maintaining firm's fee as low as possible. They are purposefully keeping fees as low as possible so that we are not able to apply a lot of resources. And if there are no adequate resources, we won't be able to crack what is there behind the financial statements. Again, that shows they are not having good integrity. If they are trying to keep fees very low without any reason. Then I is for identity and business reputation of the owners of the business owners. If they are having poor reputation, these guys, they say a lot of false things, misleading things, they fool others. They in past they have fooled a lot of people. Again, their integrity is low. Then L is for limitation on scope. They have put indications of inappropriate limitation on scope. They are planning or they have put a lot of limitations so that we are not able to collect sufficient appropriate evidence. Again, that is the example of low integrity. Then finally, M stands for money laundering and other criminal activities. They are involved in money laundering and other criminal activities. Again, that clearly shows that they are not having good integrity. Let's freeze, guys. This question was last asked in 19, so it's almost 4 years now. So I have generally seen after 3 to 4 years, question becomes eligible for recycling. Again, coming back to exam. That's why it is selected in important. Okay, what are they asking? Give us examples. Give us examples of things looking at which we can easily find out whether the client is having integrity or not. RNA films, R stand for reasons. Look for the reasons. If they are not justified reasons, it can be problem of integrity. Then N stand for nature of clients and business. If the business is all about fooling others, again low integrity. A stand for attitude. If they are not having proper attitude towards accounting standard internal controls, again there's a problem with integrity. Then F stands for fees. If they are trying to keep fees very low, again there's a problem with integrity. I stand for identity. Market reputation is very, identity of business and market reputation is bad, problem with integrity. L stand for limitation of scope. Again they don't want us to crack down things, problem. Then M stand for money laundering. So these are the examples which tell us that they are having low integrity. Now this question was there in, we'll skip it. Why? Because it is there in November 22 mock, but it was asked in May 21 exam. So there is low chances that it will be recycled. We have to save our time and put it to things. So guys, you're through with the first chapter. Let's go to the next one. SA 300 come to first 30.200. Listen guys, there are two different questions out here. One is two different questions have been clubbed together. One is content of audit plan. Come to question 30.200. Just a minute. So this, okay. Now we have standard also, SA 300, and we have traditional chapter also. So one thing, when we say in SA 300, we say overall audit strategy. But in chapter, we call same thing as overall audit plan. Then in SA, we call after strategy, we prepare plan. In SA, we call audit plan. But in chapter, we call it audit program. Once again, it's very simple. Initially, you go to any audit, we prepare 4-5 page document, and that is called overall audit strategy. How we are going to perform audit? Are we going to take a big team or small team? It's going to be monthly, quarterly, or annually. Are we going to rely on internal? Are we planning to use internal audit or not? Some broad strategies are framed. After strategy, we go and make detailed step-by-step instructions on how to perform audit. That is called audit plan. So the broader thing is overall audit strategy, and detailed step-by-step instruction is audit plan. And in chapter, we call it overall audit plan and audit program. So don't unnecessarily try to distinguish between them. Please. There's different way of studying each subject. If you're studying law, you may go and differentiate between each section. That is justified. They have thought well and they have decided that there should be separate content in one section and separate content in other section. Okay. If you're studying again law, it's a different approach. If you're studying practical, definitely there are two methods. There must be something different, but that is not applicable in audit. Don't unnecessarily waste your time in distinguishing terms. I see a lot of students, sir, what is the difference between audit plan and audit program? There is no difference. It's a different terminology. That's it. One is used in standards and auditing and one is used in chapter. Nothing else. Okay. And sir, what is difference between further audit procedure and additional audit procedure? Nothing. With context, meaning changes. For example, when they talk about after risk assessment, further audit procedure, it generally means test of control and substantive audit procedures. Generally it means. But in one context, it may simply means, okay, something is done, do something more. That is further audit procedure. So in audit, don't stick to rigid meaning of the words. With respect to context, meaning will change. Just try to understand what that paragraph wants to say. If you try to understand that what paragraph wants to say, you will automatically understand what is the overall concept. So here, now we know the terminology. Don't be very fussy about that. Now, audit planning. There are two questions here. Okay. So this particular question, there are two different questions and both of them have different answer also actually. What are the contents of the audit plan? What are the contents of the audit plan? That is one question. So this is the answer of that particular question. Contents of the audit plan. Come to chart book. If you see page number 22, the last chart. After making audit strategy, we make audit plan and we make 3 plans. We make 3 plans. First, we make plan for risk assessment procedure. First, we make plan for risk assessment procedure. That plan is very simple. Who will go and collect information about the entity and its environment, including internal control system. And then who will think what will go wrong? Who will think what will go wrong? That is risk assessment procedure. So a complete plan will be prepared. This team will go and visit the premises. This team will go and talk to directors. This team will read the documents, and all of them will meet and then carefully think what things can go wrong. So a detailed plan will be made for risk assessment procedure. Once that is executed, you are going to get risk at 2 levels, that is financial statement level and assertion level. 2 levels of risk. What do you mean by financial statement level risk? If there is circumstances or risk such that anywhere in financial statement things can go wrong. For example, accounts head is not knowledgeable. He is not making good policies. Anywhere things can go wrong. It is a financial statement level risk. Accounting software is not good. It is a financial statement level risk. We are shifting from AS to Ind AS. Anywhere things will go wrong. That is a financial statement level risk. Management is not having integrity. That is financial statement level risk. But if we know exactly in which financial item what point will go wrong, that is a assertion level risk. We know that inventory may become obsolete. So there's a problem with valuation of inventory. That is a assertion level risk. We know that there is problem with ownership of land and building. That is a assertion level risk. So after executing first plan of risk assessment procedure, you will get 2 levels of risk. And then after that, next plan will be a plan for further audit procedures. Next plan is further audit procedures. Now here, after risk assessment, when we talk about further audit procedure, it means 2 things. Next plan will be for test of controls and then substantive procedures. In substantive procedure, there are 2 things involved. That is analytical procedures or test of details. So next plan will be further audit procedure. Now the interesting thing is, either you can apply next plan of further audit procedure for all the items at the same time, like fixed asset, investment, current assets, income. You may go and check everything at simultaneously, or you may apply further audit procedure to fixed asset first and then investment and then current assets and so on. It is choice of the audit team how they want to go ahead. Either they may go simultaneously or they may go one by one. These things may be targeted in the MCQ. Now next is if required, we may go for other audit procedures. Plan for other audit procedures if required. These plans are made to implement specific standards on auditing. Like if there's a problem with SA, there's a problem with going concern, we make a plan for implementation of SA 570. If there's a problem with subsequent event, we may make a plan for implementation of 560. If there's a problem with opening balance, then we may make a plan for 510. So we may make specific plans if required. Third plan is optional. So if they talk about contents of audit plan, we have to explain that 3 plans are prepared and explain corresponding things. Okay. Then one question, the other question, how will you development of overall audit plan? It is a different question. It's by mistake it has come in one, they have come together, and answer is this: development of overall audit plan. Now in overall audit plan, what factors shall be considered while developing overall audit plan? Let's see guys, So this is the answer. So while we are framing overall audit plan, we have to decide few things. There's a mnemonic also given. Degree of reliance we placed on accounting system and internal control. Looking at past experience, present circumstances, overview, we have to decide whether we will rely more on internal controls and less on substantive, or less on internal controls and more on substantive. This will decide our strategy. In some audits, we may do more of test of controls and less of substantive procedures. Then internal auditors, whether we are going to rely on the internal auditors. What is our overall strategy? Whether 20-30% of the work we are going to use work of internal auditor. Then A is for audit evidence. What kind of evidence we want more? We want more documentary evidence. We want more electronic evidence. We want more observations. Then what should be the materiality level? Then whether we are going to need experts. Terms of engagement. What are the contents of the law and terms of engagement? Whether there is any specific request, like for example, they may have a request, please don't conduct any audit in the month of March. It's a very busy season for us. A lot of business activities go on. We won't be able to entertain you. Please don't come in the month of March. So while making strategy, we'll keep in mind no audit activities planned in the month of March. Maybe immediately after that, in April, we have a lot of audit activities. Then reporting, how many reports are to be given? It's quarterly, half yearly, annually, and what should be the format? Then accounting policies and its changes. Keep in mind that evaluation of accounting policy is important thing, especially if there are changes. Any legal requirement like Companies Act. Then is there joint auditor? If there are joint auditors, what are the separate responsibilities and what are common responsibilities? And then significant audit areas. Like we all know, in every audit, there may be some significant audit areas. For example, goodwill valuation is always significant, impairment is always significant. If it's there, DTA is always significant. Provision for doubtful debt is always significant. Quickly, so shortcut is diametral, zabardast and scalable. That is khatarnak. D is for how much degree of reliance. I is for internal audit. A is for audit evidence. M is for materiality. E is for expert. T is for terms of engagement. Then R is for reports and communication nature and timing. Then A is for accounting policies and changes. L is for legal and statutory requirements. And then J is for joint audit. N is for significant audit areas. Listen guys, again, a lot of students ask, sir, how are we going to remember so many points? You have to revise it again, and you have to revise the same thing before exam. That is the only way to tackle it. There is no other way. When you revise it again, and when you revise it before exam, there are high chances that you will be able to recollect 80% of the things. Okay, let's go ahead, guys. What is the relationship between overall audit strategy and overall audit plan? This asked in May 22 RTP. May 22 RTP. Relationship between overall audit strategy and audit plan. Come to chart book. Okay, we have not covered it here. Go back. Now, quickly, what is the relationship between them? First we make strategy, then we make plan. If strategy changes, plan changes. But sometimes even this happens. First we change plan and then we change strategy. How come? For example, we send a team to check salary and now they think that something is wrong. So we'll first change the plan. Let's increase number of days by 2. Let's give more time to them and ask them to find out whether there are strong indications of fraud. If there are strong indications of fraud, then we will go and change strategy and include fraud risk in the area. It is very much possible that sometimes first we change plan, execute it, get more information, then we change strategy. Even that is possible. but whatever it is, they are very closely connected to each other. One changes, it has impact on the other thing. So that is what they have explained. They have explained first meaning. One gives overall scope, how to conduct audit, and one is detailed step-by-step instruction of nature, timing, extent of audit procedures. One is prepared first and next others, but then vice versa can happen. One is less detailed, one is more detailed. Okay, and they are talking about changes. So it's very simple thing, guys. It has been asked in May 22 RTP, so it becomes important. Okay, now comes very important standard. Let's freeze. What we have seen as we started with SQC1. Today we started with SQC1. And SQC1 we have seen examples how to judge integrity of any client. Then from there we move to what should be the content of audit plan. Then we move to what things should be thought if we are designing overall audit plan. Overall audit plan is similar to overall audit strategy. Okay, now come to 540 accounting estimates. Okay, only two questions are covered here. Now, I know students generally fear this particular standard, SA 540. In important, only two questions are covered. But then, as I said, in FADU chart revision, generally I give an overview of the whole standard and lot of points. But here we are going to stick to important questions only because this session is designed in different manner and that session is designed in different manner. But as I said, videos will be available to you. Let me give you an overview. So SA 540, what are the important things out here? First, they explain there are two types of estimates. That is fair value estimates and other accounting estimates. In any estimate, if you are predicting what should be the selling price of particular thing, that market price of a particular thing, that is a fair value estimate. For example, what should be the residual value of fixed asset? That is a fair value estimate. What should be the selling price of ESOP option? That is a fair value estimate. What should be the price of derivative contract? That is a fair value estimate. But if you are estimating something else, for example, useful life of the asset, that is a other accounting estimate. What is the probability that we'll lose litigation? That is a other accounting estimates. How much will I have to pay in litigation? That is a other accounting estimate. So this standard first explains there are two types of estimates, fair value and other accounting estimates. Then it explains, next thing is what information should be collected overall about the estimates and what specific information should be collected about the estimates. Overall information and specific information, and that is called risk assessment procedure. Now listen carefully. Next time you hear this word risk assessment procedure, what does it mean? Collecting information and obtaining understanding. Next time you listen to this word risk assessment procedure, it simply means collecting information, obtaining understanding, so that on that basis we get the risk. After risk assessment procedure, we get the next step, that is identifying and assessing risk. First we collect information and on that basis we think what can go wrong, that is identifying and assessing risk. So in this standard, first they explain risk assessment procedure, what information should be collected, overall information and specific information. Then they explain how to identify and assess risk, in which estimates risk will be higher and in which estimate risk will be lower, and they give examples also. After that, next they explain what should be the audit procedures. Response to risk. Response to risk is nothing but audit procedures, how to check estimates. After that, they explain what to check in presentation and disclosure. What to check in? Presentation and disclosure. Then they explain you should take written representation. You should take written representation and what should be the content of written representation. So there are small things involved in the chapter. Quickly, first they explain two types of estimates. Then they explain risk assessment procedure. That means what information should be collected. Then they explain after collecting, identifying and assessing risk. How to find out which estimate is more risky and which estimate is less risky. Then they explain response to risk, how to check them. Then they explain how to check presentation and disclosure. At the last, they explain written representation should be taken. What should be the content of written representation? In the FADU revision session, we cover 3 to 4 steps. Okay, but then here let's come to the question. Now, question 81.100. 81.100 question is it has been asked in May 19 mock test paper, November 19 exam. It is in study material. Again, it has been asked in November 19. Now it's almost 3 to 4 years. 3 to 4 years this question has not been asked and it is there in study material, so it becomes important. And what is the question? What are the content of written representation? Listen, written representation is taken for two things. Do you agree? Two things. What is that? Number one, management, please confirm whatever promises you made to us at the start of the audit, especially with respect to preparation of financial statements. Please confirm that whatever promises you made to us with respect to preparation of financial statements, you have fulfilled those promises. That we will prepare financial statement as per applicable financial reporting framework. We'll maintain internal control system. We'll give you all the information. So that is mandatory in each audit. In each audit, we ask management. In each audit, we ask management to give us in writing that they have fulfilled their responsibility with respect to preparation of financial statements. Second, wherever after getting all the evidences which we wanted, we feel there is a lack of assurance, there is a lack of confidence. We take written representation as a supporting evidence, so that we increase assurance level. For example, in estimates, after doing all the checking, we are feeling assurance of around 70%. We want to increase this assurance. We'll take written representation. Management give it to us in writing these things which will increase our assurance level. So written representation is taken for how many things? Two. One is mandatory in each audit, yet you have fulfilled your responsibilities properly. And second, to support other audit evidence. Now, come to page number 24. Okay, let's see. What should be the content of written representation? First of all, in case of estimates, it is mandatory. Whatever and how much checking you do for estimates, you will always feel doubtful. You will always be less sure. That's why it is mandatory. As per SF 540, it is mandatory to obtain written representation from management or TCWG with respect to estimates. Now, what we ask management to write? First of all, assumptions. We'll ask management to write down all the assumptions, whatever estimates you have taken, whether it is useful life, whether it is valuation of financial instruments, whether it is valuation of inventory, provision for doubtful debt, all the assumptions taken in valuation, all the assumptions taken while making estimates, financial items, all the assumptions should be covered. Management should clearly write down these are the assumptions we have taken in different estimates, and we assure that these assumptions are relevant and reasonable. They are suitable for the industry. they are suitable for the entity, and they are reasonable and acceptable. Then, depending on estimation uncertainty, what do you mean by estimation uncertainty? Estimation uncertainty, listen, there are chances that actual outcome of the estimate is different from the estimated amount. Chances that actual outcome will be very different from the estimated amount. Amount wise it will be very different and with very higher probability. If there are chances that actual outcome will be much different from the estimated amount with higher probability, that is called as high estimation uncertainty. Higher is the estimation uncertainty, higher is the risk in any estimate. If there are chances that actual outcome can be very different, amount wise also, and there's a high probability for that, it's called high estimation uncertainty. Now, what things we'll ask them in writing? So, content of step 1, content of step 3, and content of step 4. Sir, what are these content? So, I've linked it with the previous steps. Okay. Let's quickly see step number 1 also. Let's take our overview. See, instead of retaining points differently, what we have said, take few things from step 1, step 3 and step 4 quickly. Come to step number 1. Let's quickly cover this step 1, 3 and 4. Which essay are we studying? Essay 540, and that is on estimates. What is the question we are focusing on right now? What should be content of written representation? Is written representation mandatory? Yes. Okay. And now what should be the content? First thing is that get in writing everything about the assumptions. Whatever assumptions you are taking, explain all those assumptions in detail about each of the estimate and take the responsibility that they are relevant for the company and they are reasonable, realistic, acceptable. Now more contents are there. Let's see step number 1, 3 and 4. Step number 1, risk assessment procedure. Step number 1 is risk assessment procedure. We just discussed. What do you mean by risk assessment procedure? Collecting information and obtaining understanding so that on that basis we can find out the risk. So what they say, listen, first is the introduction. Essay 315 tells us about what overall information understanding should be obtained for particular entity to identify RMM. Essay 540 tells us what understanding should be obtained to identify and assess risk of accounting estimate. So they are saying, while understanding entity and its environment, as per essay 315, collect this information about estimates as per essay 540. That's why they give reference a lot. They are saying when you are understanding entity and its environment as per essay 315, during the same step, during the same process, you include few more points and understand estimates also. Okay. So that's why they refer essay 315 and essay 540. Then first they explain what is the overall information you should collect. What is the overall information you should collect? Let's see. So LIC, you should collect overall information, LIC points. L stand for list. First of all, go and obtain the list. Give us list of all the estimates, all the accounting estimates and their disclosures. Obtain list of accounting estimates, their disclosure along with important requirement of applicable financial reporting framework. Give us list. How many estimates are involved while preparation of your financial statements? And along with that list, also give reference of the accounting standard or Ind AS. So if you have done revaluation, right? Revaluation is a big estimate. Which standard is there? If there is a financial instrument valuation, which standard is there? If there is an inventory valuation, which standard is there? First is to obtain overall information, get us the list, and along with the list also specify which financial reporting framework is applicable, and what are the important requirements. Then I stand for identifying. Ask management how you identify in which areas estimates will be required or in which areas revision of estimate is required. So they will explain. Listen, in factory, for factories we have appointed a IITM on quarterly basis. He keeps reviewing things. Whenever a new machine is introduced, he gives us the estimate. Whenever there is a change in circumstance or situation, suppose we are moving from one shift to double shift, or triple shift. Again, we have appointed a IITN who keeps reviewing estimates on quarterly basis and give us information when new estimate should be made and when revision should be done. Good. Then next, what about legal things? So we have a lawyer and a company secretary. A lawyer and a company secretary, they help us identifying legal estimates. What about finance? We have a chartered accountant, team of 2 chartered accountants. They go and see all the financing activities and investment activities. And whenever new estimates are required or revision is required, they tell us. And all of them, three teams, give us data on quarterly basis. Oh, wonderful. This is how you identify new estimates are required or you identify revision of estimates are required. Now we are feeling confident about your list. We are feeling confident that this list covers all the different types of estimates required in your entity. Then C stands for changes. Whether there is change in circumstances, judge may need to new or revise existing accounting stuff. Where there is a drastic change, for example, if there is a change in going concern assumption, there is a big change. All the asset used to be on historical cost basis. Now we'll have to shift it on liquidation basis. A lot of changes will be required. If there is change from AS to Ind AS, lot of changes will be required. If there is change in RBI guidelines, lot of changes will be required. IRDA guidelines, lot of changes will be required. Okay, let's freeze, guys. We are performing step number 1, that is risk assessment procedures. So when we understand Indian environment under SA 315, we should collect information about estimates under SA 540. First thing is, what is the overall information? 3 points. L for list. Obtain detailed list along with requirements of financial reporting framework. Then how they identify where new estimates are required and where revision is required. C is for changes, whether there is any drastic change in the circumstances, whether law has changed, whether technology has changed, whether the position of the entity has changed. Now this is overall information. Now let's go ahead. Specific information. What specific? Now for example, we want to collect information for provision for pension. Provision for pension. Suppose the policy of the company says that 2% of the salary will be given as pension for each year completed. For each year completed as per last drawn salary. As per last drawn salary. And suppose employee completes 30 years. So 30 into 2, 60%. 60% of the salary he is going to get as pension as per last drawn salary till the time he is alive or the dependent spouse are alive. Spouse is alive. Okay. Now, lot of information will be required for this calculation. Yes, no. We will, if anyone wants to compute this provision, he will need number of employees, their age, how many years are left for retirement, at what rate salary will grow, what will be the last drawn salary, after retirement how many years that person and spouse will survive. For those many years we have to pay pension, and then also medical expenses. Now let's understand. So suppose we want to know, so we'll go to each specific estimate and collect this information. Understand relevant internal control system. We'll ask them, How do you compute provision for pension? Some company will say that we have an Excel sheet. Some company will say that we have a software. Some company will say that we give some data to outside actuary, he computes and give it to us. So go and understand for each estimate what is the system followed for computation of that particular estimate, internal controls. Then go and see data. If this provision for pension is computed by whatever method it is, through Excel sheet or through software or through an actuary, everyone is going to need data. What data was used? Check where number of employees were correct, their age was correct, whether data was complete, accurate. Okay, we are collecting information. Which system do you follow? From where do you get data for calculation? What are the assumptions? What are the assumptions you have taken? What is the assumption of growth rate of salary? What is the assumption when they will retire? What is the assumption for how many years they will continue? Understand those assumptions. Then understand methods and model. So earlier there used to be corridor method. For employee benefit there used to be corridor method. In AS and Indies there is PUC method. Project unit credit method. Project unit credit method. We predict how much need to be paid. Then we compute present value. Yes, no. That's why you get service cost, current service cost, and then interest cost, finance cost, and so on. So understand the method and model. Finally, whether whether they have used any expert, like actuary has said. Okay. First, collect what information? Overall. Which points? LIC. L is for list. I is for identifying, how they identify, and C is for changes. After that, you collect specific information about each estimate. First, understand the internal control system they follow. For all the computation, they are going to need data. From where they get the data, they are going to need assumptions. They are going to need methods or model. And finally, whether they have used experts. So first we collect overall information about estimate, and then we collect specific information about all the significant estimates. Then we also collect information about estimation uncertainty. Whether and how management assesses estimation uncertainty. How you assess, listen, not each and every estimate is same. In some estimate, you will find that actual outcome can be much different than the estimate amount. Can be much different. There is a high probability. For example, litigations. High probability that actual outcome is different. Then derivative contract. High probability that actual outcome is different. Correct? So how you compute estimation? Whether management is computing estimation uncertainty, and if yes, how they are computing. For example, some management will do few things, like they will have what will happen in scenario A, what will happen in scenario B, what will happen in scenario C. So they will have different scenarios, and on that basis they will compute estimation uncertainty. How much different will be the actual outcome? Go and understand how management is computing estimation uncertainties. Are they using different scenarios? Are they computing minimum and maximum amounts? So understand how they are computing estimation uncertainty. If they are doing it, it's very useful for auditor. If they identify that these are 5 estimates with very high estimation uncertainty, we will declare that there is a very high risk in those estimates. Then this is an important concept, review of prior period estimates. What is this review of prior period estimates? Go and see what happened to prior period estimates. What is the actual outcome of the prior period estimate, and whether re-estimation was done for the prior period estimate. Go and see what was the actual outcome and whether re-estimation was done for prior period estimate. Why this should be done? It is going to give you loads of information. It is going to tell you how accurate and good are management processes. It is going to tell you whether management is biased. For example, if we observe that all the expense estimates went wrong, actual expenses were much higher, losses were much higher, that shows management was biased. Go and review prior period estimate. That information will be very useful to understand how good is their process and whether management is biased. We are going to study about that. So it is mandatory. How much we will go and review depends on how useful will be for the current year estimates. If it's going to be very useful, same type of estimates are made in current year also, we will go and do detailed checking of prior period estimates, review of prior period estimate. But this is definitely not to judge whether prior period estimates were properly computed. We are not doing this to compute misstatements in previous year. No. We are doing this for current year. We are not doing it for the previous year checking. We are doing it for how it's going to help us in current year. I understand there's a lot of theory and a lot of technical things, but then let's digest it. Otherwise, you would have not went through it. At least in the class, somehow you are going to retain at least 30-40%, and maybe we'll start studying it. Quickly, which essay? 540. Which step? 1. That is risk assessment procedure. So when you are understanding entity and its environment under essay, 315. Apply 540. Collect information about estimates. First, collect information about overall estimates, LIC. Then collect information of specific estimate, internal control of that estimate, data, assumptions, methods, expert was used. In special points, understand estimation uncertainty. How management is computing estimation uncertainty, that will be very useful. And also review prior period estimate. Is it mandatory? Yes. If same estimates are in current year, it is very relevant. You should go and evaluate it carefully. Okay. Now, so that is step number 1. In step number 1, we simply go and collect. We go and collect information. Now, step number 2, which we are not going to see, just an overview. Step number 2 is identifying and assessing risk. Step number 2 is identifying and assessing risk. Now, it says only one thing. Estimates with high estimation uncertainty will have more risk, and estimates with low estimation uncertainty will have low risk. And they explain the factors which increases or which has an impact on estimation uncertainty. Come to step number 3. Now listen. In one line, we can write step number 3. If you somehow forget response to risk, in one line you can get the whole answer. Whatever information we collected in step number 1, simply ask to examine it. Your answer is ready. Whatever information we collected in step number 1, overall information, specific information, simply write there, we have to examine these things. You will automatically generate answer for step number 3. That is the easiest way to remember step number 3. Are you getting this point? Yes. Once again. Step number 3 is response to risk. That means examination. Response to risk, that means examination for the how you are going to do it. As I said, a single line, single thing. Whatever information you collected in step number 1, simply write, examine, evaluate, analyze information given in step number 1. You will generate answer for step number 3. Like list, whether list of estimate is complete and accurate, whether the process followed for the identification is reliable, whether effect of change in circumstances was taken, whether internal controls for computing are reliable, whether data is complete and accurate, whether assumptions are relevant and reasonable, whether methods and models are as per financial reporting framework, whether the expert report is reliable. Then if more estimation uncertainty, more efforts will be required, and review of prior period estimate is going to help us in this overall checking. So whatever information you have collected in step number 1, simply go with it. Now the answer will not be accurate, but you would have automatically covered 80% of the points. Are you getting this thing? Now, I will only tell you what are the extra things. What are the extra things they are talking about here? These are the 2 extra things. And somewhere in audit, especially this standard, now listen, what is this point estimate and range estimate? Listen, if auditor thinks he has alternative source of data, assumptions or methods different from what management has used. Management has used employee data from the system software. We can use employee data from the service organization. So I have an alternative source of data from service organization. I have an alternative method. I have alternative set of assumption which are published in magazine of the industry. Listen carefully. If auditor has alternative set of data, assumptions, methods, he can compute his own estimate. If he is computing single amount, that is called as point estimate. And if he is computing a range of minimum and maximum, if he is computing minimum and maximum amount, that is called range estimate. So that is what, whenever he has different set of data, he is going to compute his own estimate. It can be a point estimate, single amount, or it can be a range estimate, minimum and maximum. After computing, he should compare it with management's estimate. If they are close to each other, it proves that estimates computed by the management are reliable. If it is they are not close to each other, then that proves that something is wrong with the estimate. He will ask management to give answers why there is difference. He should investigate. In the investigation process, he may learn that assumptions were inappropriate by management, or method is inappropriate, or he may know this, that what he has done is inappropriate. He may come to know what is wrong. Whenever he uses range estimate, just keep in mind range should be narrow. It should not be more than maturity level. If maturity level is suppose 2 crores, minimum and maximum should be, the range should not be more than 2 crores. Then subsequent events, listen guys, if you want to compute good estimates, you need more and more information and latest information. Latest information about litigation, latest information about recovery, latest information about markets, and so on. Subsequent events are the big source of latest information. Go and check whether any subsequent event has happened which is giving you more and more information about the estimates. And if that is there, check whether the impact is taken on estimation computation. So they are talking about 2 extra things: auditors point estimate and range estimate, and next subsequent events. Is this point clear? Okay. So which essay? 540. 2 types of estimate, that is accounting, fair value estimates and other accounting estimates. Step number 1 is to collect information, risk assessment procedure. Step number 2 is identifying and assessing risk. Step number 3 is response to risk. That is nothing but simply go and say check step number 1 information. 2 extra point, that is point and range estimate and subsequent events. Now Come to step number 4. Listen. Okay. Estimates are extremely crucial, critical, because management tend to fool auditors in estimate. One very important thing is users should be able to understand these estimates, that these are the estimates. Estimates can, in actual outcome can be different. So user should be well informed about the estimates. So he take informed financial decision. He should know that we have made provision of 50 crores in a litigation, but actual outcome may go up to 300 crores. It is very important to inform users about important details about the estimate. That means presentation and disclosure. And this it can be targeted in the MCQ also. They explain very simple thing. Number 1. For each and every accounting estimate, go and check whether presentation and disclosure is as per applicable financial reporting framework for each and every estimate. But if it is a if there is a significant risk in accounting estimate, for all accounting estimates, go and check whether it is as per applicable financial reporting framework. But if there is a significant risk, we have to ensure FRF. But additionally, we have to check adequacy of the disclosure with respect to estimation uncertainty. Whether users are clearly informed, like they will inform that useful life is 5 years, but it can be 3 years also, and it can be 8 years also. And then they have to explain, if it would have been 3 years, this would have been the book value. If it would have been 8 years, this would be the book value. Or we explain sensitivity. If interest rate changes by 1%, what will be impact on provision for pension? All this lot of information should be given so as to explain estimation uncertainty to users of financial statement. Okay, so what is the difference? In all estimate, you have to go and check whether disclosures are as per applicable financial reporting framework. But if there is a significant risk, you have to go and check whether applicable framework is followed. Plus, you have to see the adequacy of disclosure with respect to estimation uncertainty. Whether estimation uncertainty is explained in detail to users of financial statement, whether they have explained the different outcomes, what is the probability of different outcomes. So you have to go beyond FRF. If there is a significant risk, you have to go beyond FRF. Okay, FRF requirement is fulfilled, but you have to give this additional information also. Now, listen guys, again, this is further explanation that I am giving you shortcut, that when you see in disclosure, what things you should see in disclosure. Again, write in step 1, we have specific information. Yes, no. What is specific information? Which internal controls, data, assumption, methods, expert. Generally, same things are required for financial reporting framework to be disclosed in notes to accounts. Repeat that. Don't try to remember separate things. Information in step 1 is very crucial. It is repeated again and again. Now come back to our original question. In written representation, you will ask management to write all specific points, that internal controls, data, assumption, methods, and experts report are all reliable. We are confirming that all these things are reliable. we'll ask management to write it down that subsequent events are analyzed and its effect is taken on all the estimates. Write down that disclosure of all the estimate is as per applicable financial reporting framework, and if there is significant risk, framework is followed plus disclosure is adequate with respect to estimation uncertainty. Also, we'll ask them to explain why particular estimates are not recorded or disclosed. Sometimes some estimates are not recorded. For example, they have not shown any contingent liability. Write it down why you have not shown contingent liability or why you have not given particular disclosure, and why. Listen guys, you are champions of Indies. In Indies you have studied at a lot of places you have to use fair value, but instead of fair value sometimes you use cost, sometimes you leave fair value and you use cost. So ask management to write down why fair value method was ditched and other basis was used. Let's freeze guys. This answer appears complicated. This is the answer. This is a huge answer. Quickly. Now, let's freeze. So if you are asked that what should be the content of written representation, final answer you will give. It is as per SA 540 estimates, it is mandatory to take written representation from management or TCWG as the case may be, those who are preparing financial statement. It is mandatory. And most important, you will ask them to write down all critical assumptions taken, its basis, and that these assumptions are relevant, suitable, and they are reasonable. Apart from this, we'll ask them to write down more things about specific estimate. From step number 1, we'll take all the information of specific information. Write down that all this information is reliable. From step number 3, subsequent events, we have taken all the effects. From step number 4, disclosures are adequate. And apart from this, we'll ask them to write down why some estimates were not made or not disclosed, and why in some estimates there was no use of fair value and we use some other basis. Okay, it is possible that this, now in short we have covered critical things of SA 540. Next question is review of prior period estimates. We have just seen about it. Come to page number 24. You can draw a line there in your chart book. That line may not be there. These two charts may have been mixed. Simply draw a line there. Let's understand. Review of prior period estimates. Again, first thing, it is mandatory for the auditor that in each assignment he goes and check what was the actual outcome of the previous year prior period estimate, or if the outcome has not arisen, whether there was a re-estimation, you understand re-estimation? Last year you made provision for litigation and this year you are changing that provision, that is called re-estimation. So you need to explain that it is mandatory to review outcome of the prior period estimates. Then you will explain what are the benefits, bear benefits. You'll be very happy. Now, B stand for biased. Listen, if you see that all previous year estimates, expenses and losses, actual expense and loss are higher and actual incomes and profits are lower. This clearly shows management is biased. They are using the estimation opportunity to manipulate the profits. What do you mean the management is biased? Management is biased means they are using opportunity of making judgments in manipulating the financial statements. If you get the feel that they're using this opportunity for manipulation, that means management is biased. From reviewing prior period estimate, you will understand whether they are misusing the opportunity and they are biased. B is for whether they are biased. E is for estimation uncertainty. You will also understand whether an estimate is having an estimation uncertainty. If you see that for particular type of estimates, actual outcome is much different, then you will understand that there is very high estimation uncertainty. Process was good, method was good, data was good, management is not biased, but actual outcome is still very different. That shows there is lot of uncertainty in that particular estimate. Then E stands for effectiveness of estimation process. If you see that everything is almost same, whatever they decided, it is almost like that. It gives lot of faith on the management that they have very good process of estimation. Then it will be also useful to check re-estimation. We need to understand what was the basis last year. We need to understand they have changed the basis current year. What was the reason? This activity will give you evidence for re-estimation. And finally, it is not with objective to find out misstatement of prior period. No, we are not doing previous year audit. It is not with that objective. It is very useful for doing current year audit. Let's please guys, you will be asked a question. Management will say that previous year audit is done. You don't have any right to go and check things of the previous year. We'll say no, you are wrong. As per SA 540, it is mandatory for us to review prior period estimates. We'll get BR benefits. B for we'll understand whether they are biased. We'll understand whether system is effective. We'll understand whether what is the kind of estimation uncertainty. We'll understand, we'll get evidence for re-estimation. Okay. Let's please guys, enough of 540. Quickly. Today we started with SQC1. After SQC1, we took field of SA 300. Audit strategy and audit plan. Then we moved to SA 540. We took the overview and ultimately focused on step number 1, that is collecting information. We focused on step number 3, that is response to risk. That is nothing but examination of the information obtained in step number 1. And that is 2 extra things, that is auditors point and range estimate, and second subsequent events. Then we understood what to check in disclosure for all requirement of FRF, but the significant risk go beyond it. Also check disclosure about estimation uncertainty. And in further explanation, they will explain FRF we generally ask you to disclose information again of step number 1. And then last we had 2 things. What should be content of written representation? It's a huge answer. What should be content of written representation? And next was the review of prior period estimates. Now this standard is having Zahir. Correct? I can see the impact. I can see the impact. But then it is always good to spend time on such standards, because these are the standards students are going to study less. These are the standards students are going to leave on their own. So if I can make them listen to it somehow, correct? Okay. Now, guys, these charts are really very good. If you are able to understand Hindi, if you are able to understand Hindi, we have covered whole FADU chart book. Each concept in 12 hours. But that is very fast. Zero explanation. Very fast, zero explanation if you understand Hindi. And so you can go and you can reduce the speed to 0.75 if required. but then each and every concept of the FADU chart is covered. But then if time permits, now the challenge students are facing, sir, we have a lot of things to do. Now there's a problem of plenty. Now there's a problem how many videos to watch. Okay. So that is if required. Maybe you can use it for some chapters. And there's a concept wise tagging also. If you want to go and see explanation of particular chart, in comment section you go, you can simply click that particular point and explanation will start from there, from that point. If time permits, otherwise plan is very simple. Stick to few things, make them very good, bring them to the level that you are able to write answers. That level that you are able to write specific answers. Okay. And when you feel confident, okay, I have finished 250 also. I have covered all tricky concept of FADU also. And then 350 questions also. And if time permits, you keep on adding. And the best way is keep on adding 4, 4, 5, 5 questions of each chapter. In some chapters, there won't be scope of this. Like something like liabilities of the auditor. There are limited number of questions. Due diligence, there are limited number of questions. So it's very simple. Do one thing properly and then you can keep on adding things. Now guys, we come to 600 series. How many standards are there? How many standards are there? 3. That is 600, 610 and 620. 600 is how to deal with other auditors. How to deal with other auditors. And these other auditors are branch auditors, subsidiary auditors, associate auditors, auditors of the components. Auditors of the components. And then we have SA610. How to deal with internal auditor. And then we have SA620. SA620. How to deal with expert. Okay. Now let's see. Now, one question is taken in SA600. Coordination. So this is asked in November 20 exams, November 20 mock. And the question is asked in this manner. There should be sufficient liaison between principal auditor and other auditor. That means there should be good level of communication, good level of information exchange and sharing between principal auditor and branch auditor. Discuss above statement. There should be good liaison. That is how they are drafting the question. Now, again it is asked in one more manner. There should be or. Two different questions are there. So they are talking, there is one holding company auditor, there is one subsidiary company auditor. Explain the roles of both the auditors towards each other. This is how they ask question. Be careful. Question is on that there should be a good coordination. There should be good information exchange. There should be good communication between principal auditor and branch auditor. There should be good communication. Now they are saying the way they ask is liaison. The way they ask is there should be good liaison between them. Comment on the above statement. And then they ask what are the roles towards each other. Come to page number 24. Come to page number 24. Yes, there should be very good coordination between the principal auditor and branch auditors, or parent company auditor and subsidiary company auditor. there should be, that is mandatory, should be sufficient liaison, sufficient communication, understanding between principal auditor and branch auditors. It is divided in two parts. Sufficient liaison means good communication between both of them. So there is some communication which you should go from principal auditor to other auditor, and then there is some communication which should go for other auditor to principal auditor. So we have divided in two parts. This is what principal auditor should communicate to other auditor, and this is what other auditor should communicate to principal auditor. Let's understand. Number one, advise other auditor on any matter which are important for principal auditor's work. So first thing, advise. That listen, branch auditor, this time in your branch, impairment is triggered in the factory situated at the branch. So impairment testing and impairment examination is very critical. We want you to focus on these three things. Everyone understands impairment? Yes, no. So there is a factory of 40 crores, useful life 10 years. So what should depreciation? 4 crores. Suppose 2 years have passed. So depreciation 4 and 4, 8. What is the book value? 40 minus 8, that is 32. And suddenly government has banned it. We have book value of 30 crores, 32 crores. It is having useful life of 8 years. It will work for next 8 years. Absolutely fine. Whether depreciation is appropriate? Yes. But this 32 is not recoverable now. We will not be able to generate cash of 32 crores because this product is banned. So understand, it's very simple. Sometimes even after charging proper depreciation, book value is not recoverable in monetary form. So we have to further write it down, and that is called as impairment. Impairment means destruction in value. So we explain the branch order, listen, this time impairment is extremely important issue for you. And we want you to we want you to check these three things carefully. So whenever required, principal auditor should give advices to other auditor. Then detailed questionnaire. Suppose he is not happy with something. This is the checklist. We may give advisory, and if required, we can send detailed questionnaire. We want you to fill up detailed questionnaire on Caro report. This is a questionnaire on Caro report. Whatever Caro report you have made, give answers in this particular questionnaire. He may send issue. It may be, now these two communication can be oral. Of course, second one can be written. May send issue written communication. Many of them can be oral. This can be written also. So some of them can be oral, some of them can be written. This is not the separate point. This is only further. This can be oral form. This can be in written form. Overall, just an idea they are giving. Now next is communication from other auditor to principal auditor. Other auditor should ensure statutory compliance of communication, if any. Okay. Now in India, there is no such law. But outside India, there can be a law that branch auditors, subsidiary auditors should mandatorily send these letters, these things to principal auditor. So whatever mandatory requirements are there regarding communication, they should be fulfilled. Other auditor should know context in which way his work is used. If auditor comes to know about significant findings which can be resolved at entity level and important for principal auditor, he should send such information immediately if there's any problem in following. Example, if there's any problem in following timetable given. Now, significant findings. So they are saying If other auditor come across any significant finding, that's very simple. If he come across any deficiency in the system, significant deficiency, or if he come across any material misstatement, or he come across anything which is not done by the branch but is done at the head office, if any significant finding which he thinks cannot be resolved at the branch level, he should immediately communicate to principal auditor. Next is, he should respond to questionnaire on timely basis. So three things: whatever statutory communication is required, he should do that. Whatever significant findings, he should do that, and he should respond to questionnaire. Let's freeze. In exam, you will be asked question. There should be sufficient liaison between principal auditor and other auditor. Or you may be asked, correct? Second, you may be asked, what is the role of principal auditor and branch auditor towards each other? So it explains there should be sufficient liaison, and that can happen only when there is a good communication between both. There are few things which should be communicated from principal auditor to other auditor, and there should be few things which should be communicated from other auditor to principal auditor. Now, when it comes to principal to other, first is advice. Advice should be given, proper advice on all the important matters should be given as and when required. Next is questionnaire. There should be detailed questionnaire on certain matters wherever he wants, and these communication can be in oral form, it can be in written form also. Then communication from other auditor to principal auditor. If there are any statutory communication required, do that. Then all the significant findings should be communicated, and he should respond to questionnaire. Now, so this is November 20 mock test paper. Next, come to 610. Now, this is important. Okay. Let's see. Now, so there is a lot of Zahir. Zahir is here. Okay. But this is good. Even if there is a Zahir, okay, in the process, whatever Zahir you are absorbing, it is good. Now, next is 610. Comparatively better. Come on. 610 tells us how to do internal audit. Yes, no. SA 610 is not about how to perform internal audit. There is a separate standard how to perform internal audit, and that is SIA, Standards on Internal Audit. That is not in our course. Those standards are not in our course. So when you go to practical life, and if you feel you want to do internal audit and want more guidance, you can go and read Standards on Internal Audit. But let me tell you, concepts, principles given in those standards are quite similar to what we discuss in Standards on Auditing. So you will be able to understand. Now, so if it is not on how to do internal audit, it is about what? It is about two things. Using work of internal auditor and taking direct assistance of internal auditor. What is difference? If internal auditor has performed or going to perform some work as per management instructions, and we are referring to that work, that is called using work of internal auditor. For example, as per management instruction, he is going to check salary, he is going to check taxes, he is going to check inventory. As per management instruction, he is going to do three things, and I am referring to any of the work, that is called as using work of internal auditor. Next, if I am appointing internal auditor, that next 15-20 days, you will work as per my instructions. You will not take orders from the management. You will take instructions from me and you will work as what I say. Then that is called as taking direct assistance. Is this point clear? Which essay? 610. Referring work of internal auditor. There are two ways. One is using work of internal auditor, taking direct assistance. Even if you are using the work and even if you are taking assistance, you can use the work, you can delegate the work, but you cannot delegate responsibility. Ultimately, you are responsible. So they are saying apply 3 steps. So they are saying apply 3 steps while using the work of internal auditor. Apply 3 steps, taking direct assistance from internal auditor. Now, what are these 3 steps? Come to chart. Come to page number 25. These are 3 steps. If you want to use work of internal auditor or you want to take direct assistance, you should be extremely careful. There should not be blind faith. You should be extremely careful. You should follow how many steps? 3 steps. Now let's see. First, you should go and evaluate whether internal auditor and his team, his department is reliable. You should go and check whether internal audit team department is reliable, whether you should show faith on them, whether you should show faith on them. Internal audit function. Next, if you say that step number 1 is successful, you should show faith on internal audit team and department. Internal audit function means internal audit department, internal audit team. If you say that okay, they are well qualified, they have competence, they have capability, they have good way of working, their reputation, everything is good, you can rely on them. Next is which work should be used. You cannot use each and every work. You have to select which work can be used. We'll discuss work where less judgment is required. Where less judgment is required. That work we can use from internal auditor. And third, finally, how to use the work, using the work. 3 steps are there. Let's please, guys. 3 steps. Number 1, decide whether internal audit function is reliable. Next, which work to be used. Selecting the work. Okay, we'll use this work. And third, using actual work. On the same lines, in direct assistance also there are 3 steps. First, evaluating internal audit function again, whether internal audit team and department is reliable, should we take its assistance. Next, for which work we should take assistance. For which work we should take assistance. And third, how to take direct assistance. Now listen, guys, the good thing is, if you study 3 steps here, plus minus 10% things, there are other 3 steps of taking direct assistance. Let's read. Which standard, guys? 610. It is about internal auditor. Using the work and taking direct assistance. But we cannot do it blindly. We have to apply how many steps? 3. Overall, 3 steps are: number 1, whether the department is reliable. If department is reliable, selecting the work and then using or taking direct assistance. Now let's see what is the first question. First question is, in new course it is asked in November 18 mock test papers. November 18 mock test paper. What is the question? Both the question are similar. What they're saying, internal auditor internal auditor has conducted or attended physical verification of inventory. He has conducted or attended physical verification of inventory and physical verification of fixed assets. So internal auditor has already gone and attended this physical verification. Instead of sending our own team, we are thinking of using work of internal auditor. Question is, how an evaluation of this specific work should be done? So now you need to clearly understand which step to write. How an evaluation of this specific work done by internal audit can be done. So what is the question? It is not that should we rely on internal auditor? No. It is not on selecting work of internal auditor. It is directly third step. Whether how to use the work of internal auditor. How an evaluation of this work. That means they are saying internal auditor has already worked. And the question is, how will you use the work of internal auditor? Majority of students will go wrong here. They will not be able to identify which step has to be written. See, they are saying simply we have to think about it, how to use. So we have to write which step? Step number 3. Okay, listen. Come to the step number 3. See page number 26. Page number 26. We have middle column and the question is how to use work of internal auditor. Okay, listen. I have taken my own example to explain this. What they are saying. First is give a call to internal auditor, meet him, discuss with him and coordinate with him. So you go and talk to internal auditor and explain him, dear internal auditor, we came to know that you are doing checking of salary of the employees and we have decided that we are going to use your work of examination of salary. Go and inform him and discuss with him that what is your plan and then coordinate. Tell him, listen, you do all the checking till 31st of May. On 1st of June, I will use your report. I will read your report and then I will evaluate your files also. So be ready by 1st of June. 31st May, complete everything and 1st of June we meet. So they are saying, if you want to use work of internal auditor, first you should go and discuss and coordinate with him. Inform him you are going to use this work. Tell him by what time his work should be over so that you can use his work. So first thing is discuss and coordinate. Okay, done. Discuss and coordinate. Next, imagine 1st of June he comes. After discussion and coordination thing is done, 1st of June he comes. Read report of internal auditor. Read report of internal auditor and first try to understand nature, timing, extent of procedures he has performed. So he'll explain the report. Week number 1. We went and understood the system of computing salary and we made flowcharts. Okay. First week you went and understood how salaries processed and you made flowcharts. Week number 2, we performed test of controls. Okay. Week number 3, we did test of details. We identified misstatements and we made report. That's excellent. Read his report and try to understand nature of checking done. What you did in week 1, week 2, week 3. Timing. When did you do all these things? We did it after year end and we did it for 4 months. Okay. You have checked things of 4 months. Extent. We have checked around 300 salary slips. Great. Read his report, understand nature, timing, extent of audit process performed, and then find out what are the findings. So he will write. In case of few employees, new joinees, whole month salary is given in first month, but salary of 15-20 days was required. That is a mistake. In case of some employees, even after retirement salary is paid, even after termination salary is paid, there is a mistake. In case of some employees, bonus calculation is inappropriate. Overtime calculation is inappropriate. Go and read his report. After reading his report, perform audit procedure on body of the work. Body of the work means his files. Get his files. Okay. Now, read his files and understand clearly how the work was planned. Who planned it? Okay, Chief Internal Auditor was involved. Go and read the files, body of the work, and understand how the work was planned. Who planned it? Okay, Chief Auditor. Who supervised the work? Who reviewed the work? Who documented the work? And who prepared the report? Go and read files in detail. Understand simple thing. Who planned? After planning, who supervised? Who reviewed? Who documented? Who made the reports? Then go and see whether sufficient appropriate evidence was there to draw conclusions. Yes, it was there sufficient. And whether conclusions are appropriate. Oh, these are the findings and these are the conclusions. They match with each other. If I would have been there, I would have drawn same conclusion. Great, it is done. Then, what factors will affect nature, timing, extent of audit procedure? What factors will affect? How much in-depth checking will you do? Listen, it depends on area. Okay, it's very simple. I have written same as previous step quickly. Area related points. Listen, if any particular area needs lot of judgment in planning, execution and evaluation of evidence, for example, brand evaluation, you have to apply a lot of judgment. How will you check the brand? How will you check the brand? You need a lot of judgment. Once you collect evidence, you need to apply a lot of judgment whether this evidence is reliable. If you need a lot of judgment, that area is risky, that area is difficult. If there is lot of risk of material misstatement, so if area needs lot of judgment or there is lot of risk, you will have to increase audit procedures. Next, internal auditor related points. Sir, what is this? If his competence is low in particular area, we are supposed to perform more work. Mandatory reperformance. It is mandatory. Internal auditor has checked 300 salary slips. Internal auditor has checked 300 salary slips. You will have to recheck at least few. If you want to rely on work of internal auditor, you will have to check at least few salary slips. Say 5 to 10 need to be checked. It is mandatory. And then at last, after performing all these steps, evaluate your own conclusion. Listen, in step number 1, you decided whether to rely on internal auditor. Next, you selected the area. Finally, you are using the work. After doing step number 3, re-evaluate whether your decision to rely on internal auditor was appropriate, whether to select this particular work was appropriate. Are you happy with your decisions of step number 1 and 2? Let's read, guys. So the question is how to use. Question is how to use work of internal auditor. Point number 1, you should go and discuss, explain him what you are going to use and coordinate with him when he should complete his procedures, make report and when you can use it. Next point, read report, understand nature, timing, extent of procedure performed by internal auditor and what are the findings. Point number 3, evaluate, perform audit procedures on body of the work. Body of the work means fine. In that, explain, read and understand how planning was done, execution was done, supervision was done, review was done, and documentation was done. Understand those things. Correct? So understand how things were done. Then next, once you understand how those things were done, then they explain after performing these where sufficient appropriate evidence was collected and conclusion were appropriate. How much audit process will you perform depends on some factor. How much judgment and how risky is that area and what is the level of competence of the internal auditor in that area. And lastly, mandatory re-performance. And after that, evaluate whether your own judgment about step number 1 and 2 were appropriate. Quickly. First point, discuss and coordinate. Read report. Read file. Mandatory re-performance. Re-evaluate your own conclusion. So that was using work of internal auditor. Okay. Then there is a next question. 103.400. Now listen guys. Now these are the standards and questions. Even after reading them, unless and until you revise them multiple times, once you revise them multiple times, you will get the confidence, okay, I will be able to reproduce the points. Let's see this and let's take a break then. Okay, break is required after the heavy session. Now, nature of work to be assigned. Can we give all the work what we do to internal auditor? No. We can give only limited set of work to internal auditor. What is the question? Moon Limited, of which you are statutory auditor, having an internal audit being conducted by an outside agency. State the factors that weigh consideration opting to make use of direct assistance. That weigh consideration in opting to make use direct assistance of the internal auditor for the purpose of statutory audit. Now, listen guys. Nature of work that can be assigned. Nature of work that can be assigned. This is step number 2. Step number 2. How many steps are there? 3. So when in direct assistance, there are 3 steps. Number 1, can we rely on internal auditor? Which work can be assigned? Which work can be assigned to internal auditor? And then how to make internal auditor work? How to take his assistance? That is step number 3. Now the question is, when we are deciding where to take his direct assistance, what points need to be considered? Is step number 2. Come here. Step number 2. Okay. Listen. Wait. Okay. Listen. Now, in which area we should use the work and in which area we should take direct assistance? In which area we should use the work and in which area we should take direct assistance? Step number 2 is same, copy paste same for using the work, and for taking direct assistance. So let's see step number 2 of using the work because it is same for both. Page number 26. This is using the work. Okay, let's see. Listen. Which work should be used and in which area we can take direct assistance? Let's see. We said this is part A and this is point number 1 and only two things are given. Only two things are given. Be extra careful. Be extra careful. Don't use work of internal auditor. Don't take direct assistance in the areas where lot of judgment is required. Lot of judgment is required in planning, performing, evaluating audit evidence. Don't use work of internal auditor. Don't take direct assistance where lot of judgment is required. For example, intangible assets. Don't leave this area to internal auditor. You yourself go and work. In the area of intangible assets where lot of judgment is required for planning also, for examination also, for evaluating evidence also, to draw conclusions also, where lot of judgment is required, those areas should not be left for internal auditor. You should check on your own if lot of judgment is required. Next, areas where there is a high risk of material misstatement. All the areas which are marked as high risk of material misstatement or significant risk, those areas should never be delegated to internal auditor. So first is area related points where high level of judgment is required or where there is a high risk and significant risk, they should be never be delegated to internal auditor. Next, internal auditor related points. Listen. Okay. Now, when you evaluate internal auditor, you see three things. Number one, his competence and capability. His competence and capability. Is he having adequate knowledge, skills, team time, equipment? Next, you evaluate his objectivity. Is he unbiased? He should not be relative of the management. He should not be shareholder. He should not be relative. He should not be past employee, current or past employee, and so on. And third, what was his approach towards working? Is it systematic and disciplined? Is it systematic and disciplined? In step number 1, we see three things: his competence, capability, then his objectivity, and third, his approach. Is it systematic and disciplined? Same points should be repeated here. Never delegate work in the area where he has low level of competence. You know that he has low level of competence when it comes to financial instrument valuation. He is not capable of that. low level of competence, don't delegate that work to internal auditor. Area where there is less objectivity, he is a relative of purchase head. He will be biased there. Don't delegate the work where there is a low level of objectivity. Areas where his objectivity will be low. He will be biased. That you will be able to understand his organization status and what is the role of internal auditor. For example, if he is reporting to purchase head, he is working below purchase head, never give work of purchase to him because he is reporting to those heads. Never give that work to him. Then, as per what is policies and procedures, what kind of work is given by management to internal auditor? What kind of work is given by management to internal auditor? Suppose management's instructions are very weak. It's not a quality work. Again, we may not delegate that work to internal auditor. Quickly, understand guys, what we're discussing? Step number 2. What is step number 2? Which work should be used from internal auditor? Where we can take direct assistance. In short, where we can delegate work to internal auditor. First, which points? Area related points. Where a lot of judgment, don't delegate. Where a lot of risk, don't delegate. After area related point, next is internal auditor related point. If he is having low level of competence, don't delegate. If he is having low level of objectivity, don't delegate. Then third is work of internal auditor. Work of internal auditor. Listen. Sir, what is this work of internal auditor? You go and see what are management's instructions. What are management's instructions about the internal auditor? Management has given very low coverage in some areas. Management has only said that, okay, check only 10 vouchers. Check only 10 vouchers. If you feel management's instruction to internal auditor in that area are not good, are not adequate, understand nature and scope of the work given by management to internal auditor. If the nature of checking instructed by the management and coverage given by the management is very weak, is very low, again we should not delegate that area to internal auditor. What is the relevance of this work? Now, whatever work internal auditor has done, it is not relevant for me because he is not covering things which I want to check. He is checking small branches, which is not relevant for me. He is focusing more on new branches, which is not relevant for me. Okay. When delegating work, also understand what is the nature and scope of work given by management to internal auditor. What kind of work was given to him? Is it detailed? Is it covering a lot of things? And what is the relevance? If that is low, again, don't delegate that area to internal auditor. Now, point number B. Whatever work you have delegated to internal auditor, there should be always sufficient involvement of statutory auditor. There should be sufficient involvement. There should be sufficient involvement by statutory auditor. That means, listen, external should always ensure sufficient involved. It should never happen this way that 80% of work we have delegated to internal auditor. Whatever you decide, sufficient involvement, that means at least 60-75% work should be done by statutory auditor only. And last, whatever you decide, it should be communicated to TCWG. That listen, TCWG, we were appointed as auditor, but let me be clear, very clear to you. Out of lot of areas which we are going to cover, This 20% of work we have delegated to internal auditor. We are going to use his work, or we are going to take his direct assistance. Let's read, guys. Point A is how to select the area. In that there are 3 points. Number 1, that is area related. Is it full of judgment and risk? Next is internal audit related. Whether there is low competence, low objectivity, don't use that work. Third is work related. What kind of work is given by management to internal auditor? If the nature and scope is bad, if it is not relevant for us, we should not use his work. Point B, whatever we decide, there should be sufficient involvement, or always at least 60 to 70% work should be done by us. And point C, whatever you decide, it should be written and communicated to TCWG. Now understand, step number 2 for direct assistance, only these 2 points are required. Area related points and internal audit related points. Only area related points. Area should not involve judgment and it should not be risky. Internal audit point, he should not have low competence, he should not have low objectivity. Only those points are required here in step number 2 of what? Taking direct assistance. Then that is the next point where you should not use. Here you should never take direct assistance of internal auditor. Now we have said this much, quickly cover. Jar is dirty is the shortcut. J is for judgment. All significant judgments of audit should be done by auditor himself. It should never be delegated to internal auditor. All significant judgment like making audit strategy should never be delegated to internal auditor. Deciding risk of material misstatement should never be delegated to internal auditor. A for already work done. So what is this? Listen. Suppose internal auditor has already checked transportation charges. He has already checked transportation charges. You should not appoint him. You should not appoint him and check again transportation charges. Why? He will be checking his own work. He has already given report on transportation charges to management. You are again asking him to perform the same work. In direct assistance, never give him area which he has already checked, because he will be reviewing his own work. You are not going to get any separate report, different report. Then R stands for risk of material misstatement. Wherever there is high risk of material misstatement, lot of judgment, again never give that work. Then D stands for decisions. Decisions of external auditor with respect to internal auditor. It will be foolishness. We delegate it to internal auditor. You decide whether internal audit function is reliable. You decide which area of internal auditor should be selected. You decide how to take direct assistance. Work related to internal audit cannot be delegated to internal auditor himself. JAR is dirty. J stands for judgment. The work of deciding significant judgment should never be delegated. A stand for already done. If you already check some area, don't again give that area indirect assistance. Then R stand for risk of material misstatement is high. Don't give that area. Then D stand for decisions of external auditor with respect to internal auditor. Don't delegate that work. You will be giving his own work to them. That is not good. Now SA 620. SA 620 using work of expert. Again, there are 6 steps in this particular standard. Number 1, first is to decide whether we need expert. First, you decide whether we need expert. Okay, see these 6 steps. First step is, if you see page number 27, whether we need expert. That is step number 1. Then step number 2, selecting the expert. What are the factors we should see, we should evaluate if we have to select the expert. After selecting, then understanding the field of expert. See, we need to have some basic understanding. We cannot blindly rely on the expert. Step number 3 is there should be some understanding. Obtain understanding of the field of expert. Once you obtain understanding, then we have step number 4, make agreement with the expert. Make an agreement with the expert. What will be his responsibility? What will be your responsibilities? After that, step number 5, when he comes with his report and files, evaluate the work of expert. Use the work of expert. And finally, after that, whether to give reference of the work of report of expert in our audit report. So how many steps are there? 6. Number 1, whether we need expert. If we need expert, next, select the expert. Next, obtain some understanding of the field of the expert. Then make agreement with the expert. After making agreement, when he comes with the work, evaluate work of expert. And finally, reporting. What to do when we report? Should we give reference to his report? Now, we are going to take 2 questions from 620. Number 1, agreement. This has been asked in May 21. This was last asked in old course in November 16 exams, and it was there in May 21. Okay. Now, what is the question? What is the question? Question is not what should be the content of agreement. No. Question is not on what should be the content of agreement. Question is when we should have a detailed agreement with the expert. What are the circumstances in which you should have detailed, in-depth agreement with the expert? So, come to page number 28, second column. Nuclear deal is complex. We need a detailed agreement. Nuclear deal is complex. We need a detailed agreement. N stand for not previously used work of this expert. If you are working with the expert first time, you have never worked with this expert before, then you should have a detailed agreement. Because this is the first time you are working, you don't know his style of working, he doesn't know our style of working. Then next is these for different roles. This assignment is unique. The types of roles and responsibilities of the expert and types of roles and responsibility of us is totally different.
Sure, I understand.
Generally, for example, experts are appointed for oil well valuation. That what should be the value of this oil well. But now we are saying that you need to get me what is the depth of the oil field, what is the width, what is the quantity, how much cost of drilling oil will be there, cost of getting the oil. We want these details also. Generally, this work is not done. If it is a different roles and responsibilities than normal, you should have a detailed agreement. Then, extent of expert's work. How dependent are we on the work of expert? 80% of the balance sheet is oil well valuation. 80%. And our team has limited knowledge. We are highly dependent on the expert. If we are highly dependent on them, we have huge extent of dependence on them, we should have a detailed agreement. Then A stands for access. Is he given access to sensitive and confidential information? If he is given access to sensitive and confidential information, we should have a detailed agreement that how this information should be handled and what if there is a breach, how he will be penalized. Then whether there is multi-jurisdictional legal requirements. 3 different countries are involved in this particular oil well. It's a international waters. 3 different jurisdictions are involved. We need to fulfill all the jurisdiction requirements. We should have a detailed again agreement because multiple jurisdictions and laws are involved. Then C stand for complexity. If it is highly complex, again we should have a detailed agreement. So you are getting a question. In what circumstances a detailed agreement should be prepared with the expert? Nuclear deal. N stand for not previously done. You are working with the expert first time. Detailed agreement. D stand for different work. This work is altogether different from normally what is performed in the market. Have a detailed agreement. Then E stand for extent. The extent of reliance and extent of dependency is high. Have a detailed agreement. Then A stand for access. Confidential and sensitive information is given. How it should be handled. Detailed agreement. Then L stand for legal requirement. Multi-jurisdiction legal requirements are there. Go for detailed agreement. Then complexity. See, complexity. It is very complex. You should have a detailed agreement. Again, guys, take each and every question to the level that you are able to write good answers. Now, next thing is, okay, next question is also again with respect to agreement only. What? Okay. So the question is, auditor did not make an agreement with the expert. Please advise. Sir, you are supposed to explain agreement is necessary, shall be in writing, it is must, and what should be the content? What should be the content of the agreement? Page number 28. Look at this. So first thing is, it is mandatory as per SS 620, whenever auditor appoints an expert, he should have agreement in writing. He should have agreement in writing. That is one thing. Now, what should be the matters? So I have taken a very simple example. We are doing audit and 80% of 10,000 crore balance sheet, 80% of the asset is oil well valuation. What should be the terms and condition? Number one, what is the objective of the whole, what is the objective of experts' work? So we'll tell them clearly, your aim, what should be objective of the assignment? Objective of the assignment is, you are going to tell us width, depth, quality of the oil and valuation of the field. This is the ultimate objective that you are going to give this information. Okay. So first, common sense. What is the objective of the whole assignment? Then next, now go in detail. What is the nature of work to be performed? These are only example. Nature of work. Number one, we will give you data, drilling data of past 2 years. Analyze that. Then whenever drilling was done, what was obtained? Analyze that data. Okay. Next, we will give you satellite images. Analyze that. Next, pick up 10 samples and test the oil. Next, you yourself will perform 5,000 foot of drilling with your equipments. Okay. So listen, expert, this is the objective. To fulfill the objective, this is the nature of work that needs to be done. Then next, coverage. Only oil wells in Orissa. These two oil wells only. Scope, coverage. This will be the coverage. Fine. Next, what will be your roles and responsibilities? Bringing equipment, your roles and responsibility, equipment team and complying with the time limits. It will be your roles and responsibility. What will be our roles and responsibilities? Auditor roles responsibilities. I will help you to get drilling data of 2 years. I will help you to get satellite images. I will help you to get permission to pick up samples and to perform drilling. That will be my role and responsibilities. Okay, done. Communication. Communication. Identify people from both the side who will communicate with each other. From your side, this is the person. From our side, this is the person. If there is a significant risk, communication should be oral and written as well because the matter is involving significant risk. So I identify people and then reporting. When will reporting done? Every 15 days, status report, 3 months, midterm report, 6 months, final report. So there should be clear terms and condition. Who will communicate, when communication will be done, how many reports will be given, what will be the format of report. And finally, confidentiality. Maintaining confidentiality, what precautions should be taken that your team members should remain same, they should not change, and file should not go outside, it should be kept here only, the data should be kept here only on the servers, and what if there is a breach, how penalty will be given. Listen guys, 7 points. Number one, common sense. What is the objective of the assignment? What is the ultimate target of the assignment? What needs to be done? Nature of work. What will be your roles or responsibilities? What will be our roles and responsibilities? And then how communication and reporting will take place. Scope. One of those was scope. How communication will take place, and the last thing was confidentiality. So we studied 2 questions in this, 2 points in this. What should be content of the agreement is a different question, and when the agreement should be in detail, that is a different question. Okay, as again I am saying again, some points will be covered in FADU chart revision also, so we'll keep those steps there. Right now let's focus on the questions only. Okay, finally we are through with the no. Okay, there are some other concepts. I will simply give. Okay. Now listen, what is this other concepts? Listen. So what we did, every chapter is divided into parts. So there are some parts, there are some things which are connected to SA 300, some connected to SA 540, then 600, 610, 620. Whatever left concepts, they are dumped into other concepts. Okay. Now here in important list, I am seeing questions. Guys, these questions are all open-ended. First of all, 149.030, that is included by accident because that was asked in May 21 exams. So you can simply cut it. Okay. I am not going to go in detail. I am simply going to give you line of thinking, how you are supposed to write it. These are truly very open-ended questions. Now audit program for multiplex, especially sale of tickets. Sale of tickets. So you are going to talk about internal control systems for sale of ticket. For example, ticket should be printed. It should be pre-numbered. It should be in printed form. It should be pre-numbered. For each show, different color tickets can be used. See, don't think about current ticketing system. Think about old ticketing system. That is how answer is drafted. That it should be printed ticket, it should be pre-numbered, every show should have different colors, and there should be person checking the tickets and whenever ticket is used, you should mark it or tear it to ensure that the ticket is not used again. End of the show. End of the show, a reconciliation should be prepared. That this was reconciliation should be prepared. So many tickets sold. So many tickets remaining in the ticket booklet. Ticket booklet, so many tickets remaining. The total should match. And a bundle should be prepared for each show. That okay, this was the collection. These are the remaining tickets. This is the reconciliation. And so show wise details should be maintained. And then finally you can check the ticket sale through GST also. GST reverse calculation. If this is a GST, what should be the collection? So broadly these points should be written there. So they have explained in fact general points, incomes and then expense also. Here relevant is only the income. As per the question you need to, sometimes they may ask revenue and expenditure. Sometimes they may ask only about the income, sale of tickets. Now this is inter IPC thing. Made into mock. Okay. Suddenly you see that percentage of wastage is increasing. Percentage of wastage is increasing. What you should check? What you should check? Just imagine a production process. First we get raw material. Whether there is a change in quality of raw material. That may be the reason of wastage. Then whether there is a change in production methodology. That will be the reason. Whether machines are properly maintained. That can be the reason. Whether employees are properly trained. That can be the reason. Whether the method of analyzing whether a product is defective or not, that method has changed. That can be the reason. Whether rules and regulation for change in method, that can be the reason. Analyze what are the reasons for increase in the wastage. Or it may happen that good products are shown as wastage and sold in the market. Good products are shown as wastage and sold in the market. That can be one of the reason. So simply think about the production process and we'll get the points. And then again we have, it's a very general thing now, online business. If you want to go and do audit of online business, to be very honest, in the whole answer, they are not discussing much of online business. They are discussing audit strategy and plan in general. They are discussing audit strategy and plan in general. They are not going in depth. They're talking less about the online thing and more about traditional strategy and planning only. So this is in study material. That's why it is there. All the points. So in short, you can write in general about the audit strategy. You can write in general about the audit plan. That keep these factors in mind when you are making program for online business. They are not at all focusing on the online things. Now these are weird question and weird answers given by the institute. Don't take a lot of tension about these questions. These are truly very open-ended. Truly very open-ended. There's no specific and perfect answers for them. In fact, answer drafted are of not good quality. So let's not focus much on them. Guys, let's put full stop to chapter number 2. So chapter number 1 was lot of standards, 200 series to 500 series. Chapter number 2 had lot of zahir in it because all the standards which are covered in chapter number 2 are little tricky. All tricky standards are there in chapter number 2. Now, let's see chapter number 3 and then we'll go to corporate governance. Okay, the first question is, 36.500 quickly. So everyone is aware about equation of audit risk. Come to this particular table. Page number 29. Page number 29, first column. Page number 29, first column. Quickly. You go to any audit. Initially, assume that there is no internal control system. Then only you will be able to understand real nature of business, real nature of people, and real nature of financial items, and where things will go wrong. Assume there are no internal control system and think about it, in which areas material misstatement can happen. All those areas should be marked as inherent risk. So suppose there are 400 items. Out of 400, you will find there are 100 items where there is inherent risk. Once you find out inherent risk, call management and ask them to sit and ask them what are the internal controls to compensate these inherent risks. They will give you overview of internal controls in these 100 areas. If you think prima facie these controls are good, prima facie, then they are called as relevant controls, and their note is done that these were the inherent risks. Out of 100, we got 40 controls which are good and which we think are capable of compensating inherent risk. So in 40 areas, we got good controls, prima facie, which we are going to test. We are applying which essay right now? 315. 315. So we will get those relevant controls in 315 and we'll test them in essay 330. We will get the list in 315 and we are going to test them in essay 330. Okay. Now, if prima facie controls are good, that is called as low control risk. What is control risk? Chances that, see, risk means chances that bad things happen. So what is control risk? Chances that controls will not be able to prevent or detect and correct. Either they won't be able to prevent or they won't be able to detect and correct material misstatements. Okay. So first we got inherent risk in 40 areas, 100 areas, and out of that 40 controls were good. So remaining 60 are dangerous areas. Remaining 60 are dangerous areas because controls are not able to compensate the risk, and now material misstatement will reach financial statement. And in that 60 areas, we say that there is a high risk of material misstatement. Quickly, first we identify which risk? Inherent risk. Then we get which risk? Control risk. Then we combine both. When we combine both, we get what? Risk of material misstatement. In 40 areas, controls are really good. Low risk of material misstatement. In 60 areas, they are dangerous. High risk of material misstatement. So when we combine inherent risk and control risk, we get risk of material misstatement. Now these three risks, inherent risk, control risk and RMM, it is in hand of management. Inherent risk depends on management, what business, what kind of people, what kind of location, what nature of items. Control risk depends on management. RMM depends on management. Auditor cannot increase or decrease it. He can only identify and assess. One risk which is in hands of auditor, that is detection risk. What is detection risk? Chances that his audit procedures are not able to identify material misstatement which are present in financial statements. That is called detection risk. Detection risk depends on two risks. That is sampling risk and non-sampling risk. Auditor's conclusion go wrong because of the sampling process, that is sampling risk. His conclusion goes wrong not because of sampling, but the nature of audit procedure he applied were inappropriate, or the way they were applied, they were carelessness, or the way evidence was analyzed, that was inappropriate. Things went wrong because of wrong audit procedure or wrong implementation or wrong evaluation. That is called as non-sampling risk. Okay, so RMM, we identify and assess. What is in our hand? Detection risk. We will always adjust detection risk inversely. We will always adjust inversely. Where RMM is high, will work so hard, the detection is low. And where RMM is low, we can afford to relax. When we will keep intentionally, we will keep detection risk high. Why, sir? Then only we can become efficient and effective. You cannot give equal importance to each and every area of audit. You have to change your strategy. Correct? Then only you will become efficient and effective. Now, how bad are financial statements? That is risk of material misstatement. And how we have worked on it, that is detection risk. We'll combine this, we'll get audit risk. Chances that final opinion goes wrong, that is audit risk. People were expecting we should modify the opinion, we should point out the misstatement, but we failed to do it. We failed to do it. Chances that our opinion goes wrong, that is called audit risk. So that's why we get the equation. You should always talk about it. Audit is equal to how bad are the financial statement, that is risk of material misstatement, and how hard work we have done, that is detection risk. And now RMM is nothing but inherent risk into control risk. Listen, audit risk is decided at which stage? Strategy. When we make audit strategy, we decide what should be the level of audit risk. 1%, 3%, 5%, 10%, depending on how sensitive client is. Then we get inherent risk and control risk through our audit procedures. And automatically we'll get detection risk as balancing figure. Suppose detection risk comes out to 5%. Now listen carefully. If auditor keeps detection risk 5% or below that, automatically audit risk will be within acceptable limits. If auditor keeps detection risk 5% or below, automatically audit risk will remain within acceptable limits. So in short, by controlling detection risk, we can control audit risk. By controlling detection risk, we can control audit risk. So this is the question you may get. They have given data simply. Looking at nature of business, 40% of the bills, there is a, we are supposed to compute overall audit risk. 40% of bill of services would be defalcated. There is 40% of the bills, there is 40% is inherent risk. Can prevent 75%. Can prevent 75%. Controls are, so what is control risk? 25. Yeah, be careful here. Controls will be functioning is 75. Chances control will be fail is 25. Be careful with that. Chances that bills will be having material misstatement, bills will be having problem is 40%. Chances that control fail is 25%. Auditor gives him satisfaction level of detection. He is getting, he could apply in remaining time to complete audit, gives him satisfaction level of detection of fraud and error to the extent of 60%. He is getting satisfaction of 60%. He is getting satisfaction of 60%. That means detection risk is 40%. Again, students may go wrong here. If he is satisfied by 60%, that means there is a risk of 40%. And you multiply inherent risk, control risk, detection risk, you will get audit risk. And they are getting it as 4%. Okay. Now listen. Guys, 315 is divided in two parts. 315 is divided in two parts. First part explains different types of risk and how to find out these risks. How to find out these risks. So they will explain. To find out this risk, we need information. We need to find out what are the complicated areas, which areas need a lot of judgment, in which areas there is a lot of pressure. You need a lot of information. 315 has two parts. In part number 1, they will explain how to collect information and what information should be collected. And then they will explain after collecting information how to identify and assess risk. How to identify and assess risk. Listen, see question number 40.100. Listen. Now, question is, how will you assess risk of material misstatement and response to such risk? So question is, how will you assess? And after assessing, what will be the response? So you need to explain risk is assessed at two levels. Come to charts. Page number 29, third column. At last, you will see this. You need to explain that once you collect loads of information, next step is identifying and assessing risk of material misstatement. Risk is assessed at two levels. We discussed this in morning. Risk is assessed at two levels. First level is financial statement level. When the circumstances are such that things can go wrong at any place. Things can go wrong at any place in financial statement. We don't know exactly where, but it can go wrong anywhere. That is called financial statement level risk. Integrity of management is not correct. Accounts head is not appropriate in knowledge. Software has gone wrong. Changing from AS to Indias. Anywhere things can go wrong. That is which risk? Financial statement level risk. Next is assertion level risk. We know exactly in this financial item, this particular point will go wrong. That is what? Assertion level risk. Now listen, there are 4 steps. Number 1. Whenever you get information about entity and its environment, think what can go wrong. That is called identify what can go wrong. Identify risk throughout the process of RAP. RAP stands for risk assessment process. Listen guys, 2 different steps are there. Collecting information, obtaining understanding is risk assessment procedure. And after that, thinking what can go wrong is identifying and assessing risk. For example, we came to know that industry there is a recession. That is risk assessment procedure. Because of this, data's will default. Data's value may be incorrect. That is identifying, assessing risk. Inventory may become obsolete. That is identifying and assessing risk. Listen, in SA 315 and many other places, risk assessment is collecting information and thinking what can go wrong is identifying, assessing risk. In some places, risk assessment procedure include both the steps. Collecting information as well as thinking what can go wrong. Depending on context, you understand this easily. If they are talking about 2 things side by side, that means they are considering risk assessment as collecting information and identifying, assessing risk is different steps. If they are talking only about risk assessment procedure somewhere, just like plan for risk assessment procedure, that means it includes both. collecting information also, and identifying, assessing risk also. So it's very important to interpret words and terms in context, in which context we are talking. Let's freeze. Identifying, assessing risk. How many levels? Financial statement and assertion. 4 points. Number 1. During risk assessment procedure, whenever you collect information understanding, think about it, what can go wrong. That is called identifying risk. Then point number 2, think about which assertions will get affected. If a particular assertion is getting affected, declare it. Which risk? Assertion level risk. If you find that many assertions will get affected, many financial statements get affected, it is pervasive, it is affecting many things, lot of things may go wrong, then that is a financial statement level risk. And finally, point number 4, what is the probability of things going wrong? That is called likelihood. What is the probability of things going wrong? That is likelihood. And what is the magnitude? If probability is 60, 70%, 80%, 90%, and magnitude is big, it will become high risk of material mistake. Many audit officers have that thing that you compute the probability, you get the amount. If it is exceeding maturity level, call it as a high risk of material misstatement. Let's freeze, guys. How many points are there? 4. First, think about identifying risk. Is affecting particular assertion level risk. Is affecting many, financial statement risk. And after that, think about likelihood and magnitude as well. Likelihood also and magnitude also. Now, that is what they're explaining. 4 steps. Risk at 2 levels. 4 steps should be there. Now, SA 330 talks about response. 330 talks about response. What should be response for financial statement level risk? What should be response for assertion level risk? Okay. Now, what should be response for financial statement level risk? If there is a financial statement level risk, that means things can go wrong anywhere. We don't know exactly where. What should be the response? Overall response. What do you know overall response? Increase size of the team. Maybe more number of people in the team. Increase seniors percentage. Earlier we thought 50% seniors. Now let's go to 75% seniors. Ask the team to be alert all the time. Professional skepticism. Ask team to go for surprise checking. Ask team to include experts also. That is financial statement level. That is response to financial statement. That is which response? Overall response. In short, making your team strong. Making your team strong. That is the overall response. Okay. Now, so if you see the parallel example, 15th of August and 26th of Jan, they are very crucial days for India. Our enemies would like to target those 2 days so that they can show that India is weak and they are strong. So whole of the country is on high alert. 15-20 days before that date, it's high alert, and on that date, anywhere things can go wrong. So that is the example of financial statement level risk. Everyone is kept on high alert, the whole team. Then we know that when ice melts, there will be infiltration in Jammu and Kashmir. So we know exactly where things will go wrong. That is a assertion level risk. No need to be alert anywhere else. Simply your troops at the border at Jammu and Kashmir, they need to be in high level of alertness. There we should deploy more people. That is a assertion level risk. If there is a assertion level risk, we should need to perform further audit procedures. And in that we have number 1, test of controls. and after that we have substantive procedures. So if there is a financial statement level risk, there is a overall response. If there is a assertion level risk, we'll go and do further audit procedures. Okay. Now, one more thing quickly. When very simple question, what do you mean by assertion? That question is always there. What do you mean by assertion? Representation made by management. If you come to page number 30, listen, a very simple meaning is all the information given by the management, all the information given by the management in financial statement, directly or indirectly, everything is a assertion. Information given, that means representation. All the information given by the management directly, indirectly, explicitly or implicitly. When you say land and building is so much, that is explicit. If you have not given any information about the charge, that means there are no charge, that is implicit. When you say something is like this, that is positive. When you say that there is no contingent liability, it is negative. This is general meaning. This is general meaning of assumption. What is specific meaning? Financial statement have three type of data: T, B, D. Transaction, balances, disclosure. Transaction means income, expense, cash inflow, cash outflow. Balances mean assets, liability. Disclosure means notes to accounts. Presentation and disclosure, where how things are written in notes to accounts. Quickly, we have assertions about transaction balances and disclosure. First example of balance is given. So in balance sheet we have land and building of 100 crores. Directly, indirectly we are saying it is real. This real land and building. That means it exists. Existence is the assertion. We are saying nothing is left out. No flat, no plot. Completeness is the assertion. We are saying amount is correct. Valuation is the assertion. These three are common. One special, it is written in our balance sheet. That means we are the owner. Rights and obligation. For assets, it is rights. For liability, it is obligation. So one special. Now, transaction of 1000 crore. What are the assertion directly, indirectly? It is written. That means it has happened. It is real. For real, it was existence there. Here it is occurrence. No sale is left out. Again, completeness. Amount is appropriate. That is accuracy. For assets and liability, we use word valuation. Here we use word accuracy. Then there are two special. There we had rights and obligation. Here we have two special things. Number one, classification. Items are properly classified into capital versus revenue. In revenue also they are properly classified into businesses and then account headings. That is classification. Cutoff means these year transaction have not gone to next year and next year transaction have not come to current year. And on the same lines, we have assertions for notes to accounts. For example, if lease rent payable in next 5 years is 20 crores. Is 20 crores. If that is 20 crores in next 5 years, you are saying that this information is real and it belongs to entity. First assertion is a combined one, combined assertion. Occurrence, rights and obligation. Occurrence means it is real. It denotes reality. Rights and obligation means it is connected to company. Next is common again, completeness. Next is again common, completeness. Next is valuation and accuracy. And why notes accounts are there? For proper understanding. So one more assertion that they are properly classified and gives proper understanding. Listen. So we have combined assertion for notes to accounts, that is disclosure. Why this concept of why this thing is done? This make audit process very efficient, effective, and specific. When we don't know things, we make team strong. And when we know exactly where things will go wrong, we don't go and we go and check specific things. I will go and if there's a problem with existence, I will go and test controls for existence and I will perform substantive process for existence. The whole concept makes our audit process specific, to the point, and efficient and effective. Okay. Now, listen, come to question 40.100, which we left. This is the chart is there also. Now, second part I would like to focus on. That through we have divided 315 in two parts. We have divided 315 in two parts. First part is about risk, how to collect information for the risk and how to identify and assess risk. Second part is all about internal controls. What do you mean by internal controls? Okay. In general, internal controls means policies, steps, and procedures which are designed by TCWG and management to ensure business is happening smoothly, properly, correct? That is internal controls. But then we have a specific definition in SA 315. SA 315 says for statutory auditor, for financial statement auditor, let us define internal controls. They say all the policies, procedures, steps designed by TCWG and employee to achieve four things with reasonable assurance, with four things, those policies and procedures will be called as internal controls. Four things. Number one, most important is law. Whatever policies and procedures you have designed to ensure there is a compliance of law, to ensure there is a compliance of law. For example, you have set a legal department, the legal head, adequate number of people, you have softwares, registers, weekly, monthly, quarterly steps need to be done. They will be internal controls for the auditor. Next, after law, next important thing is assets. All the steps you have designed to safeguard the assets. For any entity, asset is the most important thing. You have kept it in lock and key. Permission is required to access it. There is proper records for the assets. A regular reconciliation is done. Those are internal controls for us. Third, all the steps you have designed to keep operations efficient and effective. You have designed reorder level. You have designed reorder level to ensure inventories within, it should not be more, it should not be less, it should be proper. That is a internal control for us. Next, last thing, all the steps and procedures to ensure proper financial reporting happens. That means proper primary books, secondary books, trial balance, financial statements are prepared. They are also internal controls for us. Let's freeze, guys. System designed to achieve four objectives will be considered as internal control by the auditor. First, law, compliance of law. Next, important assets, safeguarding assets. By using asset, your operation should be efficient and effective. And last thing, financial reporting related. All these are called what? Controls for us. This is definition of control. If anyone asks you objectives of control, these are the objectives. If anyone asks you purpose of control, this is the definition. Same thing is there. Now, all the big companies are excessively dependent on controls. Everything will crumble if controls fail. See, it's very easy to manage a small shop of 200 square feet and the owner is sitting. He keeps eye on every small thing which is happening. But as business grows, as you have multiple locations, when you have multiple locations and as business grows, if you want business to function properly, you need internal controls. Internal controls are extremely important because good controls, that means good transactions and that means good accounting. It's extremely important to have good controls. Now, how to understand whether the controls are good or not? So they explain you should go and see components of control. If components are good, controls are good. How many components are there? 5. Number 1, most important component is control environment. Most important is control environment. What do you mean by control environment? What is attitude of TCWG and management? What is their attitude? What is their ability? What is their ability? What is the level of awareness and action towards internal control system? Attitude means are they serious about it? Ability means are they having enough infrastructure? Are they aware about where there is problem? And actions, do they give incentives to people following controls? Do they punish people who are not following controls? That's called control environment. How sincere, capable management is towards internal control system, that's called as internal control environment. Very important. If they are very serious, every small thing will be followed. If they are not serious, a lot of things will not be followed. So same goes with the study environment. What you need first here is a study environment. Okay. If this is happening that still you are watching a lot of web series, spending 2-3 hours in the night, sacrificing the sleep and watching web series, correct? Then there's a problem with study environment. First, you need to work on that. How to improve the study environment, correct? So the most important element is control environment. But then that alone is not sufficient. Entity should know, entity should know entities risk assessment. They should have their own risk assessment process. They should know in which department what things can go wrong. And once they know their own risk, next step, they should design control activities. What are the examples? Segregation of duty is a control activity. Keeping things, physical controls, lock and key, that is a control activity. You will need permission to access assets and records or to remove them or to move them, that is a control activity. You will keep record of every movement, record keeping, that is a control activity. You will do physical verification regularly and reconcile things, that is a control activity. Once you know what is risk, you are supposed to design control activities. Then next element, we live in a dynamic world. Things change every day. Systems change, law change, products change, specification change. You need to continuously see whether your systems are capable in the present scenario. In present scenario, are they effective? So that is called monitoring of controls. That is called as monitoring of controls. And finally, your system should be able to capture and process good information, information system and information technology. 5 components are important. First one is control environment. What is the attitude towards control? If it is good, next is risk assessment, entity's own risk assessment process. Once they find out risk, control activities. Even after controls are framed, there should be monitoring. And lastly, to understand what is happening, you need good information system and information technology. Now, only those questions are there. Guys, as I said, first get grip of 250 plus questions. Then if time permit, go for 350. Then you go for tricky concepts of FADU, which will be covered in the FADU revision video. If you do it properly, you have full command over it, you understand it and you retain it, that is good enough. Then you can go for MTPs and RTPs. If you want to study more, that's good. If someone is having time, if you want to study more, keep increasing number of questions from each chapter. That is how the step-by-step approach should be. Now, and number of times you cover that particular thing will be, as I said earlier, you need to take each question to a particular level. Then only go to next question. If you are not taking questions to particular level, it won't make any use in exam. Okay, because simply overviews, you are going to write overview. If you are doing overviews, you are going to write overviews and they don't like overviews. And many a times, even after you write 1.5 page, okay, you may get 0 at some time. If you write, okay, connected things, you may get 1 mark. If you are tension free and smart, it is not very difficult to score. Out of 30, how much you should score in MCQ? Huh? How much you think you can score realistically? 22? 22 is possible? Okay. And then remaining 70. Suppose you know 30 marks question well. I'm not talking about 70. How much? 30. You know exactly, yes, this is what I studied and this is what has come. 30 marks. So in 30 marks, you will score, say, 70%. 25%, which you know well. 70%. Not possible, sir, 70%. If I am saying which you know well, not all. So that is 30 marks into 70%, that is 21. It is very important to know some questions very well. And then remaining 40 marks, Jai Mata Di. Let's rock. Jai Mata Di, let's rock. Okay. Then you write whatever you know about that. Whatever you know about that, and you try to fill up 2 pages for each answer somehow. And then you pray that you get 1 mark for each question. That is 20-25%. So out of 40, then you get 20%, that is 8 marks. Or 25, that is 10 marks. If it is 8 marks, now let's make it total. 22 plus 21, 43 plus 8, 50. But point is, there should be some very good questions. The whole calculation goes on to that there should be some very good questions you should know, be aware about. And that is, so 30 marks, that means if we take 5 mark as the base, 6 questions. I'm not sub questions, I'm saying. There should be 6 sub questions you should be well aware of. You know exactly what these 6 sub questions are. An institute will always repeat questions. Always. And we are increasing the probability. We are focusing on important things. There's high probability that important questions will come from there. High probability. But there should be some questions that you are getting good marks. You don't need to have score full marks in the whole paper. That's not possible. Let's accept that. But there should be some question you score very good marks. Okay. So if you do the combination of that, you may get those golden 5 to 6 questions. Everything will depend on those 5 to 6 questions. And definitely then I will say that there is some luck factor. It may happen that bang on target, I know 8 questions very well. Correct. Exemption. Okay. Come to 26 point. Essay 265, 26.000. Let's see. 265. First, come to page number 32. Come to page number 32. Let's understand. 265 is all about communication of internal control deficiencies. Okay. First of all, what is the definition? When you see that internal controls are not able to prevent, they are not able to prevent or detect or correct material misstatements, that is called as internal control systems. When you find any instances where they are not able to prevent, detect or correct misstatements, that is called as internal control deficiency. Now, you are supposed, as per essay, you are supposed to follow again 4 steps. Step number 1. During the course of audit, you understand internal controls, you test controls, identify whether you have come across any situation where controls are not able to prevent, detect and correct. Then any situation, find out, is it a deficiency? Is it a deficiency? For example, no authorization is required for purchase. It is a deficiency. When goods come, no GRN is made. That is a deficiency. No quality check is done. That is a deficiency. So during course of audit, think about it. Are you coming across any situation which is a deficiency? Then next, think about it. Whether this deficiency is a significant deficiency. Sir, what do you mean by significant deficiency? If because of that deficiency, if because of that deficiency, material misstatement can occur, there is a high probability and high magnitude of misstatement can happen. For example, companies buying 800 crores of coal in a year and 5 crores of wood in a year, and if there is a deficiency in purchase of coal, there is very high magnitude involved, and coal is a very risky asset. Weight can be manipulated anytime. Simply put, water. Weight is manipulated. And quality of coal is again next thing. It is very difficult to find out what is the quality of the coal. Manipulation can be done easily. If because of deficiency there is a high probability and very big amount of misstatement can happen, that deficiency is declared as significant deficiency. Step number 3. Communicating to TCWG. Only significant deficiencies should be communicated to TCWG, that too in writing. Step number 4. Communication to management. All significant deficiencies should be communicated in writing, but if auditor feel communication is inappropriate, maybe because management itself is involved, they may not communicate these deficiencies to management. Other deficiencies, management should be informed about other deficiencies also. It can be oral, it can be written. Small deficiencies, for example, people are not putting exit time properly. So overtime calculation may change little bit. But overtime for the year is not huge. So it is not a significant deficiency, it is a other deficiency. It may be communicated orally or written, but here, if someone else has communicated, already internal auditor has communicated, no need to communicate it again. Quickly guys, which essay we are studying? 265. First is definition of internal control deficiency. Then there are 4 steps. Whether there is any instance of deficiency. Step number 2, is it a significant deficiency? Step number 3, communication to TCWG. Only significant in writing. Communication to management. significant deficiency always in writing unless it is inappropriate, they are themselves involved. Other deficiency should be communicated unless someone else has communicated. So in both there are exceptions when we are not going to communicate to management. Now this was the content, this was the question. What should be the content of the letter? We have to draft a letter that is called as management letter, or that is called as letter of weakness. So understand, management letter and written representation, these are two different things. When they confirm certain matters or support some evidences, that is called as written representation. And when auditor makes a letter about weaknesses in the system to management, it is called management letter. Sometimes students confuse between both. First thing, always, if you are communicating deficiencies to TCWG or management, when you are making this letter, if you are making this letter, it should be in writing. Of course, letter should be in writing. Describe the deficiency. There is no authorization, there are no records, there are no reconciliation, there is no physical verification. Whatever deficiency, describe it. Explain potential effect. What is the magnitude of misstatement can happen? Explain potential effect. Give sufficient information. Give information of that area. What is the purchase of coal? How many time it is purchased? Who are involved? Give sufficient information. So first, common sense. Describe the deficiency. Give the potential effect. Give all the supporting information. Then comes the most important part. Once you explain this, then you start writing disclaimer thing. Listen, dear management, we were appointed to perform audit of financial statement. Our objective was to still give opinion whether it's as per framework and whether it is true and fair view. And we do it as per standards on auditing. And we are supposed to understand and evaluate controls. During that process, we came across deficiency and we are communicating it to them. It doesn't mean we have tested all controls. No. It doesn't mean these are the only deficiencies. No. We have not tested all controls. These are not the only deficiencies. There can be more deficiencies. And it doesn't mean we are certifying your controls. Don't go with this letter to everyone and say that there are only one deficiency, there are only two deficiencies. No, no, no. Don't misinterpret our communication. Don't misinterpret our communication. It is good for both. It is good for this communication is good for management for rectifying internal controls, for revising, making controls better. It is good for auditor to minimize his liability. Tomorrow if someone comes and does complaint, we will be safe. So this is what you are supposed to explain that letter. You are supposed to explain what are the key contents, how we disclaim things, and how this disclaim things means we are not taking responsibility. And thirdly, how it is good for them and how it is good for us. We already informed about deficiency. Tomorrow if fraud happens, we will say that we took proper steps. Now, next question is, it is in November 22 mock. How to decide whether a deficiency is a significant deficiency? How to decide whether deficiency is a significant deficiency? Okay. Page number 32. Page number 32. How to decide whether deficiency is a significant deficiency? Listen. First, if because of deficiency there's a high probability that big magnitude misstatements can happen, then that deficiency is a significant deficiency. These factors should be evaluated, which will help you tell whether a deficiency is a significant deficiency. Shortcut is very amazing floss. Floss means style. If this is amazing style, there can be significant deficiency. V stand for volume. Compare two things. Just like I said, we purchase coal of 800 crores and we purchase wood of 5 crores. Volume of activity. Coal is purchased every week. Wood is purchased once in a quarter. If deficiencies with respect to area where there is a high number of transactions, then that can become significant deficiency. A stand for amount. Very high amount of income, expense, asset, liabilities involved. Chances that will become significant deficiency. Frequency of exceptions. In past, lot of problems have been detected in coal, and deficiency is in that area itself where a lot of problems were already detected. Frequency of exceptions, mistakes, problem is very high. It is, and then chances that it will become significant deficiency. Likelihood, probability that things can go wrong is very high. Again, it may become significant deficiency. Other deficiencies, already in purchase there were 3 controls. Already 2 controls have failed, and this is the third control which is failing. In combination, it has become now dangerous. There are no controls to protect purchase now. So because of the interaction and combination, it has become very dangerous. Susceptibility means chances. Coal is such an item that the basic nature makes it very risky. Basic nature of the asset is very risky. Chances that it will become significant. S stand for subjectivity is involved. Art valuation. Subjectivity is involved. Brand value, goodwill write-off, subjectivity is involved. Let's freeze, guys. High volume, big amount, frequency of exception, likelihood is high, other deficiencies are also there, susceptibility of the item, subjectivity. All these things, factors can make deficiency as significant deficiency. In fact, there are few more. Also depends on importance of control, forum, public forum. P stand for these deficiencies related to period end financial reporting. Lot of crucial entries are passed at period end, and deficiency is with that period end adjustments. It will be significant deficiency. It is related to frauds. There is no proper fraud prevention or detection, significant deficiency. It is with respect to outside normal course of business. There are no proper system for outside normal course of business, significant deficiency. It is related to related party, significant deficiency. It is related to accounting policy selection and implementation, significant. It is with respect to no proper monitoring of controls. Let's freeze, guys. There are a lot of points I understand. If controls are weak in very significant areas like period end reporting, like fraud prevention, outside normal course, related party, accounting policy, monitoring, these will become significant deficiency. Guys, other concepts I will say, don't simply, you can have overview, because all the questions, they are not essay based. We'll put a full stop to chapter number 3 here. Okay. So finally we are through with, see, standards of auditing are going to come for 45 marks out of 120. Out of 120, you will have standards on auditing of 45 marks, other chapters for 45 marks, and 30 marks will be P, company audit, CARO, correct? It will be based on that. Everything taken together. Roughly, this is the allocation. 45 marks standards, 45 marks other chapters, and 30 marks company audit, CARO, professional ethics, and related things. Okay. Let's take a small break. Small, half an hour break. Lunch break, yes. Small lunch break. Finally, when we come back, now we start with corporate governance and tax audit. Let's focus on these two things, correct? Let's target it to finish it off. And then what we'll do, we'll take two, three questions from each chapter, ultimately. 2, 3 questions from bank, from insurance, from NBFC, from liability, from peer review, quality review, from IMO, and we will, so that we have feel of all the chapters. That, see, many a times students are not able to study only because they fear something a lot. But once they go through things, okay, this is the overview, this is the thing. So these sessions are planned in such a manner that it should boost, it should push your studies. So all the chapters you feel, okay, I know something or the other, and now I can build on it. I know 3 questions, I can add 2 more, and so on.